for that day. First of all, we were reminded that Biashara Afrika is a crucial platform for Africa's trade transformation. That was given by Honorable Prudence Sebahizi, the Minister of Trade and Industry, the Republic of Rwanda. He said the private sector holds the key to unlocking the full potential of intra-Africa trade, driving industrialization and creating jobs for our youth. That was a reminder by the Honorable Minister for Trade, Industry of the Republic of Rwanda, a host country. Then His Excellency the Secretary General also reminded us that the AfCFTA offers Africa a path out of poverty through trade, with the private sector and youth at the forefront of driving economic growth and innovation. Private sector and youth at the forefront by leveraging our digital economy, and we're going to hear a lot about that. Digital economy, we can position Africa for global competitiveness, creating opportunities for women, small and medium enterprises, and farmers across the continent. Together, we must dare to invent the future and build a very prosperous Africa that we're all seeking to achieve, latest by 2063. We got another good reminder from the Deputy Chairperson of the AUC, Dr. Monique. She said the idea of an integrated, prosperous Africa, the AfCFTA is here to remind all of us that we are making a progress. And then the big one. The big one came from our great leader, the President of the Republic of Rwanda, His Excellency Paul Kagame. Small and medium enterprises shouldn't remain small and medium. They need to grow. And we're going to find out how they can do that. The Secretary General hinted us yesterday, by leveraging our digital economy, we can position Africa for global competitiveness. We'll hear a lot about that in the sessions that we are about to witness in this auditorium as we gather in the next about 3 to 4 or maximum 5 minutes. Our moderator should be taking his seat and taking us through the session. This morning, we have 2 sessions running from 8:30 to 10 in the morning. The first parallel session is happening here in this auditorium, well, simultaneously though, enabling seamless and inclusive cross-border digital payments in Africa. That's happening here. And if you're interested in accelerating agri-trade and development of regional value chains in unlocking trade opportunities under the AfCFTA, that should be in room MH1. Room MH1. That's happening concurrently. So if you're interested in that, you may want to also visit that side along the line. So the first session will be moderated by Arnold Kwizera. He's a journalist. He'll be joining us pretty shortly once we hand over in the next 2 minutes. And then the other session that's happening the other side is going to be moderated by Mr. Komla Bisi, Senior Advisor, Agriculture Value Chains, AfCFTA Secretariat. That's also happening at the other end. So we take a little break, just about a minute, and welcome our session for today. Thank you. Your Excellencies, distinguished ladies and gentlemen, first session is tutorial enabling seamless and inclusive broad cross-border digital payment in Africa, moderated by Arno Kwizera, journalist. Let's put our hands together and welcome him up to Speakers include Mr. Mike Balus, the Chief Executive of Pan-African Payment and Settlement Systems, PAPS. I understand that he's going to join us online. Miss Nshuti Mpapazi, Managing Director, Better Than Cash Alliance. Let's put our hands together for her. Miss Mapula Odibe, CEO, MTN Rwanda. Let's put our hands together for her as well. My brother, Dr. Tokmo Chidede, Digital Trade Expert, AfCFTA Secretariat. Let's put our hands together for him. We heard a lot about the challenges in ensuring digital payment across the continent. Distinguished ladies and gentlemen, I hand you over to our moderator for this morning. Thank you.
Thank you very much. Today. Good morning, ladies and gentlemen.
Bonjour, mesdames et messieurs.
Good morning, ladies and gentlemen. So I'm going to ask the people at the back, just if there's an empty seat in front of you, could you take your seat in front? Starting with the people at the back. If there is an empty seat in front of you, please take the seat in front of you. Thank you very much. Good morning, ladies and gentlemen. Good morning. Guys, we need a more active room, eh? My name is Arnold Kwizera, and welcome to day 2 of Biashara Afrika. Now, we're beginning this morning with a rather exciting panel, and allow me to dive into a little bit of context. But before that, let me reintroduce our panel of experts that have joined us this morning. To my immediate left, Ms. Nshuti Mpapazi. She's the Managing Director, Better Than Cash Alliance. To her left, Mrs. Mapula Odibe. She's the MTN CEO, Rwanda. And to her left, Dr. Tokmo Chidede. He's the Senior Digital Trade Expert of AfCFTA Secretariat. Now, just a quick reminder that at one point, you will have the opportunity to ask questions, so please note down any facts that they will be making or things you would rather feel like are not as factual, but I believe our panel of experts here will be breaking down that. And we're also joined with the CEO of PAPS, Mr. Mike Ogbalu, online, who will also be giving us a few talking points that are integral to us realizing this dream of free movement of goods and services across our continent. Now, I want to give you a little bit of context. Now, seamless, efficient, and inclusive cross-border payments are highly instrumental in boosting intra-Africa digital trade, as they will promote financial inclusion, reduce cross-border trade costs, and connect the continent's diverse economies. However, there remain complex challenges to cross-border digital payments in Africa due to several factors, including but not limited to disparities in regulatory frameworks, standards and infrastructures, and security concerns. Now, these challenges hinder the adoption of digital payments and participation, largely for SMEs, startups, and these constitute the majority of business across our continent. So recently, we conducted border visits across the continent. And one of these border visits happened last Saturday. I see a few members here who were part of these border visits. And we saw a few challenges. And Ms. Nshuti, I want you to set the pace for us in regards to these challenges. And Ms. Modibe, I want you to feel free to dive in quickly there. We saw a few challenges regarding cross-border payments. Now, there's an interesting number, and that number is 74%. The 74% comes from intra-border transactions across Africa are largely done by women. Men, 4 times in value, but the transactions, 74% of our transactions cross-border communities are done by women. And we talked to some of these women. When we talked to some of these women, we saw a few challenges. One that came very dear to me was people needed 2 SIM cards to transact with each other across the continent. You needed to have a SIM card. So what the Gatuna border post, you needed to have a SIM card of Uganda, MTN Uganda, and you needed to have a SIM card of MTN Rwanda to be able to transact if you were not to use cash. That is a big challenge. Better than Cash Alliance, you are trying to see the opportunity in this, but also to make this efficient for movement of money across the continent. First, why is this a big challenge, and how best can it be tackled?
When we talk about responsible payments, we have the UN principles. Better Than Cash Alliance is hosted by the UN Development Program, the Sustainable Finance Hub. And we have the principles for responsible digital payments. And that means that they are trusted, they serve everyone, and they work everywhere. At the border, the opportunity is really in the hands of the regulator to ensure that that transaction, a merchant payment transaction, both the merchants are reverting to paying with cash because of the cost of sending. It being a remittance transaction, the cost of sending and the cost of FX is making it really expensive. And so their margins are very small. On average, they are transacting about, since it's the currency that seems to dominate our trade, about $8. So $8, if you have to go across the border, spend that, come back, turn it around, and if you've borrowed that, typically at 30 to 60%, which is what the informal lenders offer, it's going to be difficult for you to justify that digital payment. And so when regulators decisively make sure that merchant payments, the Momo code, works that I will pay from my Momo wallet in Rwanda, which majority of the traders have, and it will go to the wallet of the trader where I'm buying my pineapples. That seemed to be a popular product that day. And Uganda does have really the most delicious pineapples. To pay that has got to be digital. But something needs to happen, and good news is MTN is here. They can tell us what it will take to get it done. And I have a feeling it has to do with regulation. So the Protocol on Digital Trade aims to harmonize these regulations for those merchant payments to work. There's a big focus on remittances, and it's diluted the urgency for merchant payments, which is what is done every day, and trade is done every day, and we need them to work. So regulation is a big part, but also that shift from the merchant codes, from cash to merchant codes being the way of paying would be the responsible way for us to make these payments work. But they need to have the funds to get this done. They need to have the connectivity to get it done. The quality of service from the provider has to be perfect. How do we make these payments interoperable such that payment providers compete on only quality of service and cost of service? I think that's the job of regulators, and it would be great to learn from MTN what it will take to get there.
Ms. Papula, Nshuti is throwing it to you straight away. As you answer what your challenge is there, could you also give us the opportunity for a telco like yourselves?
All right. No, thank you so much for the question, and good morning, everyone. Yeah, I think, what you've posed as a question is definitely, I think it presents a case for the why we need this cross-border digital payments to really be addressed. I think from an MTN perspective, I think firstly, maybe to give a bit of context, we're currently operating in 18 countries, and 13 of which have a mobile money service. And the example you gave spoke about two particular markets being Rwanda and Uganda. And if I unpack the problem statement that you raised, one, there are two countries involved. Two, there are two operators involved. I think the good thing in the example you gave is that we've basically got a common operator at a global level, as much as it's two countries, so that's already part of the issue addressed. Thirdly, you've got the technology. And again, because we have a very uniform platform from an MTN perspective, that's already addressed. Now, to her point, what then remains in terms of addressing? So technology, not a barrier, is something that can easily be able to facilitate that seamless cross-border transaction. Two, the operators themselves, it's a very seamless engagement between ourselves and Uganda that can enable that. Now, where regulation comes in is that when you operate with two countries like that, there are often very different regulations. And policy, regulation, and harmonization are one of the key factors that can help us to achieve that. We've seen other examples where that's happened. We have something in the region, for example, which is enabling for roaming, cross-border roaming. I think it was introduced about 2015. Now, borrowing from the same logic around these regional operators, one, at a national government level, because obviously policy regulation operates under the premise of a national regulation. So that would take the national agenda between the countries aligning to say there's an ambition to drive cross-border digital payments, which will, ultimately benefit the region. That would then inform both countries' policies, which would then enable that cross-border facilitation. So I think maybe to just round it off, I think the structures are in place, but the catalyst to unlocking that particular opportunity is indeed regulation. I think maybe to build on that, we sit in a fortunate position as MTN in that whilst the example you gave addresses two countries, we can actually scale that across 13 other countries. There's also a cross-sector opportunity. Another example that I can refer to is that we've recently signed an agreement with MasterCard Foundation, which enables us to, not only through mobile money, but through a virtual MasterCard card, be able to transact across these 13 countries. What that does is that it facilitates a further opportunity for us to be able to drive that cross-border trade. So I think, the frameworks are in place from a regulation, or rather from a technology perspective, and I think what is exciting for us as MTN, because I think we've actually got the foundation that enables us to do that. From a platform perspective, it's uniform across these countries. From a technology perspective, it's uniform, and it's more just about aligning the regulatory frameworks. Another factor that I'll talk about is obviously the infrastructure. I think she spoke about infrastructure. The great thing is that we've also invested in the infrastructure. So that's not a barrier. What we are missing is the usage. Within our own operation, we still have only about 45% of the populations that are connected to mobile money. So we have 290 million subscribers, but only 60 million are connected. So the opportunity is quite immense. Again, with the technology being there, the infrastructure being there, we just need to be able to unlock that regulatory environment to be able to realize the opportunity. I think a further opportunity that I see is in terms of, at a global level, one of the catalysts to being able to facilitate that is devices. Devices, as much as people sitting around the room might take it for granted, in a lot of markets, it's still a barrier to access. Even in Rwanda, we still have customers who don't have access to devices. So again, it presents another opportunities to say, how can we facilitate, from a customs perspective? We still have countries where there's huge sort of levies on customs related to devices. And it's not uniform across the countries. So in one country, you might not have the levies, in another you have. That's basically a detractor or a barrier for access. So these components all have to come together to be able to really unlock the opportunity. But it all starts with aligning, particularly at a regional level, and then obviously at a broader African continental level. Thank you.
Thank you, Ms. Modibe. I want to bring PAPSS talk more. There's a lot of conversation on regulations, so I'll be coming to you a little bit later. I want to bring the CEO of PAPSS into the conversation because Ms. Modibe talked about MasterCard, and I don't know what he thinks about this MasterCard situation. CEO of PAPSS, Mr. Mike Ogbalu, I'm not sure if you can hear us, but I wanted to throw the question to you in regards to the importance of PAPSS and easing of cross-border payments. What role does an organization like PAPSS play? But most importantly, since its adoption in 2019, how can it be actualized?
Well, thank you, and thanks for this opportunity to discuss cross-border payments.
Can we get some sound? We can't hear you. Not sure if you've unmuted your mic.
I can hear you perfectly, and I'm fully unmuted from this side. Can you hear me? Hello?
Okay, as we wait for technology, which we want to be seamless to get working.
It's part of the opportunity.
MTN, another opportunity, I hope.
It's not MTN.
It's not MTN providing the internet, I've been told. But
no, it's not providing this connectivity.
Dr. Tokmo.
Can you hear me now?
Yes, we can hear you loud and clear.
Oh, fantastic. So thank you for this opportunity to sit with these distinguished people, my friend Nshuti and Tokmo and so on. And I apologize for not making it there in person. The issue of PAPSS and its adoption, yes, it's been agreed since 2019, and a lot has happened. A lot of key milestones have been achieved. The technology is in place. We currently have about 15 central banks that are members of PAPSS. We have about 133 commercial banks who have also signed up on PAPSS. We have 12 switches across Africa. As we speak today, we are beginning to see transactions flow across from one country to the other, and these transactions are growing. I would also put up my hand to say that we have not achieved the level of success that we had aimed to achieve. However, we are very happy with the growth and the progress that we are making. Speaking about some of the conversations that have happened today, PAPSS presents a good opportunity to bring about this interoperability. And I know that in a number of markets, a number of the mobile money operators have sought and have received approvals and principles from their regulators in each market to be able to participate in cross-border trade, and a number of them are participating. Now, where we are is that we still have a lot of advocacy to do to be able to bring on board a lot more central banks, okay, and for them to be able to participate on this network. We have built a world-class system, and again, sometimes we talk about achieving interoperability through external parties. That takes us back to where we are coming from, okay? The challenge with trade and the future of, there's a race for Africa now. There's a run at Africa. Everybody trying to get a slice and a piece of Africa. Once we go back into a place where we do not have sovereignty over end-to-end payments in Africa, then we have a real big problem on our hands, because the next line of colonization is not going to come with chains and ships. It's going to come digitally. So what we've done is we've built the rails, and we believe that those rails work very, very well today. We are already beginning to see gains in a number of countries. We are beginning to see a number of small businesses depend on it. We're also now seeing people extend the functionality of PAPSS beyond their 9-to-5 branches into their digital channels. So a lot of banks are now opening up PAPSS. We're working with tech providers. What PAPSS brings to bear is not for PAPS to build out all of the payments on the continent, but to actually bring about that technology that allows them to leverage each other. So today you have pockets of brilliance across the continent. You have pockets of brilliance even in all types of payments, from last mile mobile applications to card schemes, but they are built out in silos. When we are in silos, it becomes impossible for us to actually drive trade across the continent. So where we are is that we would need more people to begin to join. In our ecosystem, we have central banks, we have commercial banks, we have payment service providers. We need more of these people, and that's where network effect kicks in. When you now have all of these people operating on a system built by Africans, owned by Africans, controlled by Africans, that's the only way we can get the value out of the AfCFTA. So, yeah, those will be my initial comments. Thank you.
Thank you very much, Mike. We'll be coming back to you a little bit later. Talk more. Mike talks about advocacy. Nshuti talked about agency, regulation. Ms. Modibe talked about the same, regulation. Is there a silver bullet?
Thank you very much, Anot, and good morning, everyone. First, I just wanted to acknowledge what my fellow panelists mentioned, especially in terms of the challenges that we are facing across the continent when it comes to payments. Before I come to what we have done in terms of regulations to try to solve these problems, before we started negotiating the Protocol on Digital Trade, which covers extensively the pain points or the issues that the fellow panelists have highlighted, we conducted a study to see what is it that is hindering the small and medium enterprises, the women and youth, the border communities to participate in trade. And one of the main challenges was the issue of making payments, especially at cross-border. And what Ms. Mapula mentioned, that most of the telcos or regulations, they've made it easier when it comes to digital payments internally, even from an interoperability perspective. And the technology has provided those solutions. But the moment you start talking about cross-border, you face regulations. That is why you find that businesses have to go and establish themselves in multiple markets, because they are complying with different regulations. Now that we are creating a single continental market, we have to come up with regulations that are harmonized across the continent. And this is the solution that the Protocol on Digital Trade has managed to bring, to make sure that from a cross-border digital payment perspective, we harmonize regulations. The standards are common across the board, such that if you are a company or a fintech or a telco that is operating in one market, the regulations are the same across the continent. So we have, in the Protocol on Digital Trade, established harmonized regulations, not only the harmonization, but also trying to make sure that there is transparency, there's seamless and inclusivity when it comes to digital payments. So I'll highlight a few of the things that we have covered. So we have addressed issues of interoperability, because if you look at the market being fragmented, at a regional level, we do have regional payment and settlement systems. We do have digital payments. At a national level, we do have mobile money. When it comes to cross-border, you realize that you will not be able to pay from one mobile money in country A to another mobile money, even if it's the same telco. And it's not the problem, as Ms. Mapula said, it's not the problem of technology. Technology has already come up with the solutions, but the regulations do not allow for that interoperability. And what the Protocol on Digital Trade has come up with is in terms of enabling interoperability, regulatory interoperability, systems interoperability, to make sure that there is that seamless payment, and we allow the small and medium enterprises, those who are unbanked or those who are using mobile money to make sure that they make the payments across the border. As Nshuti and Arnold mentioned, when we did the border visits, it's a painful thing to witness, whereby the small traders who are trading at a low value transactions, they find it difficult to make payments, even if they can see the border across their houses, but they are not able to make those payments. What they are now forced to do is to resort to cash. So they stack their money in cash, even if they have an option of having the money in their mobile money. They have to have SIM cards in both ends. And when you try to ask them, why is it that you are preferring cash? Of course, the regulations come into play, but they also mention the issue of costs. It's so expensive, even if you try to make payments. I think perhaps that's one of the solutions that they're trying to come up with, that we have to go through a third party to make a payment to the next country's digital payments. And all these things are increasing the cost of doing business. So for a small and medium enterprise, which constitutes over 90% of the businesses across the continent, the moment the cost becomes exorbitant, then you are kicking them out of the market. The other issue, in addition to interoperability and harmonization of regulations, was the issue of security. We are talking about digital trade. Even some of us here in the room, we can resonate with this. I do not trust putting my banking details online. Cybersecurity issues are very important. And this is one of the things that has been emphasized and outlined clearly in the Protocol on Digital Trade on the issue of making sure that there is cybersecurity measures that are robust. As we continue doing digital trade, as we continue doing online transactions, even the cyber crimes and cyber threats are also increasing and coming up with other tactics that we are not aware of. So there is that obligation for both governments, for both digital payment service providers, to make sure that they put robust measures when it comes to digital payments or cybersecurity. The other issue on the cost. So what has happened in terms of the costs from the digital trade protocol perspective is the issue of transparency when it comes to costs, fees and charges. When you are doing transactions, you have to be clear and aware from the beginning how much money in total you are expected to pay. Why? Because there are hidden costs when it comes to payment that sometimes you do not see. You only see the price of the product that you want to buy, but the other hidden costs. But the moment you press pay, you realize that there's now 10-20% more of the actual price. So this is something that has been emphasized in terms of being transparent and clear in terms of fees and charges. Consumer protection is also very important. The protocol has emphasized or put regulations to make sure that there's harmonization across the board, across the continent, in every country, on consumer protection, to protect the consumers who are buying online. The digital service providers have that obligation the same way with the governments in making sure that there is the protection of the consumers, and consumer protection also the movement of data. That is another thing that is also hindering the cross-border digital payments, where countries are emphasizing on the restriction of movement of data across the borders. The protocol has covered all of that to make sure that it prohibits data localization, to allow data to move freely across the continent. MTN does not have to establish its data centers in every country that it operates, because it is complying with the data localization requirements. So the protocol has managed to remove the data localization requirements to allow the free flow of data, and which is also critical to the payment component. The other aspect that the protocol has also addressed is the issue of digital identities, which is very important for KYC, to make sure that every individual and business has a digital identity and they can be identified when they are online for safety and security purposes. I could go on, but for the sake of time, I'll just highlight these few issues that we have tried to address, such that we have seamless payments across the continent. Harmonization of regulations, emphasizing on security to ensure that there's interoperability between different digital payments and settlement systems, and we make sure that we are all inclusive. We are not only focusing on a few digital payments and settlement systems, because there's preference and different reasons why individuals or businesses prefer to use certain type of digital payments. And what we have done in the market is to make sure that every digital payment and settlement system operates, and there is interoperability between all these digital payment systems. Thank you.
Thank you, Tokmo. I think we'll come back to you later for actualization of this. I want to bring Mike back into the conversation, the CEO PAPS, because there's some notable things that Tokmo has mentioned, and I know Nshuti is also very passionate about this. The third-party issue, right? Why do I need to make a transaction and it first goes to a bank in the States and then it's settled there and then it is settled here as well? That is the opportunity for PAPS, right? But then adoption of PAPS seems to be taking longer than it should. I'm speaking as a layman here. This sounds like a no-brainer to me. So what is the challenge?
So again, just before I answer that, just to speak to the fact that the AfCFTA is the silver bullet. I think that all of our aspirations, all of our hopes and dreams can actually be fully encapsulated within the AfCFTA. And I would like to congratulate the SG on the work that he's doing so far. The challenge that we have, and you need to understand how the PAPS ecosystem is designed, and therefore be able to see how it helps to solve a lot of the challenges that have been highlighted today on the panel. We are participating in the setting up of the Continental Regulatory Framework, and I really must thank Nshuti for the work that she is doing. But what we have today, which actually is able to take us forward, is that as part of joining PAPS, each central bank accedes to a set of bylaws which have been put in place to drive PAPS. And the central banks themselves actually sit on the governing council to provide regulatory oversight. So to a large extent, there is a framework today that can support cross-border payments while we continue to work on protocols, annexes, regulatory frameworks, and so on. So basically, you talk about what do we need today? Why has it not taken off? The issue is it took quite a bit of time to convince a lot of central banks who maybe have invested in some regional system or the other that PAPS is not there to replace the work that they have done over the years. PAPS is saying, if you are comfortable with a regional system, please use the regional system. Let PAPS connect into that regional payment system. So one issue for us has always been that issue of whether PAPS is trying to cannibalize other payment systems. And we want to use this platform to also say that that is not the objective of PAPS. PAPS aims to bring about interoperability between all of these regional systems. And we're already working towards that with the Commercial Clearing House, with Buna in North Africa, and we continue to encourage other payment systems. We're also working with TCIB and SADC RTGS in the SADC region. Of course, there are different stages of progress. So one area is getting the central banks to, first of all, fully on board. The second thing is going into each of these countries. You still find some archaic policies that have been on ground for many, many years, which says in some markets that all trade must be denominated in a certain third-party global currency. And we are saying that the reason why these countries had put this in place have been overtaken. Africa now needs to be able to pay in its local currencies for trade within Africa. So we are working with central banks also, even in those countries who have now joined, to actually look at some of those areas, those things that unbundle, those things that need to be unbundled to make sure that adoption takes place. Then you have the issues around, so PAPS, for example, is looking at how to lower costs. So we have taken a decision that we want to be the lowest cost provider in every market that we operate. And this is why when we launched PAPS, we launched it at a price point that is significantly is about, in some cases, as low as 10% of the dominant player in the market. So the biggest challenge that we have today is still with advocacy, getting the central banks to align with the political endorsements that have already happened, as you have said, since 2019. So this has been our biggest challenge. But we've seen a lot of progress along those lines, and we are looking to announce the next set of central banks in the coming weeks that are joining the PAPS network. It's like a telephone network, and I'm sure my sister from MTN understands this, that the more, when you talk about showcasing the value of PAPS, it can only happen as more people join the network. So if today you have just 2 people who have phones on a telephone network, their success is limited to calls between those 2 people. But when you have more people who have joined the network, then the network effect kicks in. So we are really using this opportunity to encourage a number of other central banks also to join PAPS so that we can actually begin to see those benefits. We are seeing the benefits at a smaller scale between countries today, but the more countries join, the more it lowers the cost, overall cost for everybody, and also it brings about that network effect, that efficiency of payments from Cairo to Cape Town and from Dar es Salaam to Banjul, the Gambia. So I'll stop here now. Thank you.
Thank you, Mike. Very, very passionate plea there from Mike. I really, really wish we had a banker on this panel. I see the CEO of EcoBank, Randa, is here. EcoBank does an amazing job in settling payments across some of these markets without needing to use that third intermediary currency.
That's how I pay.
Shruti, bring you back into the conversation. The issue of cash, Tokmo talked about it. Cash is expensive.
It is.
But cash is what most of our cross-border payment merchants prefer to use because of the cost of technology. It's not efficient for them. Now, if we are to look at ever having a dream of getting rid of cash in border transactions, how can we make it convenient and affordable to people like the border communities that need it the most?
I think we just need to get started, right? So the technology is here, and MTN is here, EcoBank is here. When I go to many countries in Africa, my EcoBank application works everywhere. I can pay for my taxi in Guinea. I can pay for food in Kenya. In 33 countries, I have no problem. So we do have cross-border payments. Clearly, regulation in that ecosystem has worked. The question is, can we test out the merchant payment? Because when I pay, I'm paying through remittances. Businesses want to be paid digitally so that they can be able to create data points of collateral to get access to finance. The digital payments is only a means to access meaningful financial services to grow your business, to grow your family. And so we just need to get started. What I would love to see is, can I pay with my bank application or mobile wallet to that merchant regardless? And that's that interoperable payments component. We can get it done. I would love to, to say in the Northern Corridor, can we have a pilot, I believe we can, where we get my Momo code working with the EcoBank application or BPR application, or name the bank, name the telco. Can we get an interoperable merchant code to work? I know that is a journey, especially from a regulatory perspective, but can we get the MTN merchant code to work when that border trader in Gatuna goes to the trader in Katuna, that they see across the border? Can they pay with that code? Can they pay with their EcoBank application? Let's make that work. And then we work on ensuring that I don't have to have all these wallets. And we really have to think about the cost to a micro enterprise of having tills of every provider so they can serve every customer. It is not fair. So they have to be able to have an interoperable payment so they don't spread their already small capital so thin to serve everyone. So we have to put the merchant at the center of our design of payments by providing those interoperable merchant codes that anyone can be able to pay to, and then they can choose who will serve them best based on how their business is going to truly benefit from it. So my humble request, and the two MDs are here, maybe Karen, you should come and sit. Sorry to put EcoBank on the spot, but the EcoBank has rapid transfer. I'm hoping it can become rapid payment that accepts everyone. And MTN, equally, with whether it is all the telcos, all the banks, that merchants don't have to suffer. I know it is possible because I've been part of building solutions that are interoperable for merchants to use. And can we get it done? Can we set a timeline that we will make this merchant code work by December? We will test it out. PAPSS will be there to do the settlement such that that transaction happens from Rwanda franc to Uganda shillings. It's already happening. We just need to make it happen on a merchant proposition such that really the merchants can begin to build transactional collateral in where, especially since we know women and youth are highly disadvantaged without a house, without a plot of land, without assets that allow them to get credit. Digital payments can provide them with immediate collateral that I'm sure banks would be able to say, we will give credit based on your 3 months, 6 months transactions. Instead of bring 2 years or 3 years of financial statements, we can begin to really iterate. And the AfCFTA really is the silver bullet. Our Pan-African forefathers fought for independence from a political perspective from colonial systems. Our generation has an opportunity to bring about lasting economic freedom. And I really believe it begins with digital and financial inclusion, because money makes things, everyone is making financial decisions every day. They're making payments every day. Can they have the choice to do it with the platform they want? And to serve their customers better in a way that everybody grows. I know we can do it. Let's get a pilot going. I would love to see the financial institutions here making that happen before January. Thank you.
And Shuti has given us a timeline before January.
Technology is not the problem, right? So we get regulators to do something when we test things out.
Push the boundaries, push the boundaries.
Yes.
Madibe, I want to bring you back into the conversation as well. And I want to take a few steps back. COVID-19 happened, and adoption of tills and Momo Pay shot through the roof so quickly. 400% is the number Shuti has shared. But it looks like we have slowed down and kind of got comfortable and plateaued when it comes to doing it across borders. Do we need another unfortunate incident for us to get this working? How can we ensure that, what is the timeline to ensure that there's adoption of this across the borders?
Yeah, no, thank you for the question. I mean, I think the first thing is that certainly COVID managed to propel that mass adoption of merchant payments. I think specifically for Rwanda, maybe just to give you a perspective, our growth has been more than 600% within that period, within the country. But as you were speaking, I was just reflecting on some of the realities we have at a group level, MTN group level. So I can say that we have about 1.2 million merchants across MTN group countries. That's the first statistic. However, speaking to the point of the interoperability, up to now, none of those countries are able to be operating in an interoperability way. The only thing we have international remittance. Now, what international remittance allows us to do, it allows us to do the P2P type transactions. So today we have 40 countries. As much as we are only operating in 18 countries, there are 40 countries where any customer is able to receive money on a mobile money wallet. So we've managed to scale beyond our operations, which is, I think, the first thing. Now, coming to the merchant side. So we've managed to get the P2P right. Merchants remains a problem, and I think there's a number of factors. The first thing is that within the countries themselves, I think merchants is a business that a lot of reserve banks are still trying to understand. I think within Rwanda specifically, we're still getting a lot of questions from the Reserve Bank in terms of understanding the different, categories of merchants, how they operate. They want visibility. And I think part of why I think, there's still a challenge in terms of, scaling the borders is that within the localities, they're still grappling with how is this thing working within the local geography. So getting the numbers right in terms of how many, merchants we have, what are the different categories, what are their, bands of transactions. There's also the problem of we still have a lot of merchants who are not within the code. You spoke about a code, but we still have most of our payments happening outside of the code because a lot of merchants still have this fear, you spoke about it, of somebody having visibility of their transactions. What does it mean? Is it going to attract more taxes? So we still have those fundamental issues. So as much as we've done very well in Rwanda in terms of the merchants, at a global MTN level, we've done well. We've got 1.2 million, but there's still a huge, huge segment. We think it's more than 50% who is operating payments-wise at a P2P, which is not visible. So what is the value proposition to get merchants to buy into being able to use the code without the fear of some kind of additional cost to them? So one of the things we are doing is try to make it, just sell the value proposition to them to make sure that they understand the benefit, which is through incentives, commissions, etc. Now, coming to why, obviously, the interoperability cross-border hasn't happened, I think once the reserve banks within the various geographies actually have a proper understanding, because there is a fear of not having visibility of the movement. I mean, a lot of the countries we operate in, more than 90% of the transactions that happen in the country are through the mobile money wallet. So to quickly sort of open that up to a cross-border opportunity, I think as a reserve bank, I would want to have visibility so I can completely understand where they are coming from. Now, having said that, there is a lot of value. Again, I don't want to bring back regulation, but within the cross-border opportunity, different regulators can come across and actually open up that opportunity to be able to have visibility of each other's, merchants' ecosystems. But I think we are at the basic level because the banks themselves don't have visibility. I'm talking such reserve banks don't have the visibility. From an opportunity perspective, I think it's quite significant. MTN, as I've mentioned before, if we were enabled with the right policy, we could very seamlessly open up that cross-border merchant payments. You said January, but to do that, we would need harmonized sort of policies to enable those merchants to be able to trade. There's also the points he made around, security. What happens, we've seen, what happens when, that cross-border transaction crosses. Do I still have access to it? Do I still have visibility? Do I have a statement that tells me that it's been delivered on the other side? I think it's really a challenge because when you speak about the formal banking system, when you're talking about EcoBank, I was thinking, beyond EcoBank, most of us are able to transact globally with our credit cards. But the fundamental tool, of trade in Africa is mobile money. And how do we facilitate enabling that same seamless movement, but with the right, frameworks? One, having security. Two, being able to have, that visibility for the regulators to be able to regulate. And then thirdly, being able to have basically just, certainty of the different users across the different countries that the transaction is actually secure and successful.
Thank you, Modibe. Mike, I think you wish you were in Kigali because I feel like there's a lot of advocacy here for PAPS. I just want to piggyback off what Modibe just said regarding the regulation. And us, by us I mean young people who are not so many in this room. I mean, regulation, at times we feel things are overregulated for things like MTN cross-border payments to be happening. So do you feel the same, and when do we decide to just do beyond the overregulation?
So I think that regulators have a job to do, and that they do. But I think sometimes that there's a tendency to overregulate. However, you have to understand the two different mindsets. The mindset of the regulator is, I maintain the box. I have everybody thinking within a box, while the entrepreneur or the private sector is rewarded for thinking out of the box. So these frictions will continually be there, okay? But I think that we have an opportunity for us, and I did say before, I let some cats out of the bag, and that is that a number of mobile money operators have sought for and they have received approvals from their regulators to actually connect into PAPS. And I think that once they are able to connect based on the bylaws, which has been established between PAPS and the regulators, then we can actually begin to show some use cases. And regulators are typically convinced when you go back to them and you say to them, okay, this is how the transactions have happened over a period, and this is what we have put in place to make sure that one, they have visibility, two, that the transactions are in line with best practices, okay, and three, that it creates actual value on the ground without overly changing the risk equation. So I think that there's that opportunity, and what PAPS has done is to make sure that everything that it does aligns with global standards. We will do it as Africans, but we make sure that nobody from anywhere around the world can impugn what we have done. So today we have certified our systems against the ISO 27001, ISO 27701, and then 22301, which are standards around information security, data privacy, and business continuity. And we continue to expose our systems to third-party reviews from around the globe. So once you're able to actually put these things and you're able to bring data to the regulator, you find that their attitude towards whatever you want to do is a lot different from when you are coming and everybody is hypothesizing around the risk that an initiative poses. So I would really, we're speaking to MTN, by the way. but I would really like to see, we have EcoNet, EcoBank on our network and a few other regional and Pan-African banks. Let's bring MTN, let's bring Airtel, let's bring M-Pesa onto that same footing, and let us be able to go back to our regulators and say to them, this is the use case, this is how it has worked, and then let's see what happens. Thank you.
Thank you, Mike. I'm going to open up to a few questions from the audience, one or two, so get that question ready. But before we come to the audience for questions, Tokmo, bringing you back into this conversation, we've talked about the benefits. The protocols have been written. The theory part of it seems to have been done by you and the team. How soon can we get practical, and what do we need to be practical?
Thank you very much, Arnold. Indeed, we have done the regulatory party, the policy framework party, and what we need to move towards is the implementation. This is where we see all these benefits that are being highlighted by the private sector. I think the first step that needs to be done, of course, is to finalize the negotiations, the pending negotiations, which we are hoping that by the end of this month, we'll finalize, then we submit for the adoption by the Assembly. After the adoption, what needs to be done is the domestication of those regulations at a national level. The way these policy frameworks that are cross-border or international works is, they are binding, of course, but there are certain steps that need to be taken to domesticate these regulations at a national level, which is something that the Secretary General highlighted yesterday, that the trading, that you have some countries who have domesticated the tariff schedules at a national level. The same applies to the regulations that I mentioned in the Protocol on Digital Trade or many other protocols of the AfCFTA. They need to be domesticated as soon as possible, such that the private sector starts to trade, the private sector starts to take advantage of the benefits that the AfCFTA is offering. The other thing that also needs to be taken seriously is taking the conversation, or taking this AfCFTA to the people. Taking the work that we are doing, this amazing work that we are doing, such that a lay person gets to understand. What we often see is the conversation of the AfCFTA hasn't really gotten to the people. And it's not only the role of the Secretariat alone, but it's a collaboration that we need with multiple partners, that we take the AfCFTA, we sensitize the AfCFTA, we advocate for the AfCFTA, and tell the people that are the rightful beneficiaries of the AfCFTA to get to understand what the AfCFTA is about. Of course, the AfCFTA Secretariat is taking different initiatives, for example, the Guided Trade Initiative, to make sure that we test, whilst you're waiting for the finalization of other parts of the agreement, of the regulations, we already start doing the work. That is why we have all these operational instruments that we have developed within the AfCFTA to make sure that whilst we are finalizing the negotiations, we also start the work of the implementation and to test what we have negotiated to see whether it works or it doesn't. So those are the two fundamentals that I think needs to be done, the domestication and the advocacy, to make sure that we take the conversation to the traders who are the rightful beneficiaries of this. They get to know that there is an AfCFTA. They get to know that these are the benefits and these are the rights that we have under the AfCFTA to trade across the borders. Thank you.
Thank you, Tokmo. Do we have any questions from the audience? Okay, I see two questions here. We'll take those two questions. Three questions. So we'll take the question from the gentleman, then the lady, then the last gentleman to the left.
Thank you very much. Is there a truth to the lingering thought that in spite of the bold initiative to trade in African currencies, the base transaction is still dollarized or main currency based? If it is not something that is not to be expected, how much longer is this going to last? Because people are making calculations and thinking that they're not better off doing local to local if Africa is local.
Not sure if Mike has had that question, but we'll be coming to you, Mike, for an answer.
Mike has heard this question from me before.
Your name, sir? Your name, please. Your name, please.
My name is Soji Awubade. I'm a trade lawyer from Nigeria.
Okay. We'll take the second question from the lady 2 rows behind the trade lawyer. No, sir, come back to you. Come back to your left. Yes, please. There, then to the right.
Hello, good morning. I'm Mercy Sila. I'm the president of the Tanzania Women Chamber of Commerce. So obviously I'm coming from Tanzania. For us, and for me, I'm talking about the SMEs, which have been talked, I think, by Dr. Chidede. And it's a very interesting area because for us in Tanzania, we have like 8 countries bordering us. And in all the border posts, there's a lot of businesses, and this involves women and the youth, especially women. Maybe I talk first for the women. And we know that the threshold for border businesses, if you are to be tax-free or something like that, it's $2,000 US. So the women are more comfortable in that area. But then when we come to the issues of digital or payments, it's very difficult because these women, they're mostly dealing with cash. And because you can see for Tanzania, there are all these 8 countries, and there are like almost 11 border posts. So you can imagine all very different digital platforms in the different countries. So we are just thinking if we are to harmonize or if we are to have a system which will attract the women to be able to do digital businesses, how can that be? Because to harmonize all that, unless we say we go by phases, we take it up in certain countries and we test, and if we see that it is workable, then we move to the others. But to do it abrupt for all, I think even our business women will be confused. But then I think it is a good thing which I think we should go, because for us, for example, in Tanzania, we do digital transactions, but people, they think of the cost, because for every transaction, there's a cost. And those costs for a small scale, for SMEs, if you add up, it takes a lot. At the end of the day, you find that we've spent a lot just on the charges. So that all that goes to the business. So it's a bit complicated. So I think maybe we try, we take it by phases. If it is worked in one area, then we do it for the other border posts. So that's my contribution, and if you can react to that, I would really be appreciative. Thank you.
Thank you very much. Celia says, pole pole. Let's take it the slow pilot phase. I'll throw that question to both Nshuti and Modibe in harmonizing those payments across border posts. We'll take the last question, and then we'll come to the answers.
Thank you for the opportunity. My name is Dodi Seidu. I work for Africa Trade Academy. I did some work trying to get some of the big size companies, Club 100 type of companies, to actually utilize the PAPS. Then realized that there was actually from the central bank level in Ghana a cap on how much can be transferred. Either, I don't know whether it's per week or per month, but there's a cap per transaction. I checked out for Nigeria, and there's also a cap. So I asked myself, how do I encourage somebody who is trading even regionally, asking for maybe $1 million worth or $1 million whatever worth, if there's a cap on the transaction? So that's my question to PAPS. How can we foster big size transactions through the PAPS? Thank you.
Okay. Thank you very much from the gentleman from Africa. Let's get answers to this. We'll take another round of questions if time lets us. Mike, you have those two questions, starting with the gentleman from Ghana.
Yes, I'll rather start with Soji, and then I'll work my way to the question from Ghana, i.e. starting from the top. Is it a dollar-based system? Again, PAPS is a collection of capabilities. We have two major products that facilitate cross-border payments. The starting point is our instant payment system, which allows local currency to local currency. However, what we find is that our system is able to support multiple limits. It's able to set limits that are bilateral between one country and the other. That is to say, a cedis to Naira limit. And it's also able to set multilateral rates. And that multilateral rate is based on the US dollar. Now, the central banks have favored the US dollar rate settings because on that particular subject, they all agree that, okay, for now, let us start from the known and then we go to the unknown, okay? But what PAPS has done is to build a multilateral net settlement system, which means that if, for example, you are sending equivalent of $1 million worth of Naira from Nigeria to Kenya, and in Kenya, they are sending an equivalent of $1 million from Kenya into Nigeria, that the net position of that transaction is that there will be zero foreign currency involved. So essentially, our system is designed to facilitate settlement in local currency. So in that hypothetical scenario that I painted for you, the transaction originates in Naira and gets to Kenya in Kenyan shillings, and there is no single 1 cent of any third-party currency involved in that particular transaction. However, where there are now situations where one value is bigger than the other, what is settled where a third-party currency is involved is only the net difference. And what you can see is that it's actually helping to lower dependence on any third-party currency. So you can find that if the trade between these two countries were X amount of dollars, today, countries that are participating are actually utilizing about 15% of that value in their trade with their counterparties. So net settlement significantly lowers and gradually eliminates the need for any third-party currencies. So this is one of our offerings. The second offering is what we now call our African Currency Marketplace. What this does is, for example, a large conglomerate out of, say, Nigeria is doing business in Ethiopia, and another conglomerate is doing business in Nigeria. And maybe two of them are in a situation where they have revenues that they have generated in both markets, which they are not able to externalize. Our currency marketplace system allows them to be able to say, I have this much naira and I'm willing to let it go at this rate to the other local currency, and the other person is able to say, I have this much Ethiopian birr and I'm really willing to let it go for this much naira. So in such a situation, there is $0, there is zero involvement of any third-party currency. So what we are saying is, we have the ability today to actually do bilateral rate setting between two African countries, in which case there is zero involvement of any third-party currency. However, countries have opted to say, let us index on a particular third-party global currency. But we have the capabilities today, and we can turn it on anytime the countries are ready for us to totally eliminate any third-party global currencies, okay? But today, these are the two offerings that we have, and I hope that has answered the question. The second question by Dodi, which was a very important question, is the issue of the caps that exist today in PAPS world. Yes, indeed, those caps exist. It's just as frustrating to me as it is to you, because we have shown clearly that the technology works and that it doesn't put them in any worse position compared to any other existing system. But what they have said is, let us start somewhere, and as we get more comfortable, we continue to open up. So where we are now is that a number of the countries are actually evaluating all of the process that has been made. And bear in mind that every single transaction through the PAPS system is visible to the regulators. We are probably the only system where you can find that the regulators not only just participate in, but they actually have visibility over every single transaction that moves across the platform. So we're actually working with the regulators. I believe that we'll be hearing some interesting news out of a number of the markets where some of the limits are going to be relaxed now that the central bank is fully comfortable with the flow of transactions and what they have seen so far on the platform. So thank you very much.
Thank you very much, Mike. Modiwe, I want to bring you back into the conversation. That question from the representative of the Tanzanian women, how can we harmonize all these payments across the borders?
Yeah, no, thank you. I mean, I was listening to some of the solutions that PAPS has developed, and my belief is that a lot of the challenges we are talking about, especially on the point of creating that sort of uniform visibility for all the different regulators, if that solution exists, I think it's a big enabler for addressing this issue. I think I was quite alarmed when she spoke about 8 border posts and having 8 different types of transactions. I mean, that is quite, concerning. But I do think that from a platform perspective, a platform like, mobile money or, the equivalent in Tanzania can very easily address that, as long as the commonality is there in terms of charges, as an example, between the 8 different countries, if there is an agreement around the common charges, and also if from a visibility, that will be enabled, and PAPS has indicated that the visibility from a regulatory perspective can be there. And I think it's more about, having that common alignment between the different, governments to be able to facilitate that. I think the Tanzania example, in my view, presents a very interesting case study of how that regulator in Tanzania can actually be the catalyst for driving that kind of conversation. So platforms are there. They're already able to do that seamless integration. And I think one thing that I was thinking about when he was speaking is, when you think about from a remittance perspective, a lot of these challenges have been addressed. We are able to transact, as I mentioned, across 40 countries with remittance. Currently, our platform is MFS Africa, But similarly, I think from a payments perspective, the same approach can be taken from a merchant's perspective. So I think what we need maybe is just the urgency, as you mentioned, because you can replicate the frameworks you have for remittances with the right visibility, the right infrastructure, and making sure that the regulatory question marks are addressed. The only thing that would be maybe something that also needs to be considered is around the digital identity. I think that is one of the reasons I think a lot of the concerns come up around securing the digital identity and making sure that from a KYC perspective, there's visibility and making sure that there's no sort of unwanted or non-compliant type of behavior, which tends to happen. So I do think that that's something that might need to be addressed also. I don't think we've discussed a lot of that, but I think it is something that certainly can affect that ability to transact seamlessly. But from an MTN perspective, I think generally technology is maybe a challenge, but in this context, it actually is not. Yeah, I think the fact that with mobile money we've managed to really crack the code when it comes to solving an African problem with an African solution, we've done that. Yeah. But what's required is just that urgency as well as that catalytic, need across the different governments to enable that, ecosystem to thrive.
Shuti, you had, I wanted you to dive in regarding the piloting, because you've been advocating for this pilot phase. So pole pole, how can we do this pilot phase, and who could we get on board for it?
Yes, like Mama said, pole pole ndio upendo, right? Slowly we'll get there. As Better Than Cash Alliance, we are ready to support that pilot for merchant payments. From a regulatory perspective, you can't regulate truly what you don't know, what you fear. Let's get out there at one of those border posts in Tanzania, the border posts in any trade corridor, and understand what it will take, get the regulator to agree to a pilot, especially in this context of driving Biashara in Africa. So if we put the Biashara at the center, which is what this is about, we sit, work through their challenges, the technology is not a problem, where is it, we make it happen. I believe we can do that in no time. So where they are willing, financial services players, I'm sure everyone is willing. How do we, because the rails for P2P are the rails for merchants, just reversed. Can we make it happen? When can we make it happen? I believe we can. We, as Better Than Cash Alliance, are ready to make it happen through the framework of implementing the Protocol on Digital Trade as quickly as possible. And I'm sure I'll be knocking on MTN's door. We'll be knocking on MTN's door, EcoBank's door, every willing party to get to the table, get it done. Together with the regulators, I believe it's possible. Then we have truly action-oriented, responsive interventions working hand in hand with the Business Council. In fact, they'll be the hosts of these things that they give their feedback and we go back and ideate and make things happen. So I'm excited about the opportunities, and I must commend PAPS for really endeavoring to do, and under the visionary President Orama, what Visa started doing in 1958. We need to extend grace to what PAPS and AfriXim are trying to do in a span of 7 years. Visa is still perfecting that. Others are still perfecting what they're doing. We are yet to figure it out for the micro merchant. We talk big transactions, and we are facilitating that through non-African solutions. For the small trader and every trader in between, can the African solutions be it? I believe it can. Let's test it out and get done.
The grace, I don't know if us, the microwave generation, are very patient for that. Talk more.
Yeah, thanks, Arnold. So I just wanted to also add to what Nshuti is saying, and in response to what the lady over there raised, and I see my colleagues are signaling that the time is up. So part of the work that we are doing in collaboration with Better Than Cash Alliance, AUC, and NEPAD is we are doing a mapping of payments at the cross-border. And we are doing this evidence gathering such that we identify a few borders or a few countries that will launch pilots. Right now, we have countries that are at a different level in terms of digital governance, in terms of readiness to implement the protocol on digital trade. But we also have countries who are quite advanced and ready to implement this protocol. And when it comes to payment, we are doing all these border visits across the 5 regions of the continent. And we are going to work with governments, the regulators, and the countries that are ready, so that we work with those pilots, we demonstrate that this is feasible, this works, such that when we demonstrate that it is possible, we can scale it up at the continental level. So after we have done the gathering of evidence, then we are going to identify a few pilots that we are going to launch to demonstrate the feasibility of this protocol and the conversation that we are talking about. It's not just theory, but it is possible. Thank you.
Thank you very much, Tokmo. I'm going to just push it. I know we've run out of time. They really wanted to ask a question at the front here. The lady at the front. We'll just take that as the last question and the answer to it as the closing remarks.
Thank you very much. My name is Awa Geiba. I am Public Policy Lead at Wave Mobile Money. Wave Mobile Money is a leading fintech in West Africa. I have 2 questions, actually. The first one is for Mr. Ogbalu, and I would like to understand the level of engagement of BCAO in the discussions with PAPS, and what is the status and the next steps for this relationship. And the second question is for Mr. Shedede, and it's regarding the domestication of the protocol, the e-commerce protocol. So I want to understand what has been the level of engagement of the central banks in the definition of this protocol, and also how do we expect them to be included in the domestication, both the central banks but also other stakeholders like the customs. Thank you.
Those are very, very, very good questions. We'll start with Mike, and this is the opportunity for your closing remarks as well to answer that question.
No, thank you. BCL is so important in the whole scheme of things, and is closely tied to some of the progress that we have seen or have not seen, especially in the West African region. We've been engaging with BCL, and again, they've done very meticulous review of PAPS, and we are now at a stage where we expect to get the final nod from BCL before the end of the year. Interestingly, in the BCL case, a lot of the support that we've had in terms of engaging with BCL has been from the commercial banks, who have actually put on quite a bit of pressure on the central bank to quickly join PAPS so that they can also begin to see the benefits of PAPS. So we believe that I think the short answer is that before the end of the year, we expect to make some announcements around BCL. My final take really is just to commend everyone. MTN is an organization that we're very proud of. So is EcoBank as well. But I think that sometimes in trying to focus on our businesses, we need to now look at what is in the best interest of the continent. And sometimes we spend too much time focusing on the little things. If we grow Africa to achieve its potential through the AfCFTA, then it's much better for everyone. So really, I'm just welcoming as many partners to come with us on this journey. We don't know it all, and again, Shuti, thank you. You're always supporting us. So for that we are thankful, and we look forward to having more members on board. and actually enabling payments across Africa. And just one last thing, everything about our lives is about trading. You know, it's about, we create value, we exchange values, okay? And all of those value exchanges leads up to, you know, what the economics call the GDP, you know, and is a measure of prosperity of the continent. But none of that will happen without payments. So if we get payments right, we'll get trade right. If we get trade right, we'll have a chance of prospering as a continent. Thank you very much.
Thank you very much. Very, very passionate remarks there. Talk more. That question and then your final remarks.
Okay. Thank you very much for that question. The central banks actually have been at the forefront of this conversation that we are talking about in the protocol, in the negotiation. So when we're discussing the cross-border digital payments and the fintech, when it was just the basics, the central banks were the ones who were driving that conversation. Most countries, even in the negotiations, the feedback that we were getting were the feedback that were coming from the central banks. Even today, we are negotiating the annex on cross-border digital payments and the financial technology. And every time we receive the comments, it's the central bank, the member states who would specifically tell us, this is the feedback that we got from the central banks, because we come to the negotiations, but there's national consultations that happen before the formal meetings. And in most cases, in most governments, the central banks are the ones who are reviewing those annexes and providing feedback. So just quickly to respond, the central banks are the ones who are driving this conversation. In my final remarks, I just wanted to say again, thank you to all the partners, BTCA, MTN, and PAPS. And we really look forward to our collaboration. We are partnering with different partners to implement the protocol on digital trade. And from the payment perspective, actually, these are just but a few partners that we are working with to make sure that we realize this vision or dream of inclusive and seamless payments across the continent. And again, we're hoping that if we manage to solve this issue of cross-border digital payments, we have solved over 80% of the problems in intra-Africa trade. Thank you very much.
Quite the figure. Ms. Mapula, final remarks.
Yeah, no, thank you. I just want to echo his words to say, you know, thank you for creating this platform to engage. I think the dialogue is quite a great opportunity to really create the urgency. And we spoke about timelines, we spoke about pilots, and I think that's really what it's about. From an MTN perspective, we are ready to align our resources with different stakeholders. We need to make sure that across the countries, there's a common sort of understanding and an ambition. And I think what we've heard is that the solutions are there. I learned a lot from the PAPS presentation, but to your point, you know, is there enough adoption? Is there enough awareness? And I think that's part of the opportunity. And I think there's also a big opportunity around cross-sector collaboration. I spoke about MasterCard. We spoke a lot about EcoBank. I felt like EcoBank should have been here. But, you know, cross-sector, you know, cross-government, as well as, you know, harmonization of regulation. Technology is right there. MTN is really ready. We're the biggest operator from a footprint perspective on the continent, and we are ready to be part of those conversations. Thank you.
Thank you, Ms. Mapula. Shuti, closing remarks.
You know, Better Than Cash Alliance is on the mission to digitize payments. What we've had is really exciting, and really the opportunity is that by the next Biashara, we should have something to show for the dialogue. And we are ready to step up and align resources with everyone in expertise, in money, to really solve these problems for in our payment systems once and for all. The protocol gives us our best opportunity, and now it's the work begins to turn it into reality, such that by 2030 we should not be talking about financial inclusion and the need for digital payments. I think our children need to grow up in an Africa that is prosperous and don't need to talk about financial inclusion. So Biashara Madam Private Sector. Private sector is it. We are ready to make it happen, and I look forward to celebrating outcomes, practical outcomes in the lives of people, in the lives of Biasharas, by the time we come back next year. Thank you, Arnold.
Thank you very much. A hand clap to our panel of experts. I think we could use those hands a little bit more. People at the back, hand clap to our panel of experts. Allow me to thank our panel of experts, starting with Ms. Shuti Mbabazi. She's the Managing Director, Better Than Cash Alliance. Thank you for making the time, Shuti. I would also like to thank Mrs. Mapula Bodibe. She's the MTN CEO Rwanda. Thank you for making the time. Dr. Tokmo Chidede, he's the Senior Digital Trade Expert at the AfCFTA Secretariat. Thank you for making the time. And Mr. Mike Ogbalu, who joined us online, he is the CEO of PAPS. Thank you for making the time. For being a great audience, thank you as well. Have a great rest of your day.
And thank you. And thank you very much, Arnold, for being a great moderator for this particular session. Let's put our hands together for the panelist and the moderator for this session. Very wonderful session. We're going to have a photograph taken. And maybe I would request, is there a way, our photographers, and is there a way to have Mike back? I think, Arnold, this is a time that Mike is going to miss and regret that he's not in Kigali, as you said, and probably wish that he was here. Can we have Mike join? Is there a way? Because he's doing wonderfully well and we can't maybe take me off and let Mike show up. Right. Distinguished ladies and gentlemen, thank you very much for staying tuned for this particular session. We're going to have a very great session next. And I'm sure that one is going to include those colleagues who were in the other session joining us. So we're going to have the next plenary, all of us in this auditorium. And I am told to just spend about 2-3 minutes buying some time to wait for the colleagues who would be joining us from that session, whilst our assistants will be, I think, arranging a few chairs and all of that. So that plenary session is going to be on solving the trade finance conundrum for increased intra-Africa trade. I'm sure that all of us want to see how we solve that particular conundrum. I will be introducing, there's quite a number of speakers, so I'll be introducing the moderator, who will then be introducing her speakers. But in the meantime, I think that what we all listen to from the digital trade is something so pertinent and common, and something that almost everybody is wishing that once that is solved, we should be able to make some great leap when it comes to achieving the vision that we're all seeking when it comes to the AfCFTA. And we heard it loud and clear from the Secretary General yesterday that indeed we have to leverage digital economy and position Africa for global competitiveness, creating opportunities for women, small and medium enterprises, farmers across the continent, and together, that's the only way we dare to invent the future and build a prosperous Africa. And it is also on that platform that we heard from the President of Rwanda, His Excellency Paul Kagame, also telling all of us that it's about time we move small and medium enterprises from remaining small and medium. They need to grow. But how do we do that? Leverage on digital trade, digital economy, as we heard from the panelists this morning. Quite a number of examples. Yesterday, Lerato, one of the moderators, and we're going to hear from her shortly again, also talked about the fact that she had had some horrible experiences, trying to trade digitally across the continent. She gave the example of the third-party situation that Arnold hinted and emphasized. And also, expressed quite some number of frustrations that, one has to go through if you have to make payments digitally across the continent. But again, I think I will also emphasize the need for more advocacy. And Mike, I think, talked about it. But we need to emphasize it a lot more. The need for everyone to understand that this is where we are going and this is what we need to do. How many people, for instance, know a lot that's been done by PAPSS? Dodi asked a very pertinent question coming from Ghana. I got a message from a young entrepreneur, I think around July, thereabout, 12th of July, asking that she has goods. She needs to send them to Sierra Leone, Uganda, Nigeria, and Gambia. But how's she going to make payment? That was a question that the young lady sent. This is a small and medium enterprise. She wants to know how she makes payment. So people are asking these questions. Lerato wanted to buy a dress. She couldn't know how to make payment. It's cutting across. So the earlier we make some of these issues and resolve them, and domesticate the information. PAPS go down there, Better Than Cash go down there, MTN, you're already down there, because I know that your motto is everywhere you go. So go down there and let's domesticate the information. Let's get the message across. And I'm sure that that's when we'll be able to heed to the call of His Excellency, the Secretary General, position Africa for global competitiveness, leveraging our digital economy, particularly for small and medium enterprises, women and youth. And then we can fulfill the vision of His Excellency Paul Kagame. Small and medium enterprises don't remain small, medium, move and grow. Distinguished ladies and gentlemen, we're going to take just about a minute musical interlude whilst we wait for colleagues from the other session to join us. And then we can introduce our next session. The next session is going to be on solving the trade finance conundrum for increased intra-Africa trade across the continent of Africa, the vision we all want to see. We take a minute and we'll be back. welcome once again, Your Excellencies, distinguished ladies and gentlemen. I think we almost having a full house, and we are privileged to be joined by His Excellency, the Secretary General of the AfCFTA Secretariat, for this particular session. Right after the plenary 3, which is the next session, we're going to have a plenary 4. It's going to be a conversation with the CEO of Corporate Council on Africa. It's also going to be another session you can't afford to miss it. In the meantime, we are set for plenary 3, solving the trade finance conundrum for increased intra-Africa trade. Moderator for that particular session is Ms. Ramatullah Kudiabi. Let's put our hands together and welcome her, please.
Good morning, distinguished participant. My name is Ramatullah Kudiabi, and it's my pleasure to welcome you all to this vital discussion on a topic that lies at the heart of Africa's economic transformation, supporting and empowering SMEs. We have discussed this since yesterday. SMEs are at the backbone of Africa's economy, driving job creation, innovation, and economic growth. Their development is not just an economic necessity, but a crucial component for achieving inclusive and sustainable development across the continent. In the context of the African Continental Free Trade Area, the growth and empowerment of SMEs are peculiarly important, and they will be instrumental in realizing the potential of this transformative agreement. However, one of the critical barriers SMEs faces is access to trade finance, which is essential for engaging effectively in both domestic and international markets. Despite their potential, African SMEs struggle to secure the financial instruments needed for growth. For those SMEs engaged in international trade, the stakes are even higher. Trade finance tools like letters of credit, export credit insurance, and factoring are crucial. For what? For managing risk and cash flow. If we are to fully capitalize on those opportunities presented by the AfCFTA, addressing this gap is imperative. So this session brings together a diverse group of financiers, trade experts, and policy practitioners to delve into the complexities of this challenge and explore innovative solutions. So the insights from today's discussion will contribute to the ongoing efforts by the AfCFTA Secretariat in developing an SME support program aimed at enhancing access to finance and markets. So let's dive into this critical discussion, and help me with a round of applause to welcome on stage Mr. Thaddeus Admasu, President and Managing Director of Trade and Development Bank, to do the opening remarks. Mr. Thaddeus Admasu, you're welcome on stage.
Thank you very much, Madam Master of Ceremonies. Good morning, everybody in the house. Very pleased to be here to warm everybody up for the panel to follow. I was asked to share a few remarks to set the stage and the scene for the conversation that's going to follow. It's a very interesting topic, as you've heard from the MC. SMEs, and trade finance. Those are two particular topics that we'll be discussing in this session. Both of those segments or asset classes, if you look at it that way, suffer from significant gaps in terms of access to finance. Those of you who've seen the numbers, SMEs typically in the African continent have a $330 billion financing gap. If you look at the surveys in trade finance, the gap is about $130 billion. There's some overlap there, but clearly we're looking at $400 billion or so as being the financing gap. The challenge, of course, of trade finance has many faces. It's not just a question of access to hard currency. There's also very strong regulatory aspects. Just before this panel this morning, we had a fascinating discussion on digital payment systems cross-border. And one of the very strong themes that came out in that session was regulation and how important regulation is, despite the fact that technology works and digitization has found solutions to have interoperability across borders. Those issues also come very strongly in the area of trade finance, but they also feature very strongly in terms of access to credit by SMEs. The key issue that came out in the cross-border payment discussion was cost. The cost to transact, the cost of insecurity, the opportunity cost of not being able to access customers across the borders. So cost has always been a very important aspect around finance and credit. In the area of SMEs, of course, it's very, very similar. If you just take the trade finance component out, access to credit for SMEs in domestic environments is very complex and challenging. Everybody's been trying to crack that conundrum for a long time. And in this case, we're extending that to cross-border, so it's a double challenge. The issues around access to credit by SMEs often has a lot to do with the cost of serving them. And that same issue arises in the context of cross-border credit as well, on top of the regulation issues. And so it's always going to be a discussion of keeping the costs of the ecosystem down, the cost of credit down, and the cost of information asymmetries down, because they all interact in the end and end up with a situation where basically it's no longer feasible to serve that segment. The good news, I think, is some of the solutions we have seen over the years come into the SME space can be applied to the trade finance nexus on SMEs in terms of cross-border business. And there, I think we have a lot to be optimistic about. I'm sure we'll hear some of this from some of the banks on the panel. But some of the measures that have proven to be effective in recent years has been guarantees at the portfolio level, where you can actually help reduce the expected loss of institutions that engage in this space by having partners who come in and share risk. There's many different ways of extending portfolio guarantees, first loss, second loss, and there's also subsidized ways of keeping those particular costs down. But of course, the big game changer across both of these areas will continue to be IT, digitization. Of course, these days we have the very strong development of AI that comes on top of the normal digitization, and we expect this will really make it a lot easier for businesses, financial institutions to reach out to smaller entities, the SMEs, and serve them using different business models, as we have seen has been successful in a number of East and West African environments, where basically you've had disintermediation of human beings using digital technologies, digital platforms to bring on board customers, serve them, process them much more efficiently at low cost. And so I think the future of cross-border trade finance, especially for SMEs, will be greatly enhanced by the development of continued technology and related new business models. But then, of course, regulation will continue to be key, and I think this is where the AfCFTAs of this world have a lot to do, to put the mirror up to African domestic regulators and entice them to relax some of these regulations. Even conventional trade finance these days is very much hamstrung by regulations. I think in the morning session, somebody was saying regulators have a tendency to over-regulate. Well, it's become even more so the case. That's always been the case historically, but in this day and age, with new requirements around KYC, anti-money laundering, anti-terrorism financing, there's all sorts of new developments in the financial world that's really raised the bar on regulation. I don't think it was intended to create more rigidities and more difficulties, but the practical effect of it has been that. And coming back to the concept of cost to serve, the cost to serve has become much higher as a result. And so that's why we've seen a lot of international banks exit the African continental economy, because it's just become not worthwhile to incur all those costs. Your final profitability in the context of compliance becomes just very difficult. And this is why it's so important for us to have the standard banks, the eco banks, the equity banks of this world, who at least will always be here in the continent, and they will find ways to bang on Wamkele's door and other people's doors and say, business models are not working anymore, you have to find a way to bring down the cost of us doing business. I think for others, you just disconnect and walk away. And I think it's been very unfortunate to see at the global level, the African marketplace being relegated to being not worthwhile to do business. And even some banks, global banks who are emerging market banks by tradition, have made those decisions to leave. I'm not talking about tier 1 banks who have their homes in first world economies. I'm talking about certain international banks that have their entire mandate centered around emerging markets and who've been in Africa, but then they pack up and leave. So there's a lot of institutional issues in the trade finance space, far beyond the SME environment. But of course, there is huge opportunities also for financial institutions to do more at the level of product innovation, specialization, dealing with incentives, dealing with perception issues, which are very profound and problematic in the world of SMEs, whether it's normal SME financing or cross-border. There will always be these issues around risk. And here, at least, the good news is there's been a whole lot more attention to this segment, and I think there's a lot more sensitization. So there's quite a bit happening, and all sorts of institutions that have been missing in this space are increasingly coming in. Most of us think of commercial banks as being the guilty ones who don't take the risk on SMEs and don't provide the LCs if it's not cash covered in hard currency. But there's many other players in this ecosystem, and we don't have enough of them. DFIs like TDB, we have a role to play. We've been providing liquidity to a number of counterparts who are better placed to reach SMEs than ourselves. We give them longer term tenors, we give them reasonable pricing. That helps on the liquidity side. But of course, you do still need other role players, and I think international friends of Africa, I think, have a lot to do here, where we're talking about angel investing, venture capital, whether it's early stage or late stage. Friends and family, always important. So it's a big problem, and I think all the role players have to step in to do more. On that note, I look forward to the panel discussions, and if there's opportunities, I'll interject during the course of this very interesting conversation. Thank you all very much.
On behalf of everyone here, I would like to extend our sincere thanks to you, Mr. Thaddeus Admasu, for sharing your valuable insight with us today. And it's now time to welcome our speakers on stage. Please help me to welcome Mrs. Suzanne Oma Meng Eni, Principal Secretary, Statement Department of MSME Development, Ministry of Cooperative and MSME Kenya. I will then call Mr. Suleiman Diagne, Group Head of Trade Finance from EcoBank. Then Mr. Adeleke Adeyemi, Regional CEO of East and Southern African UBA. Then Mr. David Benson, Investment Manager, Trade and Supply Chain Finance at British International Investments. And finally, and he will be joining online, not finally, sorry, I'm missing another Mr. Achogbe Vosa, Director Treasury and Interbank Relations from Vista Group. And Mr. Andrew Robertson, Head of Business Enablement for Business and Commercial Banking from Standard Bank, will be connected online. So let's start this session. So I started this opening session, with the state of SMEs and trade finance, and I want to start this discussion upon the scope and availability of trade finance for SMEs. The current landscape of trade finance for SMEs in Africa shows a significant financing gap, estimated by International Financial Corporation, IFC, to exceed nearly $330 billion annually. Meaning that there is a large portion of SMEs that are unable to access the necessary trade finance facilities that could enable to expand their businesses and participate effectively in regional trade. The environment is also really fragmented. Only 20% of African SMEs have access to formal credit, which is significantly lower compared to other regions such as South Asia, which is nearly 40%. My first question will be for you, Mrs. Susan Emma Mengeni, Principal Secretary, State Department of MSME, Development Ministry of Cooperative and MSME in Kenya. According to you, what is the current scope and availability of trade finance for SMEs engaged in intra-African trade?
Okay. So I'm on? Yeah, it's okay. Okay, thank you very much, Rama. Before that, allow me to say, Jambo Africa. I bring you greetings from Kenya. And I think on this panel, I'm the only one who will be speaking as a duty bearer. So I still asking myself whether I should have been the first one. Because to answer your question, I look at it a bit differently in terms of what is it that our nations needs to do. What is it that governments needs to do? I think listening from the opening remarks from Mr. Tades, he has already laid the ground. He has already given the scope. And it's very clear that our MSMEs are not being financed. In Kenya, where I come from, our financing gap to MSME is about $20 billion USD. And if you are to translate that to shillings, it will be in the regions of more than probably 500 million Kenyan shillings or thereabout per year, you know. So it means MSMEs, though, we are always praising them and saying that they're the backbone of our economy. And I think backbone of the Africa economy, they're very innovative, and most of them are young people. I think this is better. Yeah, this is better, much better. Most of them are young people because we have a very young continent, and majority of them, of course, are women. So first of all, let me also commend the AfCFTA
for having fast-tracked the protocols on youth in trade and also women in trade. So the challenge on us is how do we domesticate? But then domestication requires us to unlock access to financing. Because in the domestic market, if MSMEs cannot access financing from the mainstream financial market, then it means they cannot participate in the, in the intra-Africa trade. So what do we think we need to do? Number one, I think governments, because the scoop has already been laid, so I did not want to repeat. That's the reality as Mr. Tades put it. I think what we need to do, first of all, we got to be more intentional and deliberate in our approaches to supporting MSME. And you will note that I'm deliberately using the word MSME and not SME, because we tend to forget about the micro. And if you look at our economy, for example, in Kenya, 98% of all businesses are MSME, out of which close to 70% are micro. So what are we staring at? So anytime we start limiting or avoiding to focus on the micro, then we are running away from our problem. So what are the characteristics of micro MSME? The high informality. Mr. Tades has talked about lack of information, lack of data that can be trusted, and you can't even build a basic KYC about it. So what do we need to do? First of all, we need to create visibility of MSME. We need to create visibility of our micro MSME, the informal MSME. I'll give you a few statistics with regard to Kenya. Out of the potential workforce of 20 million Kenyans, only 3.5 million Kenyans are formally employed, leaving close to 16.5 million or 17 million outside there in the informal sector. Now, what does it mean not to be in the informal employment? You have no, you are not employed, so you have no pay slip to commit in the first place. It also means your social capital are limited. Nobody can guarantee you. It means you don't own means of production. So the next question is our collateral system. We need to reform our collateral system. What will inform the reformation that we need? We talk about, globally we are saying we are appealing to the global financial institution, to reform, but even us, at the continent level, we need to look at our collateral system. We need to start putting value to what we think our population has. When you say our young people are innovative, can that innovative ideas become their collateral? We need to put value in what you are trading. We are talking about, yes, let's look at these regimes, let's look at regulatory fine. We're gonna work on that. We are gonna negotiate this trade partnership. But the question is, who are trading? How much are we building capabilities of those people who are trading? Because we say this is the only sector that can create jobs for majority of our population. We need to invest in them. We need to make them become more lending ready, more investment ready, and then we need to re-engineer our collateral system. If I'm trading agricultural produces, which I think, for example, Kenya has, Ghana does not have, let's put value on that. Let's sit together with the private sector, the commercial banks, and let them attach value into that. We as African, we need also to consult our cultural system. Before we came up with the modern society, we used to do barter trade. What is it that we can learn from there? What is it that we can pick from there? And I think this is a conversation that the AfCFTA needs to champion. See how we bring value around the barter system so that then we can unlock, because a young person does not have credit history, yet has got a very good ideas, innovative ideas that needs to take to the market or share with another country. Lastly, you see what you're doing, because you are not serving that sector where majority of young people are, where majority of our women are. Every time that our young people interact on this digital space, they are sending outside their way. Our ideas are being drained away because we neglect them. They'll sell the ideas, and nowadays because the world, the globe has become a village through internet, through everything. They are hopelessly looking for someone who can support them. They're sharing ideas outside there. And somebody's facilitating them and will bring it back to sell it to the continent. So I think we need to break down all those barriers. And what are we doing? Just quickly, as Kenya, because again, we cannot be speaking when we're not doing anything. When President Ruto came to power, the first action he undertook was to see how we can deepen financial inclusion and entrench it in our economy. So he had promised the population that he was going to establish a financial inclusion fund, which I administer, which is popularly known as the Hustler Fund. So the Hustler Fund, by that time, 8 million Kenyans of 18 years and above had been blacklisted in CRBs. Majority of them young people, and a number of them women. And so he convened a meeting with the stakeholders from private sector, the banks, and told them, look, if this trend continued, even you'll have no customers to serve in the coming future. So this is a market failure that we have all of us put our heads together and see how we solve it. So he said, because we have a responsibility of our population, what you're going to put in will enlarge, widen our credit risk, will put in the funding. But you need to put in your infrastructure, put in your expertise, your lending expertise, your mobile lending infrastructure, and let's see how we can solve this. And by doing that, we made it more universal. One objective was to try and see how, if we can gather the information about our population, some sort of akin to credit census which you're doing. Because remember, there was no any particular entity that had information, credit info about all Kenyans. Today, as we speak, we've reached out to 24 million Kenyans. So we have the basic information about it. So what are we going to do with this basic information? About 3 months ago, through the support of IFC, we commissioned a study on alternative data mapping, because we want to broaden the scope of our data, the sources of our data that tend to limit our MSMEs. So I think those are some of the initiatives. Each country needs to go back and start seeing how do we become more intentional at enabling a young person who comes from a vulnerable background to access financing. Because even if not for anything else, that is his job. That is his day-to-day job. So I think if we become more intentional at looking at our regulation, if we consult our culture, if we work too closely with the private sector, we will be able to unlock access to credit to our MSMEs. Thank you.
Thank you, Mrs. Susanna Imameng-Eni, and also for introducing this initiative that has been launched by the Kenyan government in 2022, and which is showing success. And we will continue to discuss this later. I will address my second question to you, Mr. Suleiman Jan, Group Head of Trade Finance at EcoBank. AfCFTA presents vast opportunity for SMEs, but the availability of trade finance is critical for them to fully leverage these opportunities. The agreement opens up new markets and encourages regional integration, but accessing these opportunities requires adequate financing. So my question to you is, how does AfCFTA create opportunities for African SMEs to expand their operations across borders? And how can SMEs best position themselves to capitalize on these opportunities?
Thank you very much, and a warm good morning to everybody. I would start by thanking the AfCFTA Secretariat for organizing this beautiful event. And as a representative of an institution that has been created 39 years ago, with a motto on an objective set by our founding fathers to be fostering regional integration and African development. It's a pleasure to be here and to talk about these issues. So you've mentioned, first of all, the AfCFTA has been a great idea, and we must, I think, be thankful to our authorities for having pulled this together and having really given us this opportunity to improve the economies, African economies in general. So what is the AfCFTA opening up in terms of the economies? Clearly, we're now in a large single market, 1.4 billion people. This market is worth $3 trillion. So basically, the market is open. And one of the key points to develop SMEs is obviously access to markets. So as an institution that is present in 33 countries, EcoBank, and given the vision of our founding fathers, we said to ourselves, what could we do as a financing institution to really look beyond just our normal business, but to really foster intra-Africa trade? One of the key takeaways and what we found out is that, yes, the AfCFTA opens markets for most of the businesses, but we also find out that there's asymmetry of information across the continent. How does a trader based in Dakar know that they can source goods in Harare in Zimbabwe? How does a trader in Nairobi can source goods from Lilongwe? So based on the fact that we have a client base of 30 million people, including businesses, we said to ourselves that we will build up a platform. That platform, we call it the single market trade hub. And with the purpose, and this platform is, by the way, open to EcoBank clients and non-EcoBank clients, with a view of reducing that asymmetry of information. And basically, that platform allows any SME to connect to that platform, register, and showcase their products and services for free, with the objective of obviously being able to elicit business from the other companies across the markets. Again, our key peculiarity as a Pan-African bank is that we are, out of these 54, 55 countries in Africa, we are present in 33, being obviously the largest network bank in Africa. And we've been actually successful. We've been able to onboard 6,000 SMEs into the platform, and more importantly, there's been matches, meaning that clients in Togo, for example, have been able to source corn seeds from Côte d'Ivoire. We've had clients in Senegal being able to sell fish to clients in Burkina Faso, etc. So that shows that the market opportunities are there, and the AfCFTA being able to really foster those regional corridors is actually really giving the impetus for SMEs to really grow and grow through also investment, because that's also another area where the SMEs can build up their partnerships and build up their capacities in terms of meeting those demands across. Now, from a pure financing perspective, obviously, once we cover the market aspect, one of the key points of accessing trade finance, we know there's a gap, right? I think we know that SMEs account for 90% of the businesses in Africa, but are beneficiaries of only 20–30% of financing. So there's a gap, 130 billion, as Mr. Tadiso has mentioned. So there's a lot of work on us, but also a lot of work for the SMEs. Why I say that is that a lot of the obstacle or bottlenecks in terms of financing, a lot is said around collateral, but we also find out that the SMEs need also capacity in terms of just being able to present a financial statement, or more importantly, being able to formalize themselves. So we've been working to ensure that first there's this capacity building, So we've partnered with a lot of institutions. We obviously have our own EcoBank Academy to really help build up that capacity for SMEs. We've partnered with the Global Business School Network to also provide these courses. And we've also been able to partner with Visa to give basically the practical business solution to these SMEs. So that aspect is very important, and one of the key elements of closing that financing gap is also our partnership with some of the governments or public authorities in general. And in that respect, we've been able to also foster those partnerships where we go to these SME agencies, right? Typically under government trade cabinets, being able to basically work with them on a standard criteria where we can say, look, what are the SMEs that you feel we can work with, and these are the criteria. Can you help us, and can we together put together these criteria and be able to foster this financing at a lower risk and without collateral? So that's one important point on capacity building. Obviously, then we have all the products. We know that SMEs, most of the SMEs are also women or led or youth-led, and we've put together a program we call Elevate, basically addressing the need to really finance women-led business. And that program actually is on the back of what we call credit programs, which are basically a way of being able to finance SME on a scale and reducing the cost to serve through programs rather than looking at individual credit application. So these are some of the things that I can talk about. Obviously, we can develop on what are the key products. We've mentioned letters of credit. There's also been some work done with the DFIs because, yes, as we've heard, some of the international banks have also pulled out de-risking Africa. And we, as a Pan-African bank, have been able to really partner with key institutions to really be able to foster and close that gap.
Thank you so much, Mr. Suleiman. With your contribution about the opportunities that have been created by AfCFTAs for SMEs. And I want now to pursue this discussion upon the sectoral impact of AfCFTA on SMEs, sorry. And I will address this next question to Mr. David Benson, Investment Manager, Trade and Supply Chain Finance at British International Investment. Now that we have outlined the opportunities presented by the AfCFTA, I want to ask you, what are the key sectors and industries where SMEs are expected to benefit from AfCFTA?
Hi. Thanks for the question, and thanks to the AfCFTA Secretariat for inviting us to be part of this discussion. If I'm being honest, I'm not sure this question is for me. I think, obviously, DFIs have a role to play as far as trade finance is concerned. But one of the things that we have realized at BI when we started to put together a trade finance portfolio some 5 years ago is that, unlike other areas of investment, take project finance, for instance, an international entity could come into any market with a boatload of dollars and build anything they wanted to by themselves. Trade finance is unique in that sense because we at BI or any of the other DFIs can't purport to support trade finance in any market without the local financial institutions. It just can't happen. That's just not the way trade works. Trade is a highly intermediated product. And so you need local financial institutions to be able to execute any trade finance mandate. And so what we've done and what we hold very dearly is the partnerships that we've been able to establish on the continent. African banks, Pan-African banks, some of my friends are here from EcoBank and the UBA and the rest of them. And we think that, as far as the Africa Continental Free Trade is concerned, we need to use that same route, right? We need to realize that the local financial institutions are the ones that are going to be at the forefront of, executing on this continental free trade. And when I think about it, a lot of these financial institutions, as I've said, the likes of EcoBank and UBA, all of them understand that trade is an important part of our economy and what we do and so on. But I'm not sure whether the subset of the Intercontinental Free Trade Agreement has been highlighted enough, even at that level, right? So, I'm sure if you walked into any of these international Pan-African banks and said, do you support trade finance? I'm sure the answer will be yes. Is trade finance a key part of what you do and a key part of your strategies and so on? The answer will be yes. How much do you commit to trade finance in a year? I'm sure they'll give you a number. But if we break that down to how much do we commit to financing trade finance, that is intercontinental trade finance, we'll probably come to a point where we haven't actually articulated this a bit more. And I think that's where we need to start, because you can't particularly achieve anything that you are not intentionally measuring, right? So when we decide to put together some form of measure in terms of how we want to finance intercontinental free trade, because again, we can't talk about intercontinental free trade, indeed we can't talk about trade at all without talking about trade finance, right? In the earlier session, I think it was mentioned that you can't talk about trade without talking about the payments. But I have to say, you can't talk about payment without talking about the finance. Somebody has to provide the finance before the payment even happens, right? But that's neither here nor there. The point is that we need to call out the intercontinental free trade financing element of trade finance in Africa, right? So that we can intentionally focus on that. I don't know how many people in the room would have heard about the 2X challenge. The 2X challenge was put together in 2018 at the G7 summit by international development and multilateral partners. And the objective was to collaborate in financing gender-based finance, right? To put money into women businesses. Now, they set out to raise $3 billion in 2018. You won't believe the number of, you won't believe how much they've been able to raise in terms of women financing up until this point. They've raised $33 billion in gender finance. And the reason for that is they've called out gender finance specifically, brought all the partners together and said, this is a target and this is what we want to aim for. And I think we can do the same for trade finance, for intercontinental trade finance, where all partners, starting with African banks and African DFIs, come together and say, we have a challenge. Guys, everybody, we have a challenge. This is the number we want to raise for intercontinental trade financing. And we want all African banks to be on board. And we want all African banks to report on how much they do in intercontinental trade finance every year. And we'll be amazed in terms of how much we'll be able to raise when we come back to discuss this in a year or so. So we can call it the Biashara challenge if you want. And, we can all commit to, what, $50 billion of trade finance, intercontinental trade finance for African businesses. When I take an investment to investment committee at BI, I'm asked for every single investment, how much of this is women financing? The reason for that is because BI has signed up to the 2X challenge and has committed to it. So what that means is that we have a target that we need to meet. It's the same thing. If our friends at EcoBank and UBA take a trade investment to investment committee or a trade credit investment committee and they've signed up to the Biashara challenge, I'm sure credit committee will ask how much of this is Biashara. And what that means is that the relationship managers or whoever's at the forefront of the credit will have to ask, how do I get a bit of this investment to be Biashara, to be intercontinental? Without that, you're not intentionally focused on trying to raise finance for intercontinental free trade. I think it's a place that we can start, and hopefully that's something the Secretariat can make a note of, and we can all join together. And then from the global development partners like BI, we can back that and bring everybody else on board and see where we can get to.
Thank you, Mr. David Benson. I'm sure your message has been heard. And I want also Mr. Adeleke Adeyemi to discuss upon this sectoral impact on the AfCFTA, on SME. I want to address you this question. How can targeted trade finance support these sectors and enhance SME participation in regional value chains?
Thank you. Let me start by thanking the Secretariat for inviting, someone from Africa Global Bank, UBA, to be one of the panelists at today's session. Perhaps a better way of answering your question is to remind ourselves about some facts about MSMEs, and that will lay the foundation of what I'm going to speak to. Just to remind each and every one of us, MSMEs represent 90% of global businesses. They contribute over 50% of employment worldwide. Formal SMEs contribute up to 40% of GDP in emerging economies, 50% in OEDC countries. In emerging markets, MSME they account for 7 out of 10 formal employment, and they generate income of between 70 and 10%. So for AfCFTA, for African banks, this is a sector that we have to support, because the multiply effect of what these businesses are doing enormous. I heard when they said MSMEs, micro, small, and medium. The young shall grow. The micro will become the small will become the medium, and the medium will become a corporate, and could be a global corporate and all that. So that's what we should be looking at. In addition to that, we need to remind ourselves of the roles that these MSMEs, what they provide. Aside from driving innovation, job contribution, contributing to the GDP, enormous, and the multiplier effect. So you ask ourselves, what is a banking institution like Africa Global Bank, UBA, doing to support AfCFTA, and by extension, increasing the turnover and the business within this space? So for number one is the fact that UBA, we develop strategic partnership and alliances with institutions that are interested in developing this space. Last year in Accra, Ghana, we signed an agreement with AfCFTA and committed to disbursing $6 billion worth of loans in all our 20 presence countries in Africa, from Chad to Cameroon to Congo DRC to Congo Brazzaville to Gabon in the CIMAC region, the UEMA region, from Benin Republic to Senegal to Burkina Faso to Mali to Guinea, in West Africa Anglophone, from Nigeria to Liberia to Sierra Leone, and Ghana, and in East Africa from Kenya to Uganda and Tanzania, and in South Africa from Zambia to Mozambique. This, we believe, will help this sector and the expected benefits from investing and encouraging the participants in this space. We are all going to, reap the reward. In addition to that is that, remember, UBA operates what we call the 24/4 matrix. We are present in 24 countries, 4 continents. 20 of those countries in Africa, but 4 of them are actually ex-Africa. So our international outlets, we are present in 4 financial centers, international financial centers in the world. We've been in America since 1984. We actually celebrated our 48th anniversary a couple of weeks ago during the UNGA, celebration. We're in the UK, we're in France, and we are in. So UBA UK and UBA America, those 2 international outlets, they facilitate trade and investment flows between Africa and the rest of the world. That's part of their mandates. And those institutions, they actually offer corresponding banking services to African financial institutions, where we're present. So we are talking about granting trade finance loans, confirmation lines and all that, whilst observing the strictest Chinese wall rules in accordance with the regulators in these geographies, the PRA, Prudential Regulation Authority in the UK, and the OCC, of course, in America. So these are ways of UBA helping to foster trade and development within this space. In addition to that is, yesterday we're here and we heard about the challenges of making payments. Somebody was exporting goods to, I think we had somebody trying to buy something from South Africa and the payments were not. So AfroEximin came up with PAPS, Pan-African Payments and Settlement System. And that system alone has been signed on by 13 central banks as the last count, about 114 commercial banks, including UBA, of course, we have to be part of it, we Africa's Global Bank, part of it, and 10 switching provisions. So the test run is going on, and UBA is actually part of it. UBA Kenya was actually one of the subsidiaries we're using that. These are other ways of UBA, supporting the transaction in this space. Aside from that, we have dedicated retail banking, SBGs across all our 20 geographies in Africa at that time that come up with bespoke, products to service our clients within this space. And of course, we also embark on capacity building to train financial literacies, all this, just to prepare the simple balance sheet statement, cash flow statement, P&L and all that. Yeah, our people need to know this so that when they are presenting their credit request to banks, they can easily be assessed and the success rate will be higher. Of course, we also provide our other banking, services, digital banking, transaction banking, treasury management, and cash services and all that. I think I might have to stop him. Thank you.
Thank you so much for bringing your insight and upon this sectoral impact of AfCFTAs on the SMEs. It's now time to discuss with Mr. Andrew Robertson, Head of Business Enablement for Business and Commercial Banking at Standard Bank. Can you hear me?
Ramatulai, I can hear you.
You can hear me?
Audible on your side?
Can
Try that again.
Can you hear me here? No, it's not working. Hello?
Ramatulai, I can hear you now.
Yeah, you can hear me now?
Yes, I can hear you now.
This is perfect. Let's now examine with you the significance of harmonizing trade finance regulations and its impact on facilitating cross-border trade. With 50 members, states signed onto the African Continental Free Trade Agreement, representing the largest trading bloc by number of participating countries globally. It is important to note that these countries are far from homogeneous. So, your company has an extensive presence in Africa to facilitate cross-border trade and investment. And my question to you is, how can harmonizing trade finance regulation across African countries simplify cross-border financing for SMEs?
Thank you, Ramatulai, and good morning, everyone. And it's a privilege to be able to join this panel. So maybe a starting point is just to reflect on not only our presence in Africa, but also our history. Founded in 1862, Standard Bank actually has its founding roots in trade. So there's a natural extension of that into trade across Africa, intra-Africa trade, and certainly the way in which we participate in supporting the objectives of AfCFTA. I'm going to perhaps answer the question from a slightly different perspective and spend a bit of time talking specifically about some of the processes as one of the areas that I look after in terms of how we show up and how we contribute to harmonizing processes, but also then contributing to trade finance regulations. So from a bank perspective, we spent a substantial amount of time unpacking intra-Africa trade, the value chain, and all of the friction points as part of very deliberate but phased steps to contributing to what I'd describe as the building blocks which support the harmonization of trade finance regulations. It is complex. I'll talk to three themes that add to the complexity and that each of these potentially touch on regulations, and each time you touch on a friction point that extends the value chain and the supply chain, and that adds to complexity and cost. So physical infrastructure, as we've unpacked the process flows behind trade finance, we've really looked deeply into trade finance in the context of our clients. So physical infrastructure, really understanding what happens when goods flow via road, via rail, via air into different countries, the road networks, the port and the border crossings, etc. We've then looked at quality infrastructure. We heard some of that yesterday in terms of the certificates of origin, and very much working alongside our clients in how, in order to build Africa's productive capacity and value addition at source, we participate with specific sectors. Agriculture is an example where we have a strong capability and presence. And then the third one is the technical or technological infrastructure, specifically to support the flow of information between different parties. The main purpose obviously being to facilitate the flow of efficient processing of documents that should, in time, enable goods to clear customs and be released as quickly as possible. So the reality, when you dig deep into these different processes, they all rely on a significant level of manual intervention. That hasn't changed, and there's legacy transactions or legacy processes involved in that. Yesterday we heard from Bridget Harrington, the CEO of AGOA Coffee in Rwanda, about her company's challenges in getting through customs, obtaining customs clearances. And again, yeah, that really just delays flow, but also erodes trust amongst SMEs, MSMEs, in how do they practically grow their business into new or different markets. So it's really something that we need to solve for. So how are we then approaching this? So our view around the regulatory environment is also not to just build solutions from a top-down perspective, but also bottom-up. So unpacking specific elements of the value chains. As an example, document checking forms a long-standing step or process in the trade finance environment. And in many instances, document checking has been done by manual intervention, individuals actually looking at forms and checking the correct details. So we've implemented technology that enables us to, through machine learning, look at documents, interpret them, and when you consider the complexity of trade finance in the letter of credit environment, under UCP 600, there are 400,000 rules. For your average MSME to try and navigate that and to ensure that we've got the correct terminology is exceptionally difficult. So what the system does is, again, to reduce friction, simplify and interpret the documents, identify any errors, and that's reduced processing time from anything from an hour just to process one transaction to literally minutes. It's not the only solution, but it's a combination and an aggregation of things like this that over time will contribute to harmonizing and simplifying the automation of trade finance.
Thank you.
And then the final piece I'd maybe perhaps reflect on, it's come up a couple of times this morning, as it relates to foreign exchange settlements or payment settlement. Again, how we utilize technology, blockchain-enabled capabilities becomes quite important in simplifying this process and experience for MSMEs in terms of flowing funds across border. Again, here we've built a specific foreign exchange and currency settlement system that enables seamless, straight-through processing in the hands of an MSME. So what that means is that you aren't going through multiple steps, multiple individuals, and again extending that payment cycle. So the result of that, through the process, we've now achieved a 90% straight-through processing rate. We don't have it certainly in all of our countries as yet, but most certainly it is growing. We've doubled volumes of transactions and values through the platform. And so it's through this bottom-up approach of understanding where the friction points are, creating those digital, that digital alignment between forms that we can then create that connection into those cross-border environments. And then the final piece that I would add is certainly not that we have perfected this in any way just yet, but from a business and commercial banking perspective, our intra-Africa trade corridor that we refer to is actually now our largest trade corridor from a business banking perspective. And business banking is that segment that serves MSMEs right the way up to commercial entities. So steps that we are taking in the right direction, clearly lots more to be done, but we certainly are starting to see the benefits of that. I'll stop there.
Thank you, Thank you, Mr. Robertson, and thank you for making the link with innovation, with the importance of innovation for trade finance, and it was discussed in the first plenary session. I will finish this panel discussion with the last question to Mr. Achobe Vusa, Director, Treasury and Interbank Relations, Vista Group, from Vista Group. And I want to discuss with you the role of development finance institutions and export credit agency. They play a crucial role. We have listened to Mr. David Benson earlier. They have played a crucial role in supporting and mitigating risk of SME engaged in trade finance. My question to you, Mr. Vusa, is are there successful models or case studies where DFI and ECAs have supported SMEs in this capacity? And how can DFIs and ECAs provide guarantees, insurance, and concessional loans to reduce the risk associated with lending to SMEs engaged in cross-border? We only have 5 minutes left. Just, it's not a pressure for you. But
Thank you, Rama. Thank you to everyone. Good morning, everyone. So to be straight on the point, we at Vista, early this year in January, we signed an agreement with Africa Guarantee Fund. We are talking about an amount of 50 million euro to guarantee loan to SMEs. And this agreement was signed with Vista Group and Africa Guarantee Fund. We are working currently with ATD and also Garanco to have the same agreement. But to go straight to the point, sometimes the process is long. Even we were talking with BI early this year to have a partnership to unlock liquidity and to give those liquidity to the SMEs through our platform. But our friend DFI based in Western, and I want to be provocative, sometimes when they look at the risk on Africa, they say, oh, it's too risky, we need this, we need that, and at the point, the discussion even stopped, right? So I think there is some discussion to have with our partner in Western, and even in local. First of all, local. We need to build an African capital market. When, as a bank in Kenya, I want to raise money, I'm not obliged to go to Europe and raise Eurobond. I can raise money in Africa. And this is something we have to look at seriously, very seriously, because we are in block, Western Africa, Eastern Africa, Southern Africa, so everybody is in his block doing his business, but we are talking about trade between Africa. So we need to build up a financial capital market for Africa. I think this is the key point we need to highlight and put in the statement. Another point I want to raise up quickly, the World Bank statistics say that there is around 5 trillion liquidity available for sustainable finance. I think this is something we have to look at seriously also as bank DFI in Africa, how we can tap in this liquidity. We are talking about 5 trillion, and even this year is 6-something trillion US dollar. So how can we tap on this liquidity and then to our SMEs that will have a sustainable impact on the ground? So to be straight on the point, I think this is something we need to look at. In Vista, we are working on those programs with IFC, with Proparco. Even we are talking with European Bank of Investment to have some part of this liquidity. We are trying also to build up a branch in France that will be in Western area. So the risk is less than what DFI said when it saw us in Africa. They said it's too risky. Another small point, to be straight, like you say, you put pressure on me. I think something also we have to look at is the risk-weighted asset by central bank. Central bank said risk on SMEs is 100% in Africa. How can bank finance something central bank is already saying is risking 100%? So I think it's something also we have to discuss, how central bank can reduce the risk-weighted on SMEs. So Rama, you put pressure on me, but I try to be straight on the point. Thank you very much.
Thank you so much, Mr. Vusa. And I just want to finish on what you said, because this is the role of banks to finance the SME and trade finance products. And what you mentioned here is like reducing the scope of financing SMEs. Just to wrap up the session, can I have 3 minutes? please. Okay, 5, thank you. I want to wrap up this discussion because we mentioned it earlier with the importance of capacity building and training initiatives for SMEs as they provide the knowledge, skills, and networks needed to access and manage trade finance effectively. To all of you, and this is the same question, what are the best practices for financial institutions to effectively engage SMEs and improve their financial literacy regarding trade finance? You all have 1 minute.
1 minute. Thank you, Rama. To me, I go back to the commercial bank, the private sector financing, rather what we call the mainstream financing. The success of unlocking access to credit will be how much have we crowded our population to the private sector financing. So I want us to work together with the commercial banks, and they need to set up the academies, financial access academies, so that we can mainstream the principle of financial inclusivity. I'm a football fan, and I'm an Arsenal. Forgive me if you're not. And one of the things why we ardently support, we visit Rwanda here through Arsenal, and you know that. One of the reasons why we do that, they do well, is because they nurture. There will be players. Why aren't banks, EcoBank, UBA, why are you also not nurturing your will-be customer? Why can't you also put much more effort, 50% of your effort in technical assistance, building an ecosystem that is supportive? I think if we did that, we would have given them capabilities that can enable them to borrow in the market. Thank you.
Thank you. Mr. Suleiman.
Me, I will throw back that point to also my colleague from government to say what is also the government doing and making sure that the public procurement is given, SMEs are given access to all those contracts in the same countries. So what are governments, why can't we have rules for some of the government to say that if we have a contract up to $100 million or 100,000, I don't know, an amount, this would be given to SMEs by priority. So, and that's important because that will give also comfort to the bank. And talking about best practice, the view or historically, whenever we've had these consortiums or associations of SMEs or association of SMEs and public entities, where there's a common vision to say, let's make sure we give this access to this bank, but there's a post monitoring after the financing to ensure that each member of those associations meets their obligation. We found that the credit risk or the risk loss on those partnerships has been minimal. So I think there's also a point to really foster there between government and also SME association with commercial banks.
Thank you, Mr. Suleiman. Mr. Adeleke Adeyemi, what is your point on this?
Yeah, for us in UBA, we've realized that the MSME section of the African play is very, very important in liberating the poverty level, increasing employment, the turnover and the contribution of our people to their GDP. And this is why we are focusing more on that. And when I spoke earlier, I talked about the capacity building financial literacy efforts we are doing within our retail banking outlets all over Africa. And we'll continue to do that. The partnership we signed with the AfCFTA, we are concentrating on key sectors, the agriculture and agro-processing area, the pharmaceuticals, automotive, transport and logistics, and let's say the truth. The truth is this. You see, the aspiration, the big, hairy, audacious, dare to dream aspiration of AfCFTA is not a one-man's job. It's not just for the Secretariat. It goes beyond that because the AfCFTA does not have direct control over some of the success factors that will lead them to achieve those goals. So it's a job for all stakeholders. Governments and the agencies, DFIs, banks like ours, the players too, and then collectively we have to work together in ensuring that we ensure that we get to the promised land. Because if we do, it's not only AfCFTA that is winning, Africa will win. The future of Africa and the AfCFTA is in our hands. Thank you.
Exactly. Thank you, Mr. Adeleke. And same question for you, Mr. What are the best practice?
Look, I'll just say technical assistance, capacity building, market development, these are all very important. And, you know, it's something that we definitely incorporate into what we do, the investments that we do at BI. Only yesterday at the AfCFTA conference in London, we've signed an agreement with our friends from EcoBank to provide a portfolio guarantee in Sierra Leone to enable small, medium enterprises, to enable the bank finance small, medium enterprises. And even before that investment came into being, we had led that with a technical assistance program, which was very helpful in helping us achieve what we're doing. So I think it's important for all the banks in engaging with development partners to be able to articulate what you would like to achieve from a technical assistance program, because that enables the development partner to be able to come to the table with some type of assistance that makes sense for your market. And just to end, on the subject of small, medium enterprises and the after, supply chain finance. I think it's one of our biggest undoings that we haven't managed to figure out how to execute supply chain finance in our continent. And to the banks and to the big corporates and to the regulators here, I think we need to continue to have conversations around supply chain finance. It's a huge panacea for SME lending and creating access to finance for these small and medium scale businesses. So we need to take that seriously and take a second look at it again.
Thank you so much. And the last word for you, Mr. Voza.
Thank you, Rama. I think my colleague talked about the financial side of capacity building. I'm a coach in development, personal development, so I will talk about leadership. I think there is a law in leadership, the law of the ceiling. You cannot handle your business if you are not up to this ceiling. So we need to bring SMEs manager to another level. We are talking about SMEs, they need to be big corporate. You cannot think big corporate if you don't have this leadership. I think as a bank, we need to partnership with schools, with leadership program, to do those kind of workshop, to help those managers to think big, not think small. So leadership, this is my key point. Thank you.
Thank you to all my speakers present today. Thank you for sharing your insights. I have a question, Q&A session. Yes, you? Yes. Is there some question in the room? Yes.
Thank you very much. A very good morning, good afternoon, ladies and gentlemen. This is a very interesting session, and I'm glad that we're all talking about SMEs today. My name is Dr. Ibiekure Jasper Eradiri, President, All Africa Association for SMEs, the continental voice for SMEs. Now, all the banks are here making beautiful statements about how to support SMEs, about how to grow SMEs in the continent. We are talking about engaging 100 million SMEs in the continent. Nigeria alone has 40 million SMEs. Then you can imagine what we need to provide for the SMEs to grow. And at the Biashara Afrika, what's important for us is to provide the critical ingredient for SMEs to grow, and that is finance. And when we talk about finance, we're not talking about blended finance. We're not talking about patient capital. We are talking about a new financing system that will make SMEs draw down from the financial provisions of the banks. But unfortunately, the platforms you all operate, the templates you all operate, are colonial. They are more than 200 years, and they are perhaps Western-based. And so they do not fit an Afrocentric approach for finance for SMEs. They do not fit the design for Africa's SMEs, because you know SMEs in Africa are informal. You know that. SMEs in Africa are not only informal, but they are resilient in their informal nature. And beyond that, we talk about M-Pesa. M-Pesa is working, and that's why I love Kenya. I'm landing. So if M-Pesa can work, and it's working for the informal systems of SMEs, then it's innovation that is the approach. So can we have a new approach, a new recipe to finance? Can we have we're not condemning your present template, but you must redesign. Like Kenya said, you must rejig, you must re-engineer the financial system for the SMEs to be able to benefit. If you want 100 million SMEs and counting to draw down from your finance, to be able to create wealth in Africa, to be able to make the AfCFTA work, then we must talk about innovation. After all, you support and you are very comfortable with startups. Startups are a subset of SMEs. So how have you been able to work out an innovative approach, an innovative solution for SMEs to access finance? That's my position. Thank you.
Thank you, sir. I will let Mr. Robertson. Did you hear what Mr. says? Yeah, and I want you to answer your question, and we will finish with your answer. Thank you, Mr. Robertson.
I did hear the question. Can you hear me again?
Yes.
Okay, perfect. Absolutely. I think that it's a point very well made. What I can say is that certainly from a Standard Bank perspective, we're on that journey. We're fully aligned in making sure that we meet the needs of specific MSMEs in the different countries. And we also recognize that none of these markets are homogenous. That point was made a little bit earlier. So if I think about access to funding, there's 4 steps that we actually look at and that we've been working on quite deliberately across our different markets. Is it perfect yet? Absolutely not, but certainly we are making progress. So the access to funding piece, and it was mentioned a little bit earlier, supply chain finance. We've done quite a lot of work, and I'll reference Kenya specifically, where in specific business ecosystems, we've been able to, in the last year, successfully connect 22,000 MSMEs in a specific distributor network to solutions, in our finance solutions specifically. And so, through initiatives like that and many others that we are driving in different countries, we are starting to make progress, and we are certainly challenging the way in which things were perhaps approached historically. I think the second piece is most certainly linked to technical assistance. The access to information and advice. This is not just a reference point to a information repository on our websites. As an example, what we do here is we are very much focused in all of our markets in creating access to incubators and advisory or access to advisory content. So in many of our markets, we recognize that the challenges to ensure that MSMEs have the appropriate skills and expertise to ensure success, not only where they are now, but to grow into those larger corporate entities that were mentioned earlier, absolutely essential. So you'll see that this is hands-on access to skill support, proper incubation capabilities, and that continues to build. And then, within our own, when we talk about this theme of access to market, it's quite a broad theme, but very specifically within our own value chains, whether it is through our corporate banking type partners that we have in markets, or even commercial banking type clients, the way in which we connect SMEs into opportunities in those value chains is starting to build momentum as well. So it's linked to the technical assistance programs that I mentioned a few moments ago, but it's certainly not just, we don't leave the MSMEs to navigate their way through value chains by themselves. And then the piece that kind of encompasses all of this is making sure that from a digital and technology enabled environment, that the ways of simplifying solutions in the hands of clients that suits them most appropriately, whether it's through a smart phone device or through USSD capabilities. We spend a huge amount of time working with our clients. I know that I'm wearing a tie today, but I can assure you that most often you'll find me in the field really working with clients and making sure that we understand specifically what the needs and requirements are. So these 4 elements, as they come together, certainly starting to change the models and the approach. I do hear the gentleman's question and the challenge, and absolutely, we certainly need to be quite urgent in our response to MSMEs and the support that will then drive within AfCFTA. Thank you.
Thank you, Mr. Robertson. This is the wrap-up, and I thank all my panelists for sharing their insight today. I also thank you, Mr., for raising this important question. We have to finalize this session. Thank you to all of you. Thank you to all participants, and I wish you a good day. Thank you.
Let's give them another big round of applause, please. That's a wonderful session. They deserve even much time than they had, and that's because I've got a duty as a very annoying school teacher to ensure that we make time to our dinner tonight. We have dinner that's going to be outside of this particular premises, and so we need to ensure that we get there on time. Can we have a group photograph of the panelists and the moderator, please? And thank you very much, moderator, for that wonderful job done. After the conversation, we have a breakout, a split panel session. I'm going to announce the venues pretty shortly. But in the meantime, we have a conversation. Mr. Tades, can you please join the group photograph, please? Let's have that. So we have a conversation coming up next. Right after that, we have the next two sessions, very, very important sessions before lunch. Shall we please be seated for the next session? All right. So while that is being done, the photographs have been taken, can we have our technical directors to set up the stage for the next plenary, which is supposed to be plenary 4, conversation with the Chief Executive Officer, Corporate Council on Africa. All right, shall we begin to settle for the next session, and then we break out later after the session for the plenary sessions that are breakouts. One will be held in this auditorium, the other would be MH1 right after the conversation with the Corporate Council on Africa. No. All right. So for now, we are all going to remain in this auditorium for the conversation, please. All of us remain in this auditorium for the conversation, and it's starting right now, please. Good. Shall we please be seated for the next plenary session? Plenary session 4. Shall we please be seated? Let's get seated for the next session. All right. Distinguished ladies and gentlemen, let me, with a big round of applause, invite my brother, moderator for the next session, Mr. Jerry Ajololo. Let's put our hands together, please. Shall we remain seated for the next session, please? Thank you.
Ladies and gentlemen, in daring to invent the future of AfCFTA, it involves us taking our seats and being very, very enthusiastic about the next conversation. It's a wonderful conversation we're going to have about US-Africa trade relations. Humbly, I ask that we all take our seats and hold ourselves in readiness. Thank you. All other networking can happen outside. Thank you. As a big favor for our camera crew, is it possible for all our friends at the back to please fill the seats in front? I beg you in the names of the gods of Africa, please. We're beginning to look like the teeth of a growing child. Lots of holes in there. Could you please come forward? And while you're at that, a round of applause for yourselves. You're very kind people. Thank you very much. Such cooperation, that's the spirit of Africa. My name is Jerry Ajololo. I come from the warmest part of the earth. At the center, it's called Ghana. I come with love for this. Oh, please, put your hands together. Yes, that's the feeling. And that's the commercial capital of Africa, being the home of the AfCFTA. Today, I have the task of moderating a wonderful conversation, an uplifting one for that matter, on US-Africa trade relations. I'm here with an own face to Africa. She is currently the CEO of the Corporate Council on Africa. Make welcome yours and mine, Madame Florizine Lisa. She has done nothing wrong. Please, a round of applause. Madame Lisa, you have enjoyed a very distinguished career in global trade. We recall in 2003 you served as Assistant U.S. Trade Representative in Africa, where you led trade and investment policy toward about 49 African countries and also played a key role in the implementation of the Africa Growth and Opportunity Act. Am I correct?
That is correct.
It presupposes that your umbilical cord can never be cut from Africa. And so I want us to have this wonderful conversation on the future of US-Africa trade relations. If it pleases you, I want to situate this conversation on 3 pillars: the past, the present, and the future. Is that agreeable? Ladies and gentlemen, is that agreeable? Okay, so let's talk about the past. And if we're to go into the distant part, I beg your pardon, it will reveal individual efforts between the United States and African countries. But if we come to 2000, the year 2000, a very seminal moment in the life of our continent, you would notice the implementation of AGOA, the Africa Growth and Opportunity Act, where you, ma'am, had the chance of also being a major player in. What AGOA did for us was to open up the African continent to the US market through duty-free, quota-free, arrangements for several products. And today we can certainly testify of the enormous benefits that have accrued to the continent and to businesses in particular. Let me start on this tangent. Would you say that AGOA actually formalized official US-Africa trade relations? If so, what were the early challenges, what were the opportunities, and what were the benefits?
Well, thank you, Jerry, and thank you to the AfCFTA Secretariat, Wankele Mene, the SG, and all of his team for having me here for the second Biashara Afrika. I was pleased to be a part of the first one, and hope that we'll continue at CCA, the Corporate Council on Africa, to be a part of that dialogue here, looking at intra-African trade, but also Africa's role in the global economy. And on the question of AGOA and the past, I think it's important to recognize that at the time that AGOA was put in place in the year 2000, the focus with Africa had largely been on development assistance. And the move then was from aid to trade. And there were reasons why the founders of AGOA wanted to do that. One of them, an important one that caught my attention many, many years ago, was that Africa's share of global trade was about 2%. And in order to move from 2% to 3%, that process of capturing just 1% more of global trade was going to be equivalent to more than 3 times the amount of all development assistance that was going to Africa from everybody. And so we saw the power of trade to serve as an engine for economic growth on the continent, just as it has actually in other parts of the world. And AGOA's goal was not to make it easier for Africa to ship its raw commodities and natural resources to the US, but to actually facilitate and incentivize value-added trade. So we had trade partners many who could send, for example, pineapples to the US, but under AGOA, we were now going to be importing pineapple juice and dried pineapples and so forth, pineapple jam, et cetera, to the US under AGOA. And so the challenge really at the time was to promote the capacity in Africa to take advantage of AGOA. It's one thing to have the opportunity, it's another thing to actually realize that opportunity through more trade. And so at that time, shortly after AGOA was put in place, we recognized that we needed to provide development assistance, technical assistance, capacity building support to Africa to address some of the supply side challenges. And we did that through establishing, through the U.S. Agency for International Development, regional trade hubs, which then provided support to African entrepreneurs, small companies that were producing. Some of them were already exporting maybe to Europe or other places, but had not exported to the US. Some were companies that were producing products for local consumption or for the region, but had not yet exported to the US market. And as you said, Jerry, over the years, we have seen that AGOA has made a difference for many of the eligible African countries. They have tripled the amount of non-oil exports that they send to the US, everything from footwear and textiles and apparel and value-added manufactured, value-added agricultural products to the US market. I've had the privilege of visiting many of the AGOA facilities across the continent, and one thing that I am always seeing is that it's largely women and it's largely youth. And so we are pleased that over 300,000 jobs have been created in Africa over the years of AGOA. And now we're coming up on its expiration of the current bill. It's due to expire in September of 2025 next year. And so it's really critical that we work with our African partners, AfCFTA, the African Union, the African ambassadors in Washington. I see here the ambassador of the African Union, Hilda Sukumafudze. We're working closely with her and all of the ambassadors there in Washington to go up to the Hill and meet with members of US Congress and their staff to say, let's get it moving, let's get AGOA renewed.
You're coming into the present and into the future, but let's stick into the past a little bit. You talked about women and youth, and I'm glad to also inform you that through the protocol on women and youth, the first of its kind in the world, thanks to AfCFTA. Please, a round of applause. We're well positioned to take advantage of most of these opportunities, but tell us, in what other areas did AGOA build on the capacities of African economies and businesses in preparation for AfCFTA?
Well, I think that you know, the capacity, obviously, to trade amongst Africans, that has been the major reason that AfCFTA has been put in place. I know that's the present, but the goal for many, many years, even when AGOA was established, was to make it easier for products and services and people to cross borders in Africa. And we've heard over the last day or so of all of the protocols that have been put in place that make that possible now under AfCFTA. But in terms of AGOA, again, the capacity of Africans to produce for themselves and trade amongst themselves, and then to be able to supply the global markets, including the United States. We are a huge market, and people will say that maybe it's a bit complex to enter the market. So it was very important to help African entrepreneurs who wanted to export their products to the US to understand the market, in particular sectors, what were the opportunities, who were their competitors, to help them with packaging, and to help them be able to enter the market by attending some of the commercial shows that would be held in the United States. And the regional trade hubs would bring Africans to the US for these trade shows. And again, I had the privilege of visiting many of them in what we call the African pavilions of these shows, and to just be able to see for myself all the products, and to be able to know that Africans were being able to put their products before US buyers and know that they would do that. And I remember once being at the Fancy Food Show in New York, where there was a small company from Eswatini, and they were making jams and jellies, and it was a very small factory. I ended up visiting there later, and they had so many orders in the first day or two of the show that they had to say, no more, we are not actually capable of producing at the kind of volumes that you wanted. So scaling up is one of the things that AGOA capacity building is doing, allowing, it was almost all women in this factory in Eswatini, to be able to ship more of their products to Whole Foods in the United States. And so that kind of capacity building, support, technical assistance, especially to scale up and to keep orders going. Sometimes African countries and a company would get one order, and when they were finished with that order, they were like, okay, that was more than we can handle, and then they would not get future orders or would resist getting future orders. But we have seen over the years that capacity building can really help African entrepreneurs to scale up and supply the US market in larger amounts and meeting the demands of the US market.
A beautiful past of incentivizing value addition as well as building capacity. Let's now move to the present. So AfCFTA is here with the promise of lifting millions out of poverty in Africa. If properly implemented, it will also spur a new wave of prosperity for the continent. It is worth noting, all right, additionally, that about 300 African businesses, as we speak currently, have surpassed the capitalization of $1 billion. It tells us a lot that African businesses are going global and as such are desirous of more opportunity, but win-win opportunities. Madam Lisa, I come to you with this question. What would you say that the United States and American companies, or would you say that American companies and America in general have fully utilized or are fully utilizing the opportunities presented by Africa? If so, or if not so, what are the most significant barriers to increasing US-Africa trade that you believe AfCFTA can help address? And what are the specific measures you would suggest?
So first of all, I think we have to start by really commending Africa, the African Union, the AfCFTA Secretariat, for all the work that they've been doing in standing up the AfCFTA. This is no small feat, and CCA has been saying from the very beginning that the AfCFTA is a game changer for Africa, not only making it possible for Africans to trade more with each other, intra-African trade, but actually creating a huge market, 1.3 billion people, $4.3 trillion GDP economy across the continent, so that American companies, I know there are other ones as well, but we're just talking about the American companies, can now look at the African market and say, okay, I don't have to choose which of 54 countries I'm going to do business in, or I'm going to expand my business in. And Corporate Council on Africa, which has over 140 US and African member companies, multinationals, as well as SMEs, we've been promoting US-Africa trade and investment for over 30 years now. And AfCFTA is making a difference. It is providing the practical opportunities for businesses to expand in Africa and to take advantage of how the Africans are building not only regional value chains, but are now being inserted into global value chains. And this is very, very important. We're working with the AfCFTA and other institutions out in NAPAD, the Africa CDC, Afrexim Bank, to try to support more of the engagement, commercial engagement between Africa and the United States. And again, we've moved from aid to trade, and now we're talking about investment, which is also really critical, and investing in African manufacturing and value addition. This is really important, and we have CCA members who are doing this in key sectors in agribusiness, in health, where we're promoting under our Health Security and Resilience Initiative, greater African medical manufacturing, and also hosting a series of workshops on regulatory harmonization in Africa. So these are the kinds of things that CCA is very focused on in terms of looking at AfCFTA. And we even have funding from Prosper Africa to educate American companies about what AfCFTA is all about. Recently, we held a webinar on the African Automotive Strategy. And this was the first time that people were able to come together and hear what is the strategy for developing the automotive sector in Africa. This is the right time to do that with AfCFTA in place and a greater interest on the part of the US and our businesses to engage with African companies and countries.
You talk about the automotive sector, which also comes in together with agribusiness, it comes in with ICT, it comes in with pharmaceutical and medical transportation. These are the key areas of interest for AfCFTA. What practical ways do you think American companies and America in general can facilitate collaboration between Africa and the United States? I ask this also on the back of another observation. Your competitors from Europe and other parts of the world are actively engaging Africa. What is your approach? How different is your approach to this?
Well, I think on the issue of competition in Africa, you know, Africa offers a lot right now. You know, some of the fastest growing economies. The world labor force will be largely composed by the year 2030. I think half of the labor force will be from Africa. We have all of the youth of Africa, and that youth bulge is also providing an opportunity to pull them into the global market as well. And we're not there, US companies are not there, the US government is not there to counter anybody else. Our businesses, our members tell us they're in Africa to do business. And like many other countries around the world, not just China, everybody talks about China, but you know, lots of other countries are in Africa for the same reason that American companies and government are there. It provides an incredible opportunity in the key sectors that are driving economic growth and productivity all across the continent, whether it's in energy transition, whether it's in health. We know that during the COVID pandemic, before that happened, no one was thinking of producing mRNA vaccine in Africa, but lo and behold, we have American companies that are partnering with African companies in producing vaccines, not just for COVID, but malaria and other products, other health challenges as well. Okay. Automotive is another one, and then agribusiness, of course, is a fourth area. So I would say that the main thing is that the AU and AfCFTA have been promoting public-private partnership. They've been looking at what is the role that the private sector can play in advancing the U.S.-Africa trade, investment, and business relationship. And we commend them for that, and we actually stand by their side, as I said, taking on certain opportunities ourselves to make sure that American companies know what Africa offers and what AfCFTA now offers in terms of the African market. And then, you know, bringing our businesses to the continent for meetings like this, and making sure that they understand through trade missions, reverse trade missions, again, all of the opportunities for engaging with Africa and with African entrepreneurs and businesses. We also support the African governments in putting in place the right kinds of rules and regulations and laws that make it easy for businesses to come to Africa. And so that's really critical, that public-private partnership that drives the practical outcomes for trade and investment to grow between the United States and the nations of Africa.
So the first wave of globalization was, the implementation of AGOA, I beg your pardon, from the early 2000s. We've morphed into a second phase of globalization with AfCFTA now, and we're talking more sustainability, innovation, and digital skills. Let me ask this question that relates to digitalization. How can digital trade be leveraged to enhance economic cooperation between US and Africa, particularly in the light of digital trade initiatives under AfCFTA?
Well, this is another area where, I mean, the rest of the world has been trying to come together on e-commerce and digital trade for quite some time. And we really have to commend Africa, and we have to commend the AfCFTA, because just last year, the African heads of state adopted the digital trade protocol of the AfCFTA.
Sure.
And that protocol is now going to allow the kinds of data flows, the certainty and the security of those data flows to happen across the continent. And this is very important as an enabler, ICT and digital trade as an enabler across all sectors, right? And so, again, we were pleased the day after the heads of state adopted it. We were in Addis Ababa, and Corporate Council on Africa was really pleased to host the first briefing session for American companies on the digital trade protocol. Since then, we have also been hosting other events to make sure that our member companies and other US companies are aware of what that means for them in terms of their operations on the continent. And so digitalization in Africa is important. It's an opportunity that benefits not just outsiders, but frankly, it benefits local companies and African businesses. And we're very pleased to see that supported and partner with that.
Let's now take a peep into the future. Unfortunately, we don't have a crystal ball, but we'll try. In your experience, what are some of the lessons we here at AfCFTA can glean from, and especially in our negotiations and our trade practices and policies going forward? What would you advise from your experience?
Well, I think what's important is, so there's going to be new leadership, political leadership in the African Union in 2025. There's going to be new political leadership in the United States in 2025. I think it is another critical moment to look at the U.S.-Africa trade and investment and business relationship and see, how can we enhance that relationship. And I would say for the future, let's not just look at AGOA, which is a one-way unilateral preference program to allow African products, more than 6,000 products, to come into the U.S. market duty-free.
Okay.
Let's also look at other ways to enhance trade and investment between the U.S. We support the U.S.-Kenya Strategic Trade and Investment Partnership that's taking place right now. That's one country, but we're also interested in free trade agreements. We only have one free trade agreement in all of the African continent, and that's with Morocco, and that's a fairly old agreement, established some time ago. And I don't see any reason why, especially now that AfCFTA has established an open trading market, the largest free trade area in the world, why the United States should not be looking at Africa, looking at countries who are ready for free trade agreements. We're not going to push it on anyone, but there isn't any reason why the United States should not be pursuing, and Africa should not be pursuing a free trade agreement with the United States. We are still the largest or second largest market for many African countries for their exports. And why not have permanent duty-free access to a market such as the U.S. market, which, as I said, is a large market and also an important market for African nations. So for the future, let's look at all of the opportunities for supporting it. The last thing that I would say about enhancing the opportunities, we have a number of U.S. government agencies that are looking at ways to facilitate greater trade and investment between the U.S. and Africa. Prosper Africa, the U.S. Export-Import Bank, the Development Finance Corporation, and Departments of Commerce and State and Treasury. All of these are agencies, Millennium Challenge Corporation, that have significant resources and are looking at Africa and saying, how can we support U.S. businesses to engage with African businesses so that we can enhance the public-private partnership and relationship, the economic relationship that the United States has with Africa. There isn't any better continent, in my view, for the U.S. to really look at enhancing that relationship. And so with new leadership in the AU, new leadership in the U.S., agencies that have been set and are ready to support that on the U.S. side, and African governments who are also doing all of the right things on their side to set up the right regulatory and legal environment to promote trade. I think that, this is a time that we can be very hopeful going forward. And I'll just say President Biden was supposed to be making his first trip as president, he's been there before, but as president to Angola. Unfortunately, that has to be rescheduled because of the Hurricane Milton that's headed to the U.S., which is, they're predicting it's going to be more devastating than any hurricane that we've had. So he is not able to go now, but we think that it will be important as this trip is rescheduled because for CCA, we are partnering with Angola to host the 17th U.S.-Africa Business Summit, which will be in Angola, in Luanda, Angola, in June of 2025. We hope all of you will be there, come to be a part of the U.S.-Africa Business Summit. Whoever is in the U.S. administration will have high-level delegates from the U.S. administration. African heads of state will be there. And Angola will be the chair of the African Union next year as they celebrate their 50th anniversary of independence. So it's a very important time for them, not only as a nation, but in terms of leadership of the continent. So the summit is not just about Angola, it's about U.S.-Africa writ large. And again, we're looking forward to hosting that event. We're looking forward to bringing new members of the new U.S. administration to Africa to see what Africa is about and what it offers.
It is clear that the future of U.S.-Africa relations certainly is one of promise. However, we need to transition. There's a transition that has to be made. In your estimation, how should this transition be made taking into account your organization together with other organizations that facilitate trade between the US and Africa. And I want you to speak on the themes of AfCFTA's ambition, AU's Agenda 63, and the SDGs. In closing.
Well, as I said earlier, I think that everyone is clear that Africa as a continent plays a critical role in so many things. There's no challenge that the world faces now that can be addressed or resolved without Africa being at the center of that and being a partner in that. Whether you're talking about fighting pandemics, sure, whether you're talking about addressing climate change, whether you're talking about meeting the SDGs, whether you're talking about youth empowerment and employment, women's empowerment, there are no key issues like that, like those, that can be addressed unless you are looking at Africa, unless you are working with Africa, not doing it for them, but with them. And so, in closing, I would just say that AfCFTA is a new opportunity, a new day, a game changer. We need to take advantage of that. I would also say that, the things that are happening under AfCFTA will most certainly contribute to and are already contributing to meeting the Agenda 2063 goals. And having a partner like the United States, it doesn't matter that Africa has other partners. That makes sense for them to do so. But I think that it's really critical that the United States be seen by Africa as a key partner with them, and that the U.S. sees Africa also as a key partner with us.
Your submissions have made me understand that AGOA is just one of the various, trade policy initiatives by the U.S. government, but it has been the most impactful. Currently, there are calls for a renewal, although 2025 is the year that it is expected to expire. Your colleagues have made great strides. Senator Chris Coons and Senator James Risch have really sought to introduce legislation to renew trade partnership, but they are really calling for renewal and improvement. Let's close with this one. What should improve as we renew the relations between US and Africa?
Well, so first of all, even in 2023, Corporate Council on Africa was going to members of Congress and others and saying we must renew AGOA now. It needs to be a long-term renewal, at least 10 years. The Risch-Coons bill proposes 16 years. Yeah. We'd be happy with 16 years. But the key is to do it soon. We're hoping that during the lame duck period that a bill would be proposed that will go through and will reauthorize AGOA, as I said, long term. You asked about enhancements. I think one enhancement for sure is that instead of reviewing the AGOA countries every year, the annual review, which doesn't send the right signals to US buyers about the certainty of it, why not review them every 3 years? This is what's happening with other US preference programs like the Generalized System of Preferences. They're reviewed every 3 years. So that's one proposal. Another proposal which relates to what AfCFTA is doing is making sure that in terms of the rules of origin and cumulation, that North African countries, which are currently not eligible for AGOA, that those inputs to products that are made and shipped from AGOA-eligible countries are a part of the cumulation. That is very important. We couldn't add them, but we can certainly make sure that their inputs are counting towards AGOA-eligible products that are shipped to the U.S. And then there's graduation. That's something where we believe that countries like Mauritius that might be graduated based on their income, we believe that that should be looked at over a 5-year period. Let's not just the first minute a country is successful and moves into middle income status, and then we graduate them, and graduate them to what? Are we offering them an FTA? What are we graduating them to? And are we looking at the impact of their graduation on other countries? If you graduate Mauritius, that's going to impact Madagascar.
Okay.
Because Mauritius is investing in Madagascar in AGOA eligible production. So again, we don't want to emphasize too many enhancements that would keep Congress, the US Congress, from renewing AGOA right away. We'd like it done. We wanted it done last year. We'd like it done as soon as possible. If there are these enhancements I just mentioned that could be put into the bill and the bill move forward with passage by the US Congress, then we would like to see those done. But if there can be no enhancements, we're also in favor of just let's renew AGOA.
Perfection should not be the enemy of the good. Absolutely. Ladies and gentlemen, this is where I would allow 2 interventions, very short interventions. Keep it, bing, your name, your organization, and then your comment, suggestion. If you have a prophecy too, we'll take it. I see a hand here, please.
Good afternoon, everyone. My name is Simon Bakalo, a trade expert. My question to you, madam, is, and that was the last question you were asked, in terms of where you see AGOA in terms of renewal. Do you think the improvement or the renewal should do away with the non-economic issues when it comes to the agreement itself? And do you see the next phase not reconsidering, as you've mentioned, there are countries that will move from the level they are now to maybe a more advanced developing economy in terms of income? It should be dealt with at AfCFTA level, but not on country level. Do you think that is going to be possible? 2 questions in one. Non-economic issues which have bugged the agreement over the years, where the country said, okay, I don't want to import some fairly used stuff. You say, no, we're taking you out, just like that. And that brings me to the issue of dispute settlement system within that framework. Do you think that should be considered? And consider those you're having an agreement with. Thank you very much.
Thank you very much. And since you've been so greedy as to take 2 slots, well, please make yours very brief. And then, would you want to answer that first before we take another?
Well, let me see if I can answer that quickly. First of all, AGOA has always had eligibility criteria that go beyond economics or what Africans are doing in terms of their markets. Good governance, democracy, reducing poverty, those things have always been in AGOA since the beginning. I think the issue that people have, though, is that AGOA is seen now as the one tool that the U.S. can use when non-economic, non-market related issues arise. And from my own personal point of view, I think that we should look at a range of tools. If there are issues that the United States has with an AGOA eligible country, maybe about its foreign policy, for example, I don't know that removing them from AGOA should be the first and the only thing that tool, I should say, that's used. I think the United States has a range of tools that can be used, and we are encouraging them to look at all of those tools and not just AGOA to act. So I think that answers the main question that he had about eligibility and removal of countries. I would say that without a doubt, if a country has a coup, there's usually no debate. At that point, the country's out. But I can personally say over the years, all the years that I was privileged to implement on behalf of the US government and interagency, many other agencies, the AGOA, there have been countries who have lost their eligibility and then they've come back. And I won't start naming all of them, but I mean, there are any number of AGOA eligible countries that, as I said, unfortunately, they lost their eligibility, but a year or two later, they regained their eligibility. So we should also think about the fact that AGOA is flexible and does allow for countries to move back in. You can re-enter AGOA if you've met the criteria at any point. So,
and that's it's a very brilliant, question, because it was something we were discussing even before coming on stage, and it's interesting that you brought it up. Let's take the final one, and then we shall call it a day.
I think I saw this thing here.
Thank you so much. I'm called Amos Seromba, and I have a short question. You've been talking on the suspension of thumb countries from the AGOA, but we are talking about the free trade area, particularly on the AfCFTA. And when we talk about the AfCFTA, we are talking about the local production, which may lead to the exportation of some products via the African countries. But some African countries that were suspended from the AGOA, maybe because of some regulation that were impact on them. So regaining their eligibility, I think they were forced, to accept some regulations. So in terms of the free trade area, do you think, because some African countries they want to increase the production capacity, but because the AGOA country, the AOC, they want to benefit from the importation of their products. So do you think if we are trying to promote the free trade area and the AGOA is imposing some regulations to the African countries so that they can increase their import benefits, do you think the African countries will be able to, to participate in the AfCFTA?
Okay, that's a good observation. Let's take the last one in addition, and then we cement it.
Let me take this opportunity to thank the AfCFTA for giving me this opportunity and to give all of us this opportunity to discuss about Africa's growth. Where are we and where are we going? I have to thank you, Flory, for the work you are doing in the USA.
That's 50 seconds gone. Oh. So please shoot straight to your question, comment, or suggestion.
No. This was going to be a comment in the question. Thank you. We thank you so much for the work you are toiling left, right, and center to ensure the reauthorization of AGOA. And I'm saying, with those countries that suffer that 2 years that you spoke about, where they are removed from AGOA, and I would want all of us to know that it's the suffering of the women and the youth, but there's a political perspective on it. And I think we should really fight and do the best we can in this reauthorization. And also that during the LEMDAC session, things will happen. We are working very hard as Africa to domesticate this AGOA. So your efforts are really appreciated.
All right.
Thank you.
You have the last words.
So I think there are two issues I want to address very quickly. One is where people are saying that, either you support AfCFTA or AGOA, or you support AfCFTA or free trade agreements. And I would just like to posit that I think that there is a way to support all three. They are mutually reinforcing. AGOA is building up the capacity of Africans to ship their products to the US one way. AfCFTA is opening up the opportunity for intra-African trade and also global trade. And we have to support AfCFTA. It is critical.
Okay.
But it does not mean that we cannot also pursue more mutually beneficial relationships with countries on the continent, champions, and it can be done regionally. I can honestly say that we were negotiating an FTA with the SACU countries at one point, and that did not come to fruition, But I still think that an FTA with different regional groupings could work, and with individual countries that are ready for those opportunities could work, because then it would be two-way, and it would provide benefits not only in goods, but in services and so many other areas. So again, I do think that's important, and for the women and youth who are impacted, you will not have anybody who has a greater heart for them than me, than when a country loses AGOA eligibility. But I personally put that back on the governments. It's up to the governments to make sure that they do what they're supposed to do so that AGOA eligibility can continue for those countries and those women, youth, and all of the enterprises in AGOA eligible countries can continue without pause. And so our job at CCA is to continue to work with the public and the private sector, both US and African, to promote that. And we look forward to continuing to do that. And again, we welcome all of you to our 17th US Africa Business Summit, which will be in Luanda, Angola, in June of 2025. Thank you.
Before that, however, let me invite you this evening to our gala dinner, where I believe it will be good time to raise our glasses to the new future and prosperity of US-Africa trade relations. Ladies and gentlemen, a round of applause for Madame Florizel Lisa, CEO, Corporate Council on Africa. Over to you, Sam.
Thank you very much, Jerry, and I'm sure that you would have standing photography. But whilst the technical directors are fixing the set for the next session, let me take the opportunity to emphasize the announcement that was made by Jerry. We're going to have a dinner gala this evening. We'll be transporting colleagues to the site. It's going to be off-site, and so there will be transportation taking everybody, and that's why you see that we're being very strict on the times, because we don't want anyone to miss this particular dinner gala. So please, next session is going to be 1 hour, after which we go for lunch. 1 hour. Moderators, please, 1 hour. Otherwise, I'll be that annoying schoolmaster, please. And then after that, we head for lunch. So next session's parallel session 1, auditorium. This is where it's going to be. AfCFTA in support of sustainable pharmaceutical manufacturing in Africa. It's going to be moderated by James Pedersen. And then the parallel session 2, MH1, is where that is going to take place, catalyzing youth and women's entrepreneurship in the AfCFTA through digital trade, powered by AE Trade. MH1, that's where that is taking place. If you're interested in that, you might want to join that. For now, let me invite our moderator for this particular session, Mr. James Pedersen. A big round of applause and welcome him, please. Right, so exactly 1:30, we have lunch. All of us will head there, and exactly 2:30, we are back in this auditorium for the next plenary session. Very, very important. It will commence with a conversation, after which we'll have a plenary session right after lunch, and that's exactly 2:30. So lunch, 1:30, we are back 2:30 in this auditorium. Thank you.
Thanks very much. Good afternoon, everyone. At least it's a pleasure to be before lunch and not after lunch. We're just waiting for a few more chairs. No, there's 4. 4 plus 2. I'm going to ask the panelists to please just come to the stage, and then we'll do a quick introduction. Okay, please take your seats. As you can see, there is some change in faces on the panel. Joining us online will be Stavros Nikolaou. Stavros is the Head of Strategy and Development for Aspen Pharmacare in South Africa, one of the largest pharmaceutical manufacturers in Africa. Philip Tsaboto will be joining us as well. Philip chairs the Ghanaian Industry Association and as well represents the IFPMA, which is the International Federation of Pharmaceutical Manufacturers Associations. On stage, I've got Mr. Wesley Rono, who is the Senior Market Shaping Expert at the Manufacturing Division in Africa CDC. Got Edward Munyanganju, who is the Regulatory Ecosystems responsible at the Rwanda Food and Drug Administration, which is the regulator. And we've got Desiree, who is the intellectual property expert and responsible for the AfCFTA Secretariat. In addition to that, we will be blessed and have a quick introduction by my own colleague from Africa CDC, Dr. Abebe Bey, who will try and set the scene. I think, however, before we do that, but also knowing that time is very short, since this is a business forum, I want to unpack a few things in relation to pharmaceutical manufacturing, try to set the scene. The African pharmaceutical market is worth anywhere between 20 to $30 billion and is growing. It's growing at a compact annual growth rate of between 5 and 6% annually. So in many ways, there's a business case. The numbers somewhat speaks for themselves. The sector is, of course, faced with challenges, and some of our panelists will speak to that. We have a large part of our manufacturers which are M and SMEs who are supplying a domestic market, which is why it's very important that we will hear today about from Desiree on the continental trade perspective and also from Wesley on the pool procurement mechanism that Africa CDC is establishing. Because it's important that we look at the domestic markets and lift those manufacturers that supply domestic markets into the continent. The pharmaceutical market in Africa also has the characteristics which is perhaps different from general business perspective, is that the buyers of the product sometimes and in many cases are not the users. It's important to understand because we rely a lot on donors to supply many basic and essential medicines, vaccines, and diagnostics. Now, the fact that the buyer is not the user complicates some of the dynamics for buying African as well, which some of our panelists will speak to as well. And, of course, lastly, there is a sort of slight challenge in that we, as African pharmaceutical manufacturers, are up against manufacturers international, many from both India and China, who in many ways are years ahead. They have grown to a scale where they can manufacture, produce, sell pharmaceutical product at vastly reduced rates. Ironically, some of these manufacturers are supplying African manufacturers for fill and finish. So input materials are made by the competitors, which again complicates the business dynamics because as an African manufacturer, if you import your input materials from a competitor elsewhere, you're no longer in control of your entire value chain and price. And you're competing with the same company that you buy your input material for when it comes to finished products. So I think it's important that we keep some of those fundamentals in mind when we look at the African pharmaceutical sector. Also, that the Africa CDC comes at this from a perspective of building health security, as the Director General spoke to briefly yesterday, which, and Abebe will unpack what that means in practice, but it means that there sometimes may be a tension between the business model and the actual need and demands. So we are dealing with a different constellation altogether, and hopefully our panelists will help unpack some of those things. I'm going to call now on Dr. Abebe, who is the acting head of the manufacturing division at Africa CDC, to help us set the scene in slightly more detail. Please give him a round of applause. Abebe, thank you.
Thank you very much, Jens. Good afternoon, everyone. First, I would like just to thank AfCFTA for having this very productive and timely forum. I'm speaking about manufacturing of health products in Africa. So as Jens mentioned, manufacturing of health products, vaccines, diagnostics, medicines, is not only a business case, it's also a health security issue. We all know, I don't have to repeat it again, what happened during the COVID-19 pandemic. So, unless we really take matters in our hands, build our capacity of manufacturing on the continent, we will not be able to respond to outbreaks and pandemics in time, and by implication, we will not ensure health security of 1.4 billion people in Africa. So, since COVID, Africa CDC, the African Union, established the Partnerships for African Vaccine Manufacturing, PAVM, with a very bold goal of manufacturing 60% of our vaccines in 20 years, by 2040. This is a very bold move from less than 1%. Then what has happened since 2021? In 2021, in the middle of the pandemic, we had only a couple of vaccine manufacturers, small scale, in Africa. Last year, we have done a suppliers landscape analysis. How is the vaccine manufacturing ecosystem evolving on the continent? I'm happy to inform you that right now we have 25 manufacturers, vaccine manufacturers at different stages on the continent. Whether we need 25 manufacturers on the continent or less is another topic for another day. But out of the 25 vaccine manufacturing initiatives, 9 have already installed capacities, infrastructure is done, some of them have done technology transfer, some of them are in the process of doing technology transfer. Because we don't have the vaccine innovation R&D on the continent right now. Discovery research is almost non-existent. So we will have to depend on tech transferring from outside of the continent for the foreseeable future. So most of half of the 9 manufacturers have done tech transfer, and they are in the process of scaling up manufacturing on the continent. Most of them are on the fill and finish side of the manufacturing value chain. 3 of them, they're set to manufacture vaccines at scale in the coming 3 to 5 years. They have done the tech transfer, they have the required workforce they need, they have secured financing, and right now the challenge is who is going to buy those vaccines that will be coming out of our manufacturing facilities. So the sticking point is having access to market and then trade, intra-Africa trade. So that's why I said this forum is very timely concerning, vaccine manufacturing on the continent. So what has to be done? We in Africa CDC, we're in the process of setting up the African Pool Procurement Mechanism. It's led by my colleague Wesley. He will tell you the details of where we are in terms of the PPM. The whole idea is to consolidate demand and with 2 bold objectives. One, to support member states have access to the vaccines, the diagnostics, the therapeutics they need. And secondly, and probably more important in terms of health security, is to support our vaccine manufacturers. If you give them the predictable demand, they can plan for 10 years, 15 years, and then they can ensure sustainable manufacturing on the continent. But as much as PPM helps you in terms of securing market and consolidating demand, we still need to have a secured demand from our member states. As we speak, we're reaching out to member states, regional economic communities, to ensure that African member states prioritize African products when they make a procurement decision. That may have to come with some sort of premium that they should be willing to pay for our vaccines and medicines manufactured on the continent. On the flip side, we're asking the manufacturers to be innovative enough and to reduce the cost of production so that they would be competitive in the international market in the long run. And then we may also speak about preferential procurement. On the other side, the second challenge is trade. We've done analysis of the supply chain of input materials and raw materials in Africa for manufacturing of pharmaceuticals. You know, we have challenge in terms of supply chain of finished products, but input materials is also another big challenge, one of the biggest challenges. Unless the manufacturers have their input materials secured, then they won't be able to make it to the finish line. So we have identified 3 bottlenecks and interventions that we want to do. 1 is trade facilitation. 2, localization of manufacturing of input materials on the continent. And the 3rd is distribution and warehousing. Sometimes it's difficult to trade between 2 member states, neighboring countries in Africa, as compared to them trading with Asia or Europe. So trade facilitation, intra-Africa, eliminating intra-Africa trade barriers, and free movement of goods is very critical. So we all have a role to play. I can just give you an example of what the government of Nigeria has done recently in terms of the executive order by His Excellency the President to try to reduce tariff and incentivize access to raw materials for pharmaceutical manufacturing in Nigeria. This kind of incentives and interventions will really facilitate trade and also manufacturing on the continent. So I would like just to summarize by saying that these are market and trade are really critical challenges as we speak for our manufacturers, and unlocking this challenge will really unlock the potential of business manufacturing on the continent, but also ensuring our health security so that we'll have the necessary vaccines, diagnostics, medicines that we need to secure 1.4 billion people in Africa. Thank you very much.
Thank you very much, Abebe. So, without further ado, because we are short on time and there's a big fat clock reminding us here in front of us to make sure we stick to time, do we have our panelists available online? I'm looking towards the technical people. And yes, Philip, can you hear us?
Yes, I can hear you.
Good. Thank you, Philip, for joining. Since you are online, and there may be challenges with that, I would like to start with you as representing the industry in Ghana, but also representing some of the international manufacturers. I'm curious, and I'm going to unashamedly give you 5 minutes maximum. So please stick to time, because I'm the one that's going to be blamed at the end of the day. Quickly, Philip, what sort of trade-related incentives from your perspective, sitting at an international vantage point and representing international manufacturers, are you looking for to facilitate the trade, but also perhaps twisting your arm a little bit, how do you see that play in and the role of local manufacturing in that? Because we have seen that in certain countries, such as Nigeria and Kenya, in the last 12, 18 months, certain international companies have, for let's say, macroeconomic reasons, have discontinued production. So with that sort of as the backdrop, what is necessary from your perspective? Please, Philip.
Thank you very much for your question. Before I go straight to your question, I would like to highlight a number of key points. And the first among them is to highlight the fact that the AfCFTA has a unique opportunity to help enhance internal trade and supply routes, remove tariff and non-tariff barriers, and ensure the free movement, particularly of goods and people, particularly professionals. It can create stable business environment that respects business ethics, incentivizes local innovation and entrepreneurship, including intellectual property rights. And it can also help build sustainable healthcare systems and provide opportunities for the development of the pharmaceutical sector. Having said this, I would like to highlight 3 key concrete actions that can be taken to improve access to medicines on the continent. It goes without saying, as you move from one African country to the other, you are faced with significant challenge of inequities or weak regulatory systems. As a result of this, some countries tend to have high prevalence of substandard counterfeit products. And according to some data or research done by the PwC in 2019, it's been estimated that in certain countries, substandard products presence can be as high as 70%. This is significant. Hence, whilst recognizing the unique work done by certain countries' health authorities as reaching WHO maturity level 3, we need to continue the ongoing engagement and advocacy to support plans to strengthen regulatory systems through regulatory reliance and convergence in collaboration with AfCFTA, AMA, Africa CDC, and other regulatory agencies. The second point I would like to highlight is on policy support. And it's good you mentioned the unique example of the Nigerian government. I also want to highlight in Ghana as well, the health authority the Ministry of Health had already approved some broad tax exemptions for raw materials as a way of incentivizing more companies to go into local production. And it's worth noting that many of the companies that have had the opportunity to engage, some companies have rather resorted to producing some products locally instead of importing them from India and China, particularly because these incentives are making these locally produced products cheaper or less expensive, hence more accessible. And the last point I would like to highlight on support for improving access is around the fact that we need to continue to support the work of the Secretariat to combat directly and indirectly illicit trade and also improve business integrity on the continent. On the key point around improving investment in local, in pharmaceutical production on the continent and enhancing the competitiveness of the sector, I would like to highlight some key outcomes of the EU-Africa Business Forum, the 7th EU-Africa Business Forum, which was held. And there was a clear alignment between global and African local production industries around identifying key policy initiatives to be implemented to enhance the industry. And some of them include ensuring or putting in place sustainable financing mechanisms. Because it's worth noting that as you move from one country to the other, interest rates on loans for businesses can go as high as 50%. Transparently, as you mentioned, the topic around making medicines more accessible and reducing the price. It would not be sustainable to have companies procure or get loans at up to 40%, invest in their facilities and still be able to make these products very accessible. The second point I would like to highlight is on ensuring stable business environment that respects business ethics and the rule of law. Thirdly, provide incentives for local innovation and entrepreneurship, including through intellectual property protection and enforcement, because this will be a key enabler of increased investment in research and development. The other point worth highlighting around ensuring development and retention of local skills workforce, because it will be painful to train new workforce for many of the vaccine producing sites that are being set up all around the continent, only to realize that many of them are leaving for greener pastures. And it's worth noting that we need to work collaboratively to ensure we can keep this workforce in place. Before I conclude, I would just like to highlight two key points as well to facilitate and encourage voluntary collaboration, such as voluntary transfers and joint ventures between global pharma companies and African manufacturing companies on the continent. Yep.
Thank you, Philip. Thanks very much. So two key issues that you have touched on, we're going to try and address now. Intellectual property and the regulatory aspects. Coincidentally, we happen to have a regulator and the intellectual property expert from AfCFTA, by pure coincidence, on our panel. On the regulatory side, Edward, as a national regulator, what are some of the challenges that you are faced with, and how are you working to improve the issue of counterfeit drugs? We know that that is an issue that is at a lot of people's minds, and we've seen certain, we had a case in Gambia earlier in the year with substandard drugs that had fatal consequences. But also on the harmonization aspect, as a national regulator, what work are you undertaking at the moment to make sure that the WANDA regulator works with other regulators on the continent so we don't have to register? How are you addressing the harmonization going forward, please?
Yeah, thank you very much. I think first I can start by saying that for us, the issue of counterfeit can be a big issue because of the level of importation, the amount of importation that we have into the country. So I can say that 99% of the product that we are using here are imported. So it gives a room to everything, including counterfeit products. So what we are doing is, of course, strengthening the regulatory system. We have a national regulatory authority now that is trying to go through the benchmarking process of WHO to try to reach the maturity level 3 that our colleague was mentioning. This is going to be to help us to ensure that the product that we have on our market are safe and of good quality. This is very important. That's an area that the government of Rwanda is investing in. In terms of harmonization, this is something that has started through already the EAC and the continental level with the medicine harmonization, regulatory harmonization programs that started with the EAC, but also aligned with the MRH program of at the continental level. So we have joined this harmonization program since 2012, and then now we are still working toward the harmonization of processes across Africa. And then what I can mention is that with this MRH program now trying to pave the way for the AMA, and AMA is going to be hosted here in Rwanda, is an opportunity for Rwanda FDA, because we have resources that will help us to improve on what we are doing in terms of meeting the harmonized processes and ensuring the quality and safety of the product on our market. So I think this is what I can say on this. Thank you.
Thanks very much, Edward. So the AMRH is the African Medicines Regulatory Harmonization Process, which is an AU-led initiative to try and address these. Thanks very much, Edward. Desiree, From an AfCFTA perspective, and Philip raised intellectual property from one perspective, the safeguarding ownership of ideas and in some ways protecting that for the sake of business, because as we heard from Abebe, these are long-term investments, these are long processes, so intellectual property rights play a very important role. But from an African perspective, on the flip side, we also see that in some cases, intellectual property can be very much a challenge. How do you view that slight contradiction from an AfCFTA perspective and from an intra-African trade perspective, please?
Thank you, Jens. So let me just start by saying that intellectual property in the AfCFTA regime is complementary to the other regimes that we have. We have the regimes of rules of origin, we have the regimes of trading services, we have the regime on investment. Those four regimes are complementary to support the trading of local manufacturing and pharmaceutical products in Africa. So on the first side, I just wanted to also complement what Todibo said about the counterfeit product. It has to be clear, there is no way under the AfCFTA that counterfeit product will be part of trade. They will never have access to the preferential regime that the AfCFTA is providing. So that's one. Now, on the context of Africa, to support intra-Africa trade, what are we trying to do in terms of intellectual property? First of all, is to fill a gap. If you go across the continent, you will see that the intellectual property regime is fragmented. We have regional system, we have national system. So for the pharma sector, it's very challenging to know which regulation I have to go through if I want to really start producing on the continent. It means I have to comply with several regulations. So I'm not talking about the regulation to authorize the put on the market. I'm just talking about how even you enter the market. So this is the first challenge. So one of the solutions the AfCFTA is bringing is to provide with a continental framework so that once you want to run a business on pharma sector, in terms of IPR, you just have one single law, which be the AfCFTA, through the institution that we are going to establish, the AfCFTA Intellectual Property Office, where you're going to register your rights. Based on that, you can then have a preferential regime on those specific rights. That's the first one. The second aspect is about the trading regime itself. So any IPR that is attached to a product, in this case, as we are talking about pharmaceutical, once it's been put under the market with the authorization of the owner, the right owner, that product has the right to circulate. So that's what we call exertion of rights. So once you put it in the market with the authorization, the product has to go through the continent all over the place. The third one is about, I think it's the colleague who raised it, how it's difficult to trade between two countries because sometimes border measures by the customs administration make it very challenging for you to import and release the product on the market. So what we are trying to say to do under the AfCFTA is to avoid that transit measure, the transit regime of the pharmaceutical product should be affected by border measures. So the border measures should only be an exception to the transit. So the transit is the preferential regime that we are giving to all the products that are locally manufactured under the AfCFTA regime. They have to go through, they can go through, and then the exception will be to be held on if there is an inquiry, if there is a request of proving that it's not a counterfeit product. So this is the system that we are putting in place to make sure that the IPR should not be a defensive tool under the AfCFTA regime, but an offensive tool. Now with the promotion of the local manufacturer, maybe I can also highlight on that, we are having a specific provision to incentivize the local manufacturing. Rules of origin are useful. You can produce and then access the preferential regime. But once you produce, how do you commercialize? This is one element also we are addressing. So we have a provision to say, if you produce based on the rules of origin of the AfCFTA, then your protection under the AfCFTA must be longer than whoever produced not using the rules of origin. So this is an incentive for the pharma sector to really invest in Africa for local manufacturing, because we think and we believe that this is an era where we are still missing incentives tool to bring investment under the continent. And bringing investment on the continent is to create that conducive environment, but also to secure. If you look at 90% of the BIT that exists now, you will see that most of them have a component of intellectual property right. What it means investment subject to a secure environment of intellectual property rights. So that's one also solution the AfCFTA in terms of the protocol on IPR is bringing. So this is the set of measures that we are putting in place to make sure that the local production of pharmaceutical product is incentivized and it's increased to also boost intra-Africa trade.
Thanks very much, Desiree. I think you touched on some very, very crucial point linking to what Dr. Abebe said in the beginning about linking the market with the trades on rules of origins. And I think this speaks to why the collaboration and the coordination between AfCFTA and Africa CDC is so very crucial. Rules of origins links very much to where we get our input materials from. And as we've talked about, and Dr. Abebe mentioned it, we import lots of the input materials to do fill and finish. And that means that we may not qualify for the rules of origins requirements. But knowing that the backwards integration, in particular in the pharmaceutical and especially in the vaccine production sector, is a very long process, and in some cases very expensive, linking it to the investment issues that Philip said. I think it's very commendable, the transit measures that you speak about. As Africa CDC, and we'll come to that now with Wesley, is supporting manufacturers and pooling demand and procurement. We have to make sure it can actually move smoothly from point A to B. Because we know, as it is currently, for example, manufacturers in Kenya or in West Africa are still on price preferring input materials from, for example, India and China. It's cheaper than coming from other African countries. And the trade aspect, cost of logistics, etc., is part of that. So the transit aspect is very important. Thanks very much, Desiree. Wesley, from an African CDC perspective, the issue, and I'm going to put that as a little of an extra now, the issue of quality has come up a few times now. And we've been told in many instances, well, either it's too complicated to make vaccines in Africa, or some people, some practitioners prefer products that are made outside, or some of the notions that surround the potential quality. How, from the APPM, so the pool procurement perspective, are we making sure that we balance the access to quality with also supporting the African manufacturers? Because we are looking at it from a perspective, as Dr. Abebe said, of health security. And what work is Africa CDC undertaking at a policy level to link and make sure that countries in Africa also buy the African-made products? Please, Wesley.
Yeah, thank you, Jens. I think maybe just to say that the reason why we are here today also is because of exactly what you said. I mean, there are two key things here before we even talk about pool procurement. So one is the movement of goods that you just talked about, and this meeting today and for the next 3 days really speaks to that and the work that AfCFTA is doing. So for us, these enablers of free movement of goods and services is key to some of the interventions that we are doing at Africa CDC. And then the second part, of course, is for these goods to move, then there has to be harmonization of regulations and standards. So those two pieces for us are very important, and we work with AfCFTA and also the MRH to make sure that those happen. And then on the side of Africa CDC, for example, I think it was mentioned about pool procurement. So pool procurement is one part of a whole series of interventions that we are trying to put together to make sure that first of all, we improve access to health technologies, but more importantly, through localization of manufacturing. So making sure that we put in place interventions that reverses our dependence on imports, especially for vaccines where we're talking about 99% we're importing vaccines from other continents, as Abebe has said. So one of the things that we have done at Africa CDC is to try to address the supply side constraints, but also the demand side constraints of vaccine manufacturing in Africa. So one of the things that has come out clearly from some of the interventions that we do and the work with manufacturers is the demand side constraint. So despite the investments that these 25 companies have put in place for vaccines, the big question remains demand, addressing the demand side. So the pool procurement mechanism tries to address the demand side of that equation. And then you also mentioned about the issues around quality and also access. So beyond the pool procurement mechanism that we are also doing, we are also looking at helping these companies, especially the ones that Abebe mentioned, to address the issues around meeting the pre-qualification for vaccines to move from their countries to other buyers. And so we are working with them very closely. And then he talked about what our colleague from the regulator talked about. So it's also important that for the countries where these companies are domiciled, they have to reach maturity level 3. So we are trying to address those issues around the NRS, where these companies are based, farm level, achieving pre-qualification. And then on the demand side then, the vaccine market is very complex. So I think you mentioned in your opening statement, it's a complex market that has few buyers, few off-takers. You have a market that we are talking about, traditionally we talk about healthy markets, so vaccines to make sure that children in Africa get products, get vaccines at the good quality, but the lowest possible price. So this is a long established tradition of producing at the lowest sources, lowest cost production, perhaps in India and other places. But then we have these new entrants who are coming into this market in Africa, where the market is already fragmented. So some of the interventions that we want them to do is to consolidate the demand through the pool procurement mechanism that we are setting up. And then also, as Dr. Abebe has said, have discussions with countries on the uptake of these products from African-made vaccines. So in subsequent steps, we'll be engaging with member states to make sure that there is commitment to buy African-made vaccines. So I think I'll stop there for now.
Thanks, Wesley. Yeah. I think a very important point that you make is the notion of healthy market, which speaks to the fact that donors are buying a lot of our medical products, and that's based on price. And those products are then delivered, donated to Africa, which in some ways is undermining our domestic industries and our domestic production. But it's a conundrum that we are in because we have to convince donors to buy products made in Africa as well. I see Stavros is now online as well. Very timely. Stavros, thank you very much for joining us. Can you hear me?
Yes, I can indeed, Jens, and my apologies for dialing in a little late.
Not at all. Better late than never, Stavros. From an African manufacturing perspective, Stavros, and you have been at the coalface of African manufacturing. Aspen was producing COVID-19 vaccine. Aspen has earlier shown interest in the Mpox vaccine as well, and manufacture pharmaceuticals, some of which are exported outside of Africa. So I've got a very varied sort of business and solid platform. From your perspective, in terms of trade, to supply more of Africa, what mechanisms would be the key unlocking factors for you as Aspen in South Africa to be able to supply more of Africa? And secondly, what policies have you experienced that has been supportive as an African manufacturer to help you grow to where you are now? What, perhaps, if any? Please, Stavros.
Yeah, great. Thanks very much. And again, it's a great privilege to form part of this panel and to participate in what is an exceedingly important conversation. Can I firstly say that as an industry, we devised a simple 4-point plan. And this plan, I will, in 30 seconds, just tell you what the 4 points are to the plan. But they all pertain to policy issues. So whilst we try and engage ourselves in a dialogue on the trade, the tariff, and the non-tariff barrier issues, none of those can be resolved until and unless we resolve all the policy issues. So to meaningfully and realistically get African pharmaceutical manufacturing off the ground, these are the 4 points, in no particular order of preference. Number one is we need a much more streamlined regulatory, a more integrated regulatory process. Part of this is external, part is internal. The external bit is that the WHO pre-qualification mechanism is not supportive by no design of its own, but it's not supportive of accelerating pharmaceutical manufacture on the African continent. The internal part, of course, is the AMA, and we need to land the AMA with speed and haste. If we don't achieve this, then it's going to take, for example, an African vaccine producer, and I don't want to confine this only to vaccines because it's much broader, the conversation. But for a vaccine producer, it could be 5 or 6 years before their product is available to be procured by in the African continent. And then if you've got contracts from UNICEF and Gavi, which extend 2 or 3 years, it could be a very long time by the time you are in market as an African company. That means that you are disadvantaged, you're on the back foot, because others will come into the market and will dictate the terms of the market. The second point is reform of the procurement mechanisms and platforms of the international procurement agencies. Here I'm referencing PEPFAR, where I think there is progress. I'm referencing Gavi, I'm referencing UNICEF, UNITAID, Global Fund, and others. So unless there is reform of the procurement mechanism through off-takes and set-asides, then I'm afraid we also won't succeed. The third area of reform has already been mentioned, and that's pooled procurement. And then the fourth and final point speaks to technology transfers. Now, Africa at this point in time does not develop in the main its own technologies. It's dependent on technology transfers, and it is indeed disappointing that the tech transfer models have regressed over time. So medicine's patent pool, for example, is not the model that they use, the VL model, as commendable as it's been in increasing access, is not fit for purpose for African producers, because Africans do not produce their own developments, their own technologies. They rely on the intellectual data, they rely on the file from others. So that part needs to be fixed. And then lastly, we've also seen recently with antiretroviral, the long-term injectables, again, we've seen a situation where Africa sits with 70% of the world's HIV-infected population. Sub-Saharan 68%, but not one single license lands with an African producer. So in closing, why have we gone backwards? Because the models that were used 22 or 23 years ago, I can cite Gilead as an example, were full technology transfer, know-how transfer models, where the data was shared with the African producers. We now seem to have moved away from that to a VO license, which is not fit for purpose, as I was saying, for where Africa's capabilities presently reside. So we need to change that as well. If we do these 4 policy interventions, I believe we can set Africa on a completely different pharmaceutical pathway and trajectory. But it's going to require a lot more political conviction and a lot more alignment on the continent in order to achieve that. My very last comment, Jens, is I see immense benefit in the Africa Continental Free Trade Area. Not because we don't have a lot of tariffs, incidentally, in pharmaceuticals, so it's not about tariff reduction. What I do see is an ability to coordinate and cohere and aggregate volumes on the continent so that the continent's producers can leverage those volumes. And that was what was sadly lacking during COVID. So for me, one of the many benefits of the Africa Continental Free Trade Area is the ability to aggregate and leverage volumes for pooled procurement. And I see a very strong synchronization between what the FTA is doing and will do and what Africa CDC is doing and will do. Thanks very much for allowing me this opportunity.
Thanks very much, Stavros. I think it's interesting that even in the context, as Stavros mentioned, of HIV, we have spoken about COVID, we're talking about Mpox and also Marburg, but even in the context of HIV, where drugs are not necessarily that new, we are still, due to some of the systemic challenges, relying on imports and drugs made elsewhere, which I think is a good example of just some of the structural challenges that are needed to be addressed for the African medical manufacturing to sort of become sustainable. Thank you very much, Stavros. I think we've got a few minutes left. I'd like to very quickly open up to see, because we do have a very solid panel for the floor, if there are any questions. If not, I will hold the mic and I will ask a few questions myself. I don't know if there are mics in the room. Please just stand up if you have a question. Someone's waiting for lunch. So with no further ado, I'd like to ask, and I'll start with Philip and Stavros, and then I'll come to our panel members in person. In one sentence, from the perspective where you are sitting, what would be the ask to, one, the Pan-African policymakers, such as ourselves, Africa CDC and AfCFTA, and to our governments in Africa in strengthening and making African pharmaceutical manufacturing sustainable? In one sentence. Philip, can I start with you, please?
Yes, sure, Jen. Thank you very much. I would say briefly round up to the AfTA Business Forum, the AfTA Secretariat, the Africa CDC, and the IFPMA, which represents the biopharma industry, have been engaging on a dialogue to support the mandate of AfTA to leveraging the potential of free trade across the African continent and to create the ecosystem that accelerates progress for sustainable pharmaceutical sector through a multi-stakeholder approach. This includes promoting intra-African trade, investment, manufacturing and innovation, specifically research and development on the continent. My concluding remarks is we need to continue looking forward to continuing this discussion towards a common objective that supports the pharmaceutical industry in Africa which drives a peaceful coexistence between the biopharma industry and local manufacturers, because there's clear benefits that each industry can gain from each other when they coexist, in terms of supporting shaping of policies, building capacity of ACPs, and directly supporting voluntary and a more collaborative tech transfers across the continent. Thank you.
Thank you, Philip. Ecosystem, yes, it's a complex process that we're embarking on. Stavros, you mentioned a 4-point plan, but if you were to boil that down to one sentence towards our policymakers and our leadership, be it us in the AU or be it our member states, what would be your priority?
So very simply, yes. I'll give it to you in 3 words. We don't even need a sentence. It's urgency and implementation. Just those 2 words. So we were able during 2020 and 21 as a continent to set up AVAT, which was a procurement platform to procure vaccines. We were able to do that in 12 days. So we should really, if we are able to treat this as an emergency, which it is, because look at Mpox now. We were caught again with our pants down. The whole world was. So we need to stop talking about these things and start implementing them like we did during COVID with AVAT. So urgency, implementation are the 2 things. Thank you.
Thank you, Stavros. Indeed, if it can be done in an emergency, it should be feasible in a non-emergency context as well. Desiree, your wish list in one sentence from an IPR perspective, please.
It's just to fast-track the implementation of the AfCFTA to support the development of a local manufacturing sector in Africa, and then to ease accessibility and affordability to local manufacturer product.
Thanks. Edward, as a regulator, you sit on the government side, and a large part of what you do links to a domestic, but also an international market. With your sort of international partners as well, strengthening the regulatory capacity in Rwanda, Rwanda being key in trying to establish manufacturing as well. What's top of your wish list in one sentence, please?
For me, as a regulator, I would say it's to fast-track the establishment of the African Medicine Agency as a central coordinating body of the regulatory activities. So, because you don't want to have different applications from different countries, from different processes. So if we could have these well coordinated, that would be a good thing for our market. Thank you.
And thanks, Edward, and we look forward to Rwanda hosting the AMA. Lastly, Wesley, from an Africa CDC perspective.
Okay, I think for me it's one message: buy African-made products. So on our side and other agencies of AU, we are making sure that the quality of these products are of international standards. So, but what we need is commitment to buy. So member states to commit to buy African-made products, be it vaccines or other products that we talked about. Influence the ecosystem, even if your budgets are being supported by donors, there is the opportunity that we have vaccines coming to market from African-made vaccines coming within the next 5 years, coming into that space, commit to buy. That's the message we want from the member states. For the HIV products that you talked about, we have companies in Africa which are pre-qualified, but they are still not, the member states are still not committing to buy from these manufacturers. So, message, buy African-made pharmaceutical products. Thank you.
Thanks, Wesley. Yes, we're talking about donors, but we mustn't forget that if we want others to buy the medicines and vaccines made in Africa, we must buy them ourselves, very much so. We're out of time. I want you to please give a big round of applause to all of our panelists. Philip, Stavros, thanks very much for joining online, and have a good day further. And the rest of us will go to lunch here. Edward, Wesley, and thanks very much. Lunchtime.
Okay. Hungry.
Okay.
Let's give them a big round of applause again, please. And just a quick, important announcement. Just a very quick, important announcement. The shuttles for the Biashara Afrika Gala Dinner tonight is going to depart at 6:30 from here. 6:30 from Kigali Convention Center all the way to the hotel where we would have that dinner gala. So please make sure that you are there on time so that we can all go on time and come back on time. Thank you very much. Lunch is served. Thank you. Ethiopia Airlines, a big round of applause for them. Better Than Cash Alliance, a big round of applause. EU Tough, let's put our hands together for EU Tough. Breliwa, let's put our hands for Breliwa. Yes, if I got the pronunciation correct. And then we have very important media partners who are carrying almost everything that we are doing in this auditorium and beyond out there for the world to see. First is CNBC Africa, a big round of applause. Africa 24 is a big partner to the AfCFTA Secretariat, a big round of applause for them. Distinguished ladies and gentlemen, thank you very much. We are next for the big conversation that we're about to hear. Is going to be moderated by Lerato Mbele, and a big conversation you can't afford to miss, as I've said earlier. Let's put our hands together. A big round of applause for moderator for that next session.
Dying to stand at this podium. I might as well just do it now for a moment. Thank you so much, Samuel. Thank you to all of you for joining us after lunch. We're going to have the conversation now about an issue that keeps coming up. What happens at the customs and revenue services level? We spoke about single windows yesterday. We spoke about duties that are paid. We've spoken about the fact that, even under the Guided Trade Initiative, some of our entrepreneurs and exporters were having trouble on the receiving end of some of the countries where they're exporting. Now, of course, it's a patchy picture. It has not been the same experience for everyone, but this conversation is about those who are very much at the nucleus of trade. I just want to quote a few statistics to you. According to the World Bank, the AfCFTA, if implemented correctly, will improve trade volumes in Africa by 57%. That's game-changing. And if implemented correctly, it will immediately add $500 billion, $500 billion through customs revenue across the African continent. And so customs becomes very much the epicenter of where the story of one unified African market is going to play itself out in handling the volumes, but also in handling the revenues that will trickle down into GDP and then have the multiplier impact that we spoke about. Our conversation this morning or this afternoon is with the Nigerian Customs Service. And they received a huge commendation yesterday when Madame Chinwe Ezenwa, in our panel plenary yesterday, spoke about the fact that she is 0001, the first ever Nigerian exporter to use the AfCFTA protocols. She is under the Guided Trade Initiative, and her experience, she said unequivocally, was smooth and streamlined. She gave huge credit to the Nigerian Customs Authority for moving her consignment without hassle, attrition, any problems. We also just heard before lunch in the conversation around the anchored pharmaceutical programs, how reforms in Nigeria have incentivized investments in the pharmaceutical sector and the bringing in of technological transfers and skills to create an ecosystem for pharmaceuticals. So I don't know what it is, but something is happening in Nigeria that is creating an ecosystem and an environment of change and transformation that bodes well for the African free trade, continental free trade area. And our conversation right now is going to do exactly that. We are debunking myths around customs authorities, and we are debunking myths about Nigeria. And so with those few words, please help me welcome warmly our in-conversation discussant, Alhaji Bashir Adewale Adeniye, the Comptroller General for the Nigerian Customs Services. Alhaji, thank you so much for your time. And let me assure you, everything I said is genuine. It happened in real time, live in front of this audience. Did the Nigerian Customs Services not get a commendation from Mrs. Ezenwe yesterday?
Thank you.
And in a moment, I'm going to ask you to tell us what it is that you've done to make a woman like that so happy to move her consignments. But before, they say you are the Comptroller General. Now, English is my second language, third language even, so I don't know. Is it Comptroller General or Comptroller General? Do we pronounce the P?
Thank you very much, Lerato. And good afternoon, everybody. Good afternoon, Africa. It's my pleasure to be here. It's a shame I wasn't here yesterday. I had one or two things to attend to on my way here in Lagos, and this accounts for my absence. And what a way to start. The difference between, or what the P is doing in controller. When you control a space, you are in charge of it. When the space you are controlling has some revenue connotation and implication, you had a P. So it's something that we inherited. It's one of our colonial vestiges, and we never bothered to ask questions. We just took it like that, and so it's been controller. When you are in charge and revenue is involved, you are controller. As we're here, you are moderating this session, you are controller of the session. So if people pay money
I am the
for us to be
controller
part
with
of
the
this,
P.
yes, I become the controller of the session.
Oh, I like that. I
Yeah.
control the session, but if they paid for this,
Then
you remain the
I
controller.
remain the controller because I will collect it.
I guess it's an apt way to begin then, because as the Comptroller General of Nigeria, you're not just facilitating trade, the movement of goods and services, but you are collecting that revenue for the country and its GDP. So could you tell us a little bit about the work that you've done, some of the institutional reforms you have brought about, the operations, and perhaps tell us a little bit about your staff and personnel that in this moment of change, how are you changing not just the systems and operations, but the attitude of your staff?
Okay, let's look at this way. It's not just in Nigeria. For most customs, for most African countries, the customs mandate has evolved over time. In most of our societies, we played the gatekeeping role. So you have a geographical entity, and then you have these sets of people that are there to check what was coming in, what was going out, and then you pay, you collect royalties, and then you render those royalties to the kings and the emperors in those days. And over time, it has evolved. First, trade got involved, security got involved, public order. We remember what happened during the COVID years when, you know, it was very, very important who cross what borders and, you know, what eligibility and admission criteria that you have. So because this has evolved over the years, I mean, in terms of the mandates, the dynamics has also changed. And so the approach, you know, to the job has also changed. But September 2011 was actually a watershed because it's now emphasized the security part of our mandates. A number of tools were developed for customs to be able to guarantee trade in a secured environment. So if you talk about Nigeria, a very vast country in terms of size, over 900,000 square meters, in terms of borderlines, over 4,000 kilometers stretching from the Gulf up to the deserts. So it's quite a very big, it's a very vast area. And so if we line up people from one place to the other, we are not enough. So we have about 15,000 officers in customs in Nigeria as we speak, and I dare say that we still need more hands to police the borders because the dynamics are changing, the challenges are there and they are growing. And so what we have done was that first we need to have a very good understanding of our role. how the complexity and the volume of international trade has changed and has imposed on us more responsibilities than what we were doing before. So now we have to embrace the use of technology, we have to work with other partners, and then we have to change our narrative from the mere and narrow perspectives of revenue generation and embrace other areas like trade facilitation, maintaining public order, public health, and so on.
So what you're describing is a gargantuan task. It's not just about what's coming in terms of a good. It's who's bringing it, what they're bringing. Does it imperil the system? Does it enhance the system? Does it grow the economy? But it's not just any economy we're talking about here. This is Nigeria. I know you guys always say we're the giants of Africa. I won't dispute it. Not today. It's like you're testing me. I won't dispute it. But it's a market, 220 million people, largest petroleum exporter. And also Nigeria, unless my figures are wrong, is a huge importer of goods. Almost 70% of what's consumed in the country is imported. Just the petroleum bill alone for the first quarter of 2024, petrol imports in Nigeria came in at 2 trillion naira, Q1 2024. Yeah. Big money, big consignments, big market. All under your stewardship. Please tell us.
It's a very big task, just like you have said. And the expectations are no less bigger in terms of what the government expects from us. And over the years, the expectations have always been wrapped around how much of revenue. Doing all of those tasks you have described, it is about how much of revenue Nigeria and the customs brings in support of the national budgets. So every year we get a target, and then the following year the target is increased by some percentages, and then it goes on and on and on like that. Most of the time there are no scientific basis for you to increase those targets. But then it is increased, and it is seen as a KPI for your performance in office. And there's no better way to understand, how this, there's no better way to understand the futility of this than when you consider a year like 2019, when we had some challenge with our neighbors, and our borders were closed, the major borders that accounted for about 40% of our revenue was closed, the one with Niger, the one with Benin Republic, the one with Cameroon. But then the revenue target was increased by 25%. And so this was, something like a disarticulation, in our fiscal policy formulation. So you still expect duties to be brought in from borders that were closed. So this has been the lot of virtually all customs administrations in Africa, where we still look at them that they must bring in all the duties, all the revenue that we need to fund national budget and things like that. But luckily enough, the narrative is changing. In Nigeria, we had a new government last year. We had a new act last year. The new act made specific reference to trade facilitation. The new act made specific reference to implementation of the African Continental Free Trade. Then the new government that came said, we want to position Nigeria as the most efficient trading nation. The new government says we want to decongest the ports. We want to encourage exports. And we therefore, as responsive government agents, have no choice but to key in into those basic policy visions and ensure that what we do responds to those needs. And we were very, very deliberate in ensuring that we want to take our attention completely away from revenue and ensure that we do things that will speak to trade facilitation, promotion of exports, and creating a new experience for those people who use our ports.
So what you've spoken about or referred to is the political economy of the work that you do. When there's some instability or there's a COVID pandemic and lockdowns, The borders are shut, but you've got to continue your work whilst upholding that level of safety and security, but generating revenue. Similarly, when there's a government change and policies change, there's an incentive, there's an enabling environment, and so it makes it all the more easier to do your work. So there's that confluence of the system politically and the work that you do day to day operationally. But now that we're talking about the new government and the mandate they've given you, which aligns very strongly with the objectives of a single African market, the implementation of the protocols of the African Free Trade area, what exactly are you tasked to do to match the regimen of the AfCFTA with your priorities and your national priorities?
I've mentioned the first one. We have a new act, and we are under obligation to implement the act because the act specifically makes provision for implementation of AfTA. On the second level, there can be significant trade if we do not give attention to exports. You have given the number for petroleum, petrol that we trade in Nigeria. Not much is going on in the area of non-oil sector. And so government is very deliberate, encouraging our exports. We have dedicated a command that's, whose attention is just going to be exports. It's a very big command, and I'm sure that that is one of the things that Madam was talking about, Madam Ezenwa, because they used to have a lot of problems in terms of documentation and bureaucracy when they want to export to Nigeria. Yeah. We are gradually addressing that, and I believe that this would be a problem of the past. About a year ago, there was a viral post that came up and talked about how much it takes to do business of exports, to export a container of a product from Nigeria, in comparison to some other markets in Africa. And when my attention was brought to that, I said, look, there's no point debating it. We all know, even inside this place, there are people who have had experience taking things from one part of Africa to the other. The nightmare that is involved, the payment system and all of that. Yep. And I said, what we now need to do would be for us to challenge our business process. How can we do this in a better way? How can we ensure that our exporters have a better experience than they were having before? How can we remove all the bureaucracies around our ports? How do we address the issue of corruption that many people have accused us of? We cannot deny all of this, but we can make gradual progress, even if it is some little incremental changes that we are making in our business processes, in what is happening around our ports. And I'm happy that we are gradually getting there. First year on, PEBEC has ranked Nigeria Customs Service as the most improved government agencies in terms of the ease of doing business. And I want to believe that, thank you, I want to believe that this is just the beginning. We now have to do more because they are in the validation stage. We now have to do more to remain number one. And I've set my eyes on that number one position. We don't want to lose it. So we are likely going to do more in 2024, 2025 than we did in the last 1 year to make sure that we create a better experience for our exporters.
I'll tell you, this morning I took a cursory look at the Nigerian trade portal. It was succinct, to the point. But what it does do is it says, if you want to export, these are the steps you need to follow. It's a 3-step process on how you apply or request certification, what documentation you need to provide, and then what the criteria will be for that certification. You've then uploaded a watermarked replica of what a certificate looks like so that people know what it's supposed to look like. And then you've also then added a payment system. So I am seeing a merging of the digital with the advocacy and the teaching, with the getting stuff done. Could you just talk me through that process?
Yeah, well, there is a Yoruba proverb. The Yorubas are in the southwest of Nigeria. So if anybody is promising you a new dress, if I promise you, Lerato, I'm going to get you a new dress, the first thing you do is you look at how I am turned out. Am I actually wearing a good dress for me to be able to get you a new one, a good one? So Customs is one agency in the entire chain of export, the export chain. There are so many other agencies of government. And what I've seen in Nigeria and so many other African countries is that the act of finger pointing, oh, they are the one responsible for this, they are the one responsible. So we spoke to our team and I said, those things that we are responsible for, let us address them. Technology, it's very, very important. We were speaking with, I was having a chat with the SG this morning and we were talking about, creating awareness around AfCFTA and things like that. Even exports in most of our African countries, information, awareness about it is still a problem. So the first thing was, let's have that portal, let's bring out information in a very clear and concise manner on the ABC of exports. But we went beyond that. I had very robust engagement with all these other stakeholders that I'm talking about. So NEPC, the Nigerian Export Promotion Council, we went to them. They play a very, very critical role. And I had engagement with them. I said, look, we need to redefine, the experience of our people when they want to export to Nigeria. And now we're working together. We have platforms, under which we interact. NPA is the next major one, and that's the Port Authority. The accusations always centers around containers having exports that are getting rotten when they are queued up in the ports. And Nigeria Port Authority akin to that, and they are also now on board, creating a dedicated lane for export-banned goods. In addition to a number of export terminals which they have created, and we are keying into that as well by sending our officers to those terminals so that when they finish documentation in those terminals, they will no longer be delayed when they get inside the ports. So gradually it's working. Is this the best we can do? I will say no. We still have some areas that we can improve upon, particularly in the areas of the various regulatory authorities, the food and drugs, the standards and things like that. Gradually, we will also get them into the net and let them have that awareness that the more we grow exports, particularly those going to the African markets, the more prosperous our economies will be.
Okay, so you've raised a few things here, and that is the synergy that you need with other export promotion agencies in the country. Simple things like, acreage and how long people wait to receive their goods, the consignments that are just sitting on the waters of the sea waiting to enter the port. So a lot of that work is being done to synergize and harmonize the work you do. But one African market now you need to replicate that across 54 countries. And what I'd like to know is, what collaboration, if any, have you embarked on with, let's just say, ECOWAS, for argument's sake, and then you can move on to other regional entities? What lessons can Nigerian customs learn? And what experiences can you share so that they avoid those pitfalls?
Okay, let's take them in layers. First, with the regional economic groupings. After I've told us several times that this would be the building blocks for realizing the objectives of the African continental market in the first instance. In ECOWAS, we've had this experience spanning over 20 years, the implementation of the ECOWAS trade liberalization scheme, and we have quite a lot of experience in that area. The most important part is the challenge for customs administrations to have a good understanding of the rules of origin, because that is the heart of implementation of any integration arrangements, whether it is a customs union, whether it is a common market or an economic union. Rules of origin is very, very key. And for us in customs, this is where we're centering our capacity building programs around. So we've introduced this into our curriculum for the basic entrance. When we joined customs 20, 30 years ago, there was nothing like this. So the new generations of customs, we need to bring them up to speed with these dynamics in the world that we are moving increasingly towards continental trade, towards regional blocks and things like that. So we're exposing them to what they need to know about rules of origin rules. The second is that in our training programs, we are also having a number of studies embarked upon by our officers. We send them off to other customs administrations to learn from their experience, to see what they do. So in the last 5 years, for example, because before I was appointed the CG, I was in charge of our Command and Staff College. Our officers, 50 of them, twice a year, they go to selected African countries, and then they learn from their experience, they see what they do in terms of some of these challenges. And the thought is that when I became Controller General, it became easier for me to say, look, we must leverage on the experiences of other customs administrations. Look at authorized economic operators, for example. We know that we can learn a lot from WCO or all these advanced countries' economies, but we chose African countries that have started the implementation of AU to learn our lessons from. Yeah. So we sent our officers to Uganda, we sent them to SARS in South Africa. In the next few days, they'll be going to Togo. So for us to understand what was the experience in AEO as we're running the pilot stage, so that by the time we launch the program in Q1 2025, we would have had a very good understanding of the experiences of African private sector, you know, in international trade.
And when you're sharing knowledge like that, what is the common gripe or the attrition that's felt by yourselves as the customs services authorities? I can tell you what exporters say. We can all tell you what exporters say, but what are the frustrations on your end?
There is a lot. We need a lot of coordination amongst government agencies first. I sit here as a critical agent of government, but we can do with better coordination amongst all the government agencies. What we expect, what we experience in the import side, the staccato banging, the lack of coordination, is also, we also see it in the exports frontier. So we need a better understanding, better coordination. We need better use of technology to drive our operations. More importantly, we are not sharing enough data between the customs agencies and organized trade, and then between one customs agency and the next customs agency. Now that customs administrations have been picked as the competent authority under the GTI, there will be the need for us to share data, you know, in a very secured manner and in a very trusted way that, you know, we make it easier for us for the implementation of the various programs that we're doing.
Okay, talking about a kind of a Pan-African view, I've been made to understand that this year, 2024, there is a customs theme, and that theme is customs engaging traditional and new partners with purpose. Customs engaging traditional and new partners with purpose. So what are your undertakings concerning this theme, and how are you living the spirit of it?
Okay, so I still go back to what I've said, because our mandate has evolved over the years. Gatekeeping role, generating revenue, security, and things like that. Customs, as we are composed, cannot do it alone. We need all of these partners. Some of them have been traditional, and WCO recognizes that we've had traditional partners, those that we work with in the port, for example, the port authorities. There are government agencies, drug law enforcement agencies, police, army, and all of that. But then, because of the new role that we are paying, there are also new partners. You know, in Nigeria, for example, some of these partners have been organized, you know, in sectors. The Manufacturers Association of Nigeria, for example, is a very huge, you know, player in Nigerian economy. In fact, they are represented in the board of Nigeria Customs Service. Wow. And they make demands from governments, and, you know, partnership with such an organization, you know, makes it easier for us to address their needs, because they contribute over 30% to our GDP. And if we are able to address such people, you know, it makes our job easier. Those that are involved in healthcare, you know, there's a body called the Healthcare Federation of Nigeria. Earlier this year, government approved an executive order that gave concessions, various concessions to importation of materials that is needed for healthcare delivery in Nigeria. Implementation of this will require that we have very good partnership, with this sector, so that the implementation of the executive order will be very easy. And we've been engaged with them. And so last year, when we had the Controller General of Customs Conference, which is hosted by the CG every year, we brought all of these partners, we brought them together under one roof. They all participated during the conference. And one of the remarkable things in that conference was that we produced a declaration, which we call the Lagos Continental Declaration. It was held, it was named after the hotel in which it was held. And a number of issues were raised, which captured those challenges that you have addressed. Oh, we want to do this in the ports. You have too many agencies disturbing us. We have problems lodging our entries and things like that. And we highlighted all of those items, and we gave a commitment that, look, there is a timeline in which we are going to address all of these issues. And each time I had meetings with them over the last 1 year, we take stock, how far have we gone in this? And I can assure you, this is one of the first issues that we are going to take during the next CG's conference. As soon as we start the conference, we are going to bring up this document up, and then we say, how have we fared in the implementation of this, so that partnership with them will give serious meaning to it. It's not just going to be a talking shop where we talk and then we forget it. We meet a year after. So we are very, very, serious and intentional about, implementing all the commitments that we undertook during those kind of conversations.
Right. So you're taking a lateral view, because in as much as you have fellow trade-related agencies, you recognize that the drivers of trade, the manufacturers, the producers or importers of pharmaceuticals, perhaps those in the automotive sector, the petroleum sector, they're a key part of the ecosystem. It's their goods you're ferrying, and they need to have a say. And so you bring them into the conversation. I'm going to ask a question, and then I'm going to defer to the floor. So just by a show of hands, does anybody have a question? Please stand, sir. Please stand, sir. And one last one. Going, gone. So I'm going to take those two questions. But before I take them, it would be remiss for me not to latch on to something you said earlier on. Exporters, importers are frustrated by a variety of things: the bureaucracy, the time, the lags, the number of documents they have to fill in, all of those things, and the corruption. And unfortunately, and it's not just a uniquely Nigerian problem, customs and corruption feel like two peas in a pod. The words are used interchangeably. But there is a perception about Nigeria. And I know perceptions are not real, but they enforce sentiment. And there is just a view that Nigeria is difficult to trade in because everybody is looking for a kickback. What are you doing to address this, Vice?
Okay, yeah, let's look at it this way. And I'm not going to pretend about this. I think there is an African proverb that says, a cockroach is never innocent in the gathering of fowls. But then we're having a very honest conversation, and it's important that we put it in perspective. One solution to your problem is for you to accept that there is a problem. And we have accepted that there is corruption in and around the ecosystem. So when I say the ecosystem is not just in customs, there is a port system where we have all other agencies that are involved and things like that. I think I was speaking with a Nigerian Minister for Aviation, and we were trying to say, what can we do in the airports? We're having so many reports of, passengers arriving and then officials greeting them, happy weekend. And we all know what happy weekend could mean, or could, the meaning you could give to happy weekend. WCO, as the World Customs Organization, has designed a number of tools for us to implement in terms of the Corruption Perception Index. We've held one just before I became Controller General. And the reports looked at our business process analysis and identified some areas, where there were red flags that, look, these are all places that are vulnerable for corruption, and we are already addressing it. We're doing a time release study. A time release study is a scientific tool for us to determine the time and the cost of doing business. There's so much time back and forth that is wasted when there are negotiations going on around the release of a container. The costs will also be affected. And WCO is helping us to conduct that. We picked a major port where we have a lot of importation of vehicles and cargo, which is Tin Can Island Port. We're doing this study in conjunction with a number of stakeholders, including the WCO. I've looked around this hall and I've seen some of those stakeholders. This report is almost ready. We are hoping that during the CGS conference, we will release the report. We've identified areas where that are prone to corruption. Right. And you see, in all of these places, the answer may not just be take the customs officers, go and kill them, or go and crucify them. Some of them speak to the issue of the law. Some of them speak to the issue of the processes. Some of them speak to the issue of the operating environment under which we work. We also administer a code of conduct on all our officers. In the code of conduct, those things, those acts that are permissible under our laws are clearly stated to them, and all our officers signed up to those code of conduct. So those are some of the things that we are doing. Okay. But as we address this, we will also talk to our stakeholders that it takes two to tango. Yeah. So when you want to ask for equity, for God's sake, we must come with clean hands. Yeah. Those of them that are compliant, as many of them that are compliant would not be allowed to be exposed to those corruptive tendencies in our system.
Okay. I guess when somebody says to you, Nigeria, happy weekend, I should just respond, not for you. Yes, sir. Could we get a microphone up front? And, okay, whoever gets it first, go ahead. There we go.
Thank you very much, and I want to congratulate the controller from Nigeria. I'm John Bosco Kalisa. I'm the vice chairman of the Council of SMEs in Rwanda, but I also, previously I used to be the CEO of East African Business Council, and I also run a firm, a business advisory council based here in Rwanda. The reason why I'm standing here, last year we did a study with the UNECA looking at why a number of SMEs are not trading across the borders. And that study revealed that 57% why SMEs are not trading across borders is because of customs, complex customs procedures. Very complex customs procedures. Of course, embedded with corruption. And I'm happy this Biashara is happening here in Rwanda. And in East Africa, we've been a champion among the RICS in terms of trade facilitation. There is always a conflict between revenue collection and trade facilitation. And that's why I'm saying I'm very happy to see that customs are coming up to that function. Usually they mute that function of trade facilitation at the expense of revenue collection. Okay. So my question, when you look at even East African COMESA, we came up with what we call simplified trade regime, where goods worth $2,000 should not be subjected to rigorous customs procedure. And I've been pushing with CFTA to raise that threshold to $5,000. Women who have goods less than 5,000 can trade without being subjected to customs procedures. But a number of agencies have refused. And I'm asking my brother from Nigeria if you have that special treatment for SMEs less than $5,000 so that they don't go through rigorous and complex customs procedures.
All right.
Thank you very much.
Thank you. Can we get the second question? And the last. Could we keep it brief and succinct, please?
So my name is San Mbakalo. I'm from African International Trade and Commerce Research. Over the years, there has been this call for single window system for Nigeria. When are we going to have this in truth and in reality, where exports under AfCFTA will be key into this? Because I strongly believe if we have a single window where every agency will be broadcast, and it will cure a lot of issues that we are facing now. Sir, when are we going to operationalize it?
Okay.
Give us a timeline. Thank you very much.
Thank you. Two key questions.
Very key questions, but let me start with one story, and this is a real-life story. We've all heard about the Japa syndrome, where young Africans are leaving the shores of their countries and they're going out of the continent. And there was this particular guy in Nigeria, left out of frustration, and he placed a call across to his senior brother. Hey brother, how is he doing? He said, oh well, the situation is still the way you left us. You mean things? I said, no, things are actually getting worse. Okay, oh, God will keep us. How about our dogs? The guy said, dog? That God dog is dead. He said, Abba, why are you this mean? You could tell me this news in a fairly better way. He said, how am I supposed to tell you that the dog is dead? He said, well, today you could just tell me that the dog climbed the roof, and then the next day you say the dog jumped down, and then the third day you say the dog is dead. He said, well, anyway, how is grandma? He said, okay, grandma climbed the roof. Well, he got the news, and I just hope that intra-African trade will not climb the roof and drop after the third day. This same study, John Bosco, UNECA told us in 2022 that the volume is actually declining from almost from about 14% to 13%, which was in between 2022 and 2021. And this is a challenge for all of us. Now, it is not all down to complicated customs procedure. The procedures are part of it, but then when trading is done across the border, we need the data. A lot is going on between all our African countries. In Nigeria, you find goods that are manufactured in Nigeria in places as far as Burkina Faso, Mali, Cote d'Ivoire, and things like that. But they are never reflected in any of our records. Those goods are traded, they are zero rated when they are traded, but they are never recorded. So most of the time, what customs authorities and national authorities want is a document to show that trade has occurred across the border, and we have the data. As part of our study tours that I mentioned before, we visited a border in Tanzania, and we saw how they were able to use mobile phones to capture the trade that was going on across the border. And we're actually going to revisit this to see what lessons we can draw from this and possibly embrace and adopt it in Nigeria. And this is what I would recommend for many customs administrations, so that in a very, very, very simple way, we capture what is going on around the borders. Okay. About this time last week, I was in a forum organized by SMEDAN. SMEDAN is the government agency in Nigeria that is looking at the development of small and medium enterprises. And this was the issue that we were discussing with them. The good news is that right from this level, at the level of being small scales, we are already embracing them, we are already engaging them, and I'm happy to announce here that out of the 11 companies that were admitted into our pilot authorized economic operator program, 2 of them are actually SMEs. Okay. And we're already teaching them how to be compliant. We're already teaching them how to fill those forms and how to approach the completion of all the documentation around the borders in such a way that it makes it easier for them. Single window is not just going to be a buzzword, I assure you, Mr. Kalu. This time, there's been efforts in the past, just like you said. What is different now is that there is a very high level of political will exhibited by the government of the day. Right from the first day, the president promised that single window is going to be a major item of his administration. A steering committee was formed less than 2 months into administration. I'm a member of the steering committee, and I can assure you that we have moved to the level of conducting the business process analysis. We've already shopped for vendors that are going to provide the equipment and things like that. So in terms of timeline, I want to believe that by next year, we should start moving towards testing the single window.
And I think on that good news and that commitment, we can say thank you so much for your time, Alhaji Adewale Adenye.
Thank you very much, Lerato. I hope this fabric was traded under GTI.
Completely, always. I will say this, I did my best to control the conversation, but I think you are the controller.
Thank you very much, Lerato.
And let's do it better for the two of them, the moderator and the controller of Customs Service of the Federal Republic of Nigeria. Thank you very much. Your Excellencies, distinguished ladies and gentlemen, we have our next two sessions. So we have next two plenaries, I should say. Plenary 6 is going to happen now. Plenary 7 will follow next. We have AfCFTA, or AfCFTA. It's going to be moderated by Ms. Anita Eskin, and that's coming up next. But whilst the technical directors are helping us to set up the stage, I'll take the opportunity to go through those who have made this program possible again for us. It is important that we acknowledge the people who sponsor us, the people who make these trading activities possible. Distinguished ladies and gentlemen, first on our list is our platinum sponsor, the African Development Bank. Shall we put our hands together for them, please? Let's do it better for AFDB if we want to keep getting it all the time. Partners include the African Union Commission, Afrexim Bank, MTN, Standard Bank. Let's put our hands together for all of them. Other sponsors, Vista Bank, VW Move, EcoBank, UNDP, Arise, Kenya Airways, Rwanda Air, Ethiopia Airlines, Better Than Cash Alliance, Raliwa, EU, TAF. Let's put our hands together for all of them together. Like I said earlier, without our media, we can never go out of this auditorium. And thanks to CNBC Africa and Africa 24, we are reaching the world. Let's put our hands together for them, please. Thank you very much, distinguished ladies and gentlemen. Let me take the opportunity again to make one quick important announcement that I've been making almost all day. And that is at exactly 6:30 this evening, 6:30, we would have a vehicle or bus will be here to transport everybody to where we're going to have the dinner gala tonight. It's going to be out of sight from this particular location. The KCC, we're going out of this location. You don't want to miss it. There's going to be a very important engagement with a very important personality. Together with the dinner, you can't afford to miss it. So the transportation would be available 6:30 on the dot. Please be punctual. Thank you. Your Excellencies, at this point in time, we'll invite the moderator for this particular session, Ms. Anita Eskin. A big round of applause, please.
Thank you, Sam. Thank you, Sam. The room is half full, but because we're talking about issues where women are concerned, we will make the kind of noise that makes the building believe that the room is indeed full. Each and every one of you in this room today will represent women in marginalized parts of the world who don't have the opportunity to be amongst us. So ladies, are you in the house? Let me hear your voice, please. We've already had lunch, so it needs to be a little louder than that. Ladies, are you in the house, please? Thank you very much. Now the highlight, the conversation is her AfCFTA. As excited as I am to have this conversation, I'm also very respectful of time. And so we have 60 minutes, which is what I've been promised. We have a wonderful panel this afternoon, a fine blend of women who are in the field, a fine blend of women who are in policy. And most importantly, there is one thing that each and every one of us is coming together to propagate, and that is we need to do better for women on the continent of Africa, women of African descent living in the diaspora, and indeed, ultimately, pushing the women's agenda forward. Because as I've said before, and I will not shy away from it, the prosperity of Africa, I do believe, is in the hands of its women. Ladies and gentlemen, allow me to yield the podium to our very first speaker. For 5 minutes, the wonderful president of the Africa Business Council, in the person of Dr. Amani Asfor. We will indeed start off this conversation, one of the most great and wonderful women I have ever encountered. Dr. Asfor, the floor is yours.
Thank you, my dear sister. My brothers and sisters here, it's really very important about AfCFTA her. What does it mean, AfCFTA her? What we as women, how can we do it and increase our intra-Africa trade from 16% up there? What is needed? What is our strategies? We have heard all our women when they speak about the hurdles. So we have summarized it. Actually, I call it the triad of empowerment. How we empower women in trade. 3 pillars. The first pillar is about personal empowerment programs. We heard how our women have no access to data, to information, the complexity of the customs, how we are able really to give her this information, how to have the tools for her to trade, whether through e-platforms, digital financial inclusion for payment facilities, information about the trade agreements. More than 10 years ago, I did a study questionnaire for the cross-border women traders when I was the COMESA Business Council chair and COMESA Women in Business. I went to the borders between Zambia and Zimbabwe, Ethiopia and Djibouti, Egypt and Sudan. I asked the women there, do you know anything about the simplified trade regime? They know nothing. Have you ever been trained on the COMESA trade regime? Nothing. And I am sure now, if I go to the cross-border traders and ask her, do you know anything about the certificate of origin or about the AfCFTA? They don't know. So this is number 1 issue, popularization and awareness and sensitization about our trade agreements, about our trade facilities, how they can export, how can they trade. The second pillar is about policy advocacy. How are the governments putting incentives for our women to trade? And one of the things that actually we as Africa Business Council have taken recommendation during the African Union Private Sector Forum and adopted by the Ministers of Finance and Planning is to have at least 40% of government procurement goes to African private sector, including SMEs, women and youth. Ladies, this is already adopted, we have to implement it. We have to advocate with our governments that this government procurement should be done. And this will not happen unless we know what is on the continent, mapping exercise of what we are really doing. You know that only for the cosmetic industries with all my sisters of shea butter and black soap, the cosmetic industry in the world is 295 billion. While we are only exporting by 3.5 billion. Is this acceptable? The fashion industry is 3.4 trillion in the world, but Africa is only exporting by 15 billion, while we have all the resources in the world. The gemstones, My dear brothers and sisters, the gemstones in the world, we have all the gemstones on the continent, but it goes to Jaipur, India to be cut and polished and then go to the international market. So what did we do about this? We went to Vicenza Oro is the biggest jewelry show in the world. There is not an African pavilion there. And the first window you go, a lovely collier, emerald and diamond, $500,000. And I asked, where is this emerald? He said, from Zambia. I am sure the women in Zambia and the small-scale miner have never got a $500,000 worth for their collier. So this is an area, again, that we're trying to see how we set up African training centers for cutting and polishing our own stones, rather than going outside the continent. Financial inclusion is a huge opportunity for our women ACFTA heard, because we need to have access to financing for our women to trade. And digital payment, interoperability, we need the governments to work on that. The third pillar, the third P, is really about product development. We cannot stay in Africa exporting our raw materials. We have to add value to our raw materials to have a made in Africa product which is competitive, value added, standardized, quality. And our women, they have all the talents to do it, but we need the tool. We have the talent, but we need the tools. What are the tools? It's really about business development centers, business incubators. It's about how ACFTA heard be a real tool for economic empowerment of women, to export a ready-made garment, to export jewelry instead of rocks and dusts, to export a roasted macadamia instead of going to Vietnam to be roasted there, to export a ready-made garments. This is what we need for ACFTA HER. ACFTA HER is a tool for economic empowerment of women, for creating wealth, for creating the Africa we want. The Africa we want is a prosperous, peaceful, integrated Africa, driven by the citizens of Africa, and we are the citizens of Africa. So ladies and gentlemen, ACFTA HER is about creating wealth, and my sister, my last speech that I always say and challenge my African leaders when they say we want Africa free from hunger, free from disease, free from illiteracy, free from poverty, and we say we the African women in the private sector through our trade and value addition, we don't want Africa to be free from hunger, but well-nourished, free from disease, but healthy, free from poverty, but wealthy, free from illiteracy, but well-educated. This is the Africa we want. Thank you.
Mr. DJ, do we have the music nicely queued up? Yes? Because we are going to wake up. This kind of conversation cannot be had with a room that is dull. Ladies and gentlemen, I officially welcome you to HER AfCFTA, and these are my panelists. You will applaud them as they come on stage. First of all, we've got Miss Tokumbo Chido, CEO and founder of Compass Global. She is joined by CEO Club Afrique Développement of Ati Jarafa Bank, Miss Muna Kadiri. Ladies and gentlemen, joining us, the National Program Specialist and Trade Focal Point UNDP, Miss Claire Henshaw. Oh, it needs to be louder than that. It needs to be louder than that. The founder of Togo Mall is Miss Olatokundo Ige. Please warmly welcome the Director General, Women Chamber of Commerce, Industry, Mines, and Agriculture of Nigeria, Miss Wanimi Eribo. And definitely last but not ever the least, the CEO of Aja Tanzania Limited, Miss Happiness Abisai. And now, ladies and gentlemen, as I have all my panelists seated, okay, Happiness, she wants an applause. Give Happiness a hair applause. Yeah. All right. Absolutely no pressure at all. Thank you very much, Happiness. You can take your time. Okay, DJ, the fun is over. Let the business now begin. Ladies and gentlemen, I am the moderator for the session, aptly named HER AfCFTA, and our conversation starts now. All right. So a little bit of fun and energy to bring you wonderful ladies onto the stage, but the reality is what we go through on a daily basis should be fun, but we're beginning to lose energy because it's a lot of work. We don't want to lose the energy, we don't want to lose the momentum, and that's why each and every one of you, though I celebrate you here today, I want to also highlight your input and your ability to blaze this trail that essentially the rest of the continent, specifically our women, should be able to follow. So, Tukumdu, no pressure at all. I'll start off with you. You're going to take me through how your organization facilitated a network and business linkages for women in trade. Can you take us through that, please?
Thank you so much. Thank you so much, Anita. Allow me to stand on existing protocols and also give commendations to the AfCFTA Secretariat and the government of Rwanda for this amazing opportunity. And of course, thank you to a very engaging audience. So for us at Compass Global, we are a business in the space of trade, export promotion, and investment. We have done this now for 18 years. My background personally is that I worked for the Association of London Governments. I sat on boards where we developed programs that were a partnership between the private and the public sector. So you can also say that really my expertise is really in the area of strategic partnerships and collaboration. So our company is based in Lagos, Nigeria, but we are absolutely proudly African. We have footprints in 22 African countries across the west and the east of Africa, working with a dynamic, organized private sector ecosystem of chambers of commerce, women associations, and youth organizations. And really our raison d'etre really is to create access to markets. And business linkages is a core focus for us. Now, we're here talking about women, and women of Africa are an emerging, powerful force to reckon with. Data from McKinsey actually says that the fourth emerging market is the female economy, and that we are poised to contribute $12 trillion by 2025. We are here talking about the power of the advocacy, the voices and the agencies of women when we unleash it collectively. Yeah. This is the understanding that I have had about her AfCFTA even before it was announced. We needed as a company to dimension that for ourselves as a small player. What does it mean, this opportunity that Africa is dealing with and is creating so much buzz to move forward? So I want to share with you very quickly, and I'm going to come to the end of my presentation on what we have been doing. There are 4 pillars that we think are important when having this conversation. Because we had to dimension what this opportunity represents for small players. We had to look to see, for example, what is the toolkit that you would recommend a small business should definitely work with when they are trying to make sense of the AfCFTA? I said that there are 4 Ds. The first is data. The second is determination. The third one is delivery. And the fourth one absolutely is deals. Now, we needed to understand how this opportunity was going to be activated for small players who seldom understood the concept as it stood. And so for us, we followed what the data said. And where is the data in terms of the intra-African trade and the opportunity within it? The first thing that we did was we looked for the data for the top intra-African importers. So we want to build on the trade that is already happening within the continent. We're not creating new things. We are building on the existing framework, but making it more robust and removing constraints. So who are the key players? We came across a key data from TRALAC. TRALAC is the Trade Law Center, and they generate data on players in the space of exports and imports within Africa, amongst other things. We discovered that of the top 10 intra-African importers, the top 30% were found in East Africa.
Tukundo, hang on to that, and I want you to describe, the rest of what the data demonstrated, because what you've just done right now is probably highlight, and you can correct me if I'm wrong, a huge gap. An opportunity, perhaps, maybe one may say a problem, and maybe an opportunity, and I want you to hang on to that, because Muna, as Tukundo was talking about what the data is producing, I'm also thinking to myself that women, and my fellow women in the audience can bear me witness, over-mentored and underfunded is what we like to call ourselves. We belong to so many different networks, but where is the money? Show us the money. Nobody is able to give us the money because for whatever reason, we can't have access to the financial inclusion or the digital financing that we deserve. How are you changing that narrative?
Thank you, Anita, esteemed assembly. Yes, of course, the struggle is real. But before trying to answer the question, let me introduce the Africa Development Club and what it is and how it works. Basically, it works on the ground in more than 16 countries in Africa and helps concreting and implementing those opportunities who you are talking about. How? By simply putting into a network these 16 banks of the Achijariwa Bank Group, which is a Pan-African group, and putting into a network these banks means putting into a network their expertise, their local commercial expertise, their database information expertise, and putting into a network the communities who are already working with each bank. That means that this platform is a very reliable platform, and we build corridors between countries who are not used to work together. That's to put the big picture. We have a program called Stand Up for African Women Entrepreneurs, because indeed the struggle is real. And into this program we have two pillars. The first one is to make promotion of these women businesses who are already working and who are looking for opportunities. And the second one is supporting the women businesses who are in need of this support to access to these financial needs. To access to financial needs, everyone knows that you need to be reliable, to talk into a trustable language, know how to present a correct business plan, really basic things, but that are not so basic for this. So we help with this pillar. We have a program to offer capacity building to these SMEs and very small companies in Central Africa, mainly West Africa and North Africa.
So I was going to go to Claire, but Claire, something that Muna has just said, I'm going to skip you and go straight to Olatokunbo, because the reality is your namesake Tokunbo started off with the data. She's not done yet, but then it's a very wonderful way to start this conversation. Muna has just underlined what they're doing to access funds, and I see that you're smiling because you work with a plethora of women in Togo. You've built the Togo Mall, and you can demonstrate that at the bottom of all this wonder is a powerful collective of women who don't have access to the kind of money, the kind of information, the kind of infrastructure that are required for them to be successful entrepreneurs. So take us back to the story of Togo Mall and connect that to the essence of why we're here, to ask somebody in the audience to cut us a check.
Yeah, thank you very much, Anita. And I'm really hoping somebody is gonna cut us a check, because one of the messages I bring back from Togo and from many of the women, I'm sure, who are in the room, is we're tired of talking. Where's the money? You keep saying we don't have the capacity, but it's our products that you're buying. Go to the marketplace. How many men have stalls there? How many women have stalls there? I think we need to get off that way. And that's what led us to building Togo Mall. Togo Mall is not a shop, even though we sell goods, we sell our products. Togo Mall is a practical accelerator, one in which we are showing the strength, the know-how, the knowledge, the power, the everything of the Togolese entrepreneur, majority of whom are women, and where we are saying, look at this product. We want to complete the value chain, even if whether it's groundnuts, whether it's shea butter, whether it's pepper, whatever it is. We want to go through the entire value chain. But most of the time, we can only stop at removing the back of the groundnuts, putting it in the fire. You have something to chew on. But when we need groundnut oil, somebody wants to come from Malaysia or somewhere to teach us how to do it. Yet we know how to do it because we do it at home. But then we're told we're high-risk people. I didn't know women who give birth to so many children, look after men, bring them up, become high-risk when it comes to business.
We can prove we can take care of our communities.
So, I understand I'm not very good with, highfalutin, technological, and all of these ecosystem words. But this is what is also killing us. We're being subjected to some kind of stereotype, some kind of normative framework that has been developed somewhere, which is forgetting that in a country like Togo, at some point in the life of that country, 12 women called the Nana Bens saved the nation. So now we are high risk. What happened? We were not high risk then when the money was needed. So I think what we need to be doing and what really we are looking to do in Togo Mall is to move away from computer incubation to go to human being incubation, to work with each other, to make sure that our products, which are of good quality, are very well presentable, can go to any market, and then we're going to be asking Mr. Macaulay and a number of other people to cut us a check because we want to export our products. And the Nigerian controller has already said we can move through any.
He is here.
He's here. From Alaba to anywhere we can move. So now what we want is that you begin to drop this idea that we are high-risk people, that pilot projects under the support of FCTV Secretariat, conduct some pilots. Let's see what happens. You saw our mother 0001. She's already an example. How come it's not a man who got 0001? And then we are high risk. So I think the debate needs to move from theory to practice. And this is what Togo Mall is about. And we encourage many more Togo Malls to arise in the different countries to show that c'est l'union qui fait la force.
Absolument. Is Dr. Macaulay, Dan Macaulay in the house, please?
Thank
Dr.
you,
Macaulay,
yeah.
please, I want you to commit to giving us a check for $50,000 US. Okay. You will give that check to her AfCFTA.
Yeah.
And because they are building the blueprint, and I'm sorry to put you on the spot, and I have a feeling by the time we get to Ghana, I'll be in trouble, but that's fine. We will use your money as seed capital for the extraordinary women entrepreneurs on the continent. Dr. Macaulay, I put you on the spot. Yay! It's done. Doc, please, I said USD, not Ghana cities. So I know, let's just be clear. Happiness, I come to you and I've only left these two ladies out because you are going to tie up these stories we're telling because her AfCFTA is a powerful movement. But Happiness, you are also bringing a lot of happiness to entrepreneurs on the continent of Africa. Tell us your extraordinary story, what you have done that is a mere dream for some of us. Happiness, you have the floor.
Thank you, Anita. Thank you, Anita. And I would like to thank you, Her Excellency Samia Suluhu Hassan, President of United Republic of Tanzania, champion of CFTA women on protocol of women and youth trade. Here I present those women who trade under CFTA GTI. AJA has started trade under CFTA since last year, and one of the things which make AJA to trade under CFTA is determination, mind, and vision. And I would like to acknowledge the President of Tanzania Chamber of Women in this room. They did a big job together with Trademark Africa to move all over United Republic of Tanzania for capacity building from the scratch. I'm here to witness to you all that this market is existing. I started with 1 container, but now I've already exported 1,000 tonnage of sisal fiber in Ghana, Morocco, Nigeria, Libya, and Burkina Faso. All this happened, it's not like there is no challenge. Challenges are there. For me, challenge is an opportunity to other. So we need to acknowledge this. No matter what we are doing, there is existence of challenge. And we need to acknowledge that no matter we are doing business under CFTA, we need to acknowledge environmental issues. I repeat again to acknowledge our president as a champion of clean energy. I also acknowledge that sisal fiber is a green business. Also, it can be used as an overall change of environment. Climate issues we are talking about because we are reducing issues of deforestation currently. Thank you.
Thank you so much. So just to ensure that we've got your story, trade under AfCFTA is happening now, and it's happening successfully for our women.
Yes.
Happiness, that's what you're saying.
Yes.
The world can hear you right now.
Yes.
I love that. Claire, this must sound like music to your ears. I mean, you're talking about being able to build this wonderful community here, AfCFTA. But I'd like you to take me to your programs and where you have worked with women, especially the ones in the informal sector, and how many women have, maybe one may call it, graduated from informal to the formal sector.
Okay, thank you so much. I bring greetings from Nigeria, where I work. I'm sure you must have seen the picture with my boss's image, Elsie Atafua, the RR of Nigeria, and then my name is there as National Program Specialist. So my name is Claire Henshaw, representing the resident representatives of UNDP Nigeria. However, I speak on the platform of her AfCFTA, which is an African-wide concept that we have developed in partnership with the AfCFTA Secretariat. And I also bring greetings from the informal sector, particularly the women that drive that sector. We know that Africa has 70% of women in the informal economy driving this sector. And so it's a no-brainer that we have to take the informal sector very seriously. This dress I'm wearing, and I represent the very best of Africa, the Ashoke part, which is an indigenous dress material, textile from Nigeria. I got this from Kwara State, from the deepest rural community. So when we talk AfCFTA, we go, as UNDP, we go to the length and breadth of the country, across the continent, to find those informal businesses that need to be seen, that need to be heard, and then we give them the platform. And that is the beauty of what her AfCFTA brings to the African continent. Now, what are we doing for the informal sector as it pertains to women? We're doing a lot. But first and foremost, I want to focus on the areas of partnerships. And I will try as much as possible to speak broadly, but because I work in Nigeria, I'll use a lot of the Nigerian example as context. Now, within the context of Nigeria, what are we doing as UNDP? We have first and foremost partnered with the Federal Ministry of Industry and Trade. And why are we doing that? They are the anchor agency, the ministry that handles everything trade, that ensures that we can have that last mile reach to the most vulnerable. And by doing that, we also have the backing of government to ensure that our AfCFTA is not just a UNDP-wide concept, but instead is a government-owned concept. And when it is government-owned, it means that the buy-in will be broad. And why will it be broad? Because every agency that works under that ministry is then accountable to supporting us. And so partnerships. Why partnerships? If you want to go as far as possible, you have to go as a collective. And that's what we're trying to do. Where are the agencies in government that can drive, that can help us push the narrative? They are there. We have the NIPC, UNDP is partnering with them. We have SMIDAN, UNDP is partnering with them. Every agency that can contribute to that last mile approach, we are partnering with them, not just from a perspective of policy, but also from a perspective of capacity building. Because when they are enabled, they can also stretch themselves to go as far as possible. And we are also looking at how can we also enable private sector to come on board, because on one hand, you have government doing what they're doing, but we know that the resources will come from the private sector. So UNDP is partnering with organized private sector, because one of the things we see is that a lot of informal businesses are doing it alone, but we're now trying to promote cluster-based approach, such that as an informal business, you're not standing alone. When you are as a bunch, you can drive and move faster. Now, I will give examples of what we've been doing in locations like Ghana. For example, in Ghana, I don't work in Ghana, but her AfCFTA as a concept is in Ghana. Over 2,000 women across 9 cooperatives, for example, have been supported to boost their share production capacity. And what does this mean? They have a common shared facility center where they can go, work, and from start to finish, they have all the support that they need to drive that economy. And what does it mean? It means that they're getting the value chain that will help them thrive. They don't necessarily need to look for the markets, because through this support, they get access to markets, they get access to finance, and they get access to all this capacity building that would help them ensure that they are brought up to speed to drive trade. In Guinea, for example, we are doing investing in the productive capacities of MSMEs. What are we trying to do here? We are providing machinery. We know that if we are going to compete favorably with products from other countries, we must be producing the best. So at the very bottom baseline, we know how to produce, but the branding is what sets us apart. We may not be able to compete favorably. So we are supporting businesses across these locations to say, look, across these countries, we are going to help you improve the quality of products that you produce by giving you the best machinery that you need. Then we're also going to give you the capacity to brand so that you can take it out and compete favorably. Bringing it back home to Nigeria, what are we doing? We are working with Sweden. Sweden has 23 common facility centers. We call them mini industries. Many of them are not being put to use. But as UNDP, under her AfCFTA initiative, what have we done? We are now adopting those centers. We are saying there are many informal businesses across the country. We can't reach each and every one of them. But there are centers that are not being used that we can revamp, we can equip, we can provide capacity and everything that needs to make that center run optimally, and then bring the businesses to come and use the centers. What does that mean? It means that this small business can be aggregated into one location. It then means that we can then start to find those people, the off-takers of their products across the continent and even outside of the continent. What do we then do? We produce high-quality products using high-quality standards and ensuring that these businesses can take their products and compete favorably outside. Another important thing that we are doing, I think if we must make a shift, we must build champions. Who are those MSMEs or even SMEs that are doing it well, so that we can push them further up, and then they can support those that are coming forward. And that is why you see our 001, Leiluk, Madam Leiluk. What are we doing for her? Leiluk can get an order of 20,000 bags. But as fantastic as our academy is, she does not necessarily have the manpower to produce 20,000 bags in 2 weeks. So what does UNDP do? Together with the support of government, we're training 100 young people to learn bag making. It contributes to her workforce, and as a value ecosystem enabler, it contributes to the Smeden centers that we are also strengthening, because we are doing about 23. We have 20 for now. Some of them are Unipos, some of them are maker spaces, but we are then going to contribute towards that ecosystem. At the end of the day, we are going to be doing one center at a time, but connecting millions of informal business at a time. But ultimately, we will then work with partners. One of our partners is here, Wasima. What are we trying to achieve with that? Wasima is already private sector. They already know where their business, they know the pain points of their businesses. By strengthening the capacity of Wasima, by giving them the seed funding they need to drive faster, we are reaching out to much more people. And even if you are not a part of a chamber of commerce, whether you like it or not, you will be a part of it, because you must grow. So at UNDP, we are taking our AfCFTA with force. We need to push the narrative, we need to strengthen the narrative across Africa, and then we need to make women at the center of trade. Thank you.
You know, I like the whole energy of her sister's keeper. You know, back in the day, they used to say women were each other's worst enemies. And today I say we are each other's best keepers. And her AfCFTA, you know, demonstrates that. And so I come to the concept of, you know, the Chamber of Commerce with you weighing me. And truth of the matter is, you can have the most extraordinarily ambitious woman, but if she has no idea where to go, no idea whom to connect with, etc., her ambition stops right there because the challenges are literally insurmountable. Tell me about your mentorship programs and how they're able to break those challenges down.
Thank you, Anita. First of all, I just wanted to say it's really an honor to sit on this stage. From the very beginning, when I came across AfCFTA, I fell in love with the concept, and just being the implementing partners for the AfCFTA in Nigeria is really something. I bring greetings from the National President of the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture, which is the parent body from where the Women Chamber of Commerce, Industry, Mines and Agriculture has been carved out from. The need to carve this out was because they saw the very important need to have inclusivity and to give more women autonomy in business and in trade, right? And so we started operations fully in February this year. And so what we've done since then is to really leverage partnerships, and it's been echoed several times on this stage. If you want to go fast, you have to go with partners. And so what we've done is we're piloting quite a number of mentorship programs, one with the Wi-Fi in partnership with PwC and FCMB, which is really bringing together capacity building through knowledge exchange, business advisory, coaching and mentorship, and then connecting them to credit. Women that will go through that program will have access to credit up to 300 million naira, which is just a little above $200,000. In fact, when we started this conversation a couple of months ago, the interest rate was 26%. But 2 days ago, because of the back and forth, we have news that it has dropped to 16%. So that's one of the mentorship programs. So it's not just talking about capacity building, but we're connecting them to access to finance as well. Another one that we're doing is with the KVP project, where we're positioning women to take advantage of trade. And what we're piloting with that one is the 555 system, where we're starting with 5 priority sectors where women are found in. We will connect them, we will use 5 mentors and then 5 businesses each. The goal for that is we are going to be tapping into the NASIMA ecosystem as well, because you can't let women go through a system that they haven't passed through before. So as a mentor, I cannot take you through a system that I don't know. So what we're trying to do with that is to leverage the men within NASIMA, right? The successful stories within NASIMA, men and women, and connecting them to the businesses as well. So we're found quite a number of he for she's who have been passionate about this, and we're having those conversations, and that program is actually about to start. Another one that we're doing is the digital literacy mentorship, where we're working with Suburban, which is a cloud company in Nigeria, and they're providing 1,000 free websites for women-owned businesses in Nigeria. We've started piloting. 50 of those women have received their free websites. The idea is we cannot talk about trade, we cannot talk about AfCFTA without talking about digital trade. So it's important that we're positioning these women to take advantage of the opportunities that come with trade. It's one thing to say I have a business, but can you find me online, right? We want to be able to put women in that on the stages online, where regardless of location, regardless of where they are, you can find this business and patronize them. And then finally, which is one which really touches my heart a lot more, not as structured, but it's actually the peer-to-peer mentoring that we're seeing that is coming out of the chamber, especially from the AfCFTA program. So when we launched officially, last month we were in Namibia, and we took 15 women under the sponsorship of UNDP to Namibia for the AU SME Forum, right? And in 2 days, we saw businesses sell out, completely sell out. We had women in that booth from Ghana, Nigeria, Namibia, Botswana. I'm sorry, but Nigerian businesses sold out first. But we recognize that so many things came out from that trip. We saw a lot of peer mentoring. We saw a lot of B2B connections. We saw a lot of, support for one another within that space. And as we've come back, we see it continue, within the platform that they're all in. And we've seen this work so many times, even within the platform of the chamber. We've had experiences where on the platform, somebody who is interested in export says, look, I'm trying to approach NEPC, what do I do? And you don't need to go and look for a consultant, because there are women who are already doing this. They're dropping the information there. We've seen problems solved there. So one of the things that I really love that has come out from all of this is the peer-to-peer mentoring that we're seeing. And for me, that's one of the really strong ways in which we can continue to hold ourselves. Because if we talk about sisters keepers, we have to hold ourselves. We have to hold our hands. And really, a lot of times, that's where the disjoint comes, because there's a lot of talk, there's a lot of capacity building, there's a lot of information given out, but who is really holding your hands to go through that journey? And that's what we're seeing coming out of this.
And I think I can stand on this literal, stage or proverbial stage and say that we no longer want to have a conversation, and that conversation really will end with us here on the stage, and action will begin immediately. Well, action has already begun with her AfCFTA. Olatokunbo, there's something that Ms. Erbo mentioned that I just want to come to you before I come back to the beginning of the panel. Digital trade, daunting. I mean, I know you don't even like it, but it's essential, whether we all like it or not. Yeah. What are some of the challenges in utilizing digital trade that you have encountered, or one may say your collective has encountered, and how are you resolving these challenges?
Okay, thank you very much for that. Well, something happened yesterday right here. So Jael, she's in the room. She's one of us from Togo Mall. She has a stand, and she brought products. And of course, we're in Togo, so we use the franc CFA. Here, it's the Rwandan francs. And then there's the almighty US dollar. So people want to buy from her. They say they don't have liquid cash. They don't have liquid money. And so I got to the store just to say hi to her, and she goes, people want to buy from me, but they don't have liquid money. I don't have their Momo. So what should I do? I'm like, you have an EcoBank account, no? She said, yes. And we work a lot with EcoBank in Togo. So I said, okay, let me go and meet the people in EcoBank. So I went to the EcoBank stand, looking for the director. She wasn't there, but there were like 12 people there. And I said to them, we have a problem. They said, what's the problem? I'm like, we are from Togo. We have people from Rwanda who want to buy things from us. We want to see how we can, get this transaction going, because we do not have the Momo, but we can't get money into our account. How do we do this? And we spent about 10 minutes brainstorming. I think these are some of the practical things we need to look at. So much as we're calling out banks on give us money, we also need to call them out on help us to make this digital trade work. When you've seen what you want to buy from me and you've contacted me, how are we supposed to make sure that it runs smoothly? Here, we're even physically present. We're not online. And we're having problems how we are going to pay in Rwandan francs for somebody who's taking her money to Togo and almighty dollar in the middle. We couldn't resolve it yesterday. So for me, that's where the issues are. And we need to think about that. So we're in Togo. We work with people in Niger, Mali, Burkina, Benin, and Ghana. At least the countries close to us. Of course, the Ghanaians have their own CD. We are all in the franc community for the moment. And we need to anticipate. We haven't even talked about Naira and Nigeria, where suddenly the exchange rate has been, but the controller is here. He said things are going to get better.
Stop it right there.
So these are the realities we're dealing with.
Yeah.
So digital trade, it's not about us not being able to use the computer. We know what to do now.
Of course.
We know even how to use our telephones. The question now is, how does this digital trade work for us in order that we can move our goods faster, we can sell. We don't want to take back the 46 kilos of stuff that we brought back here. And one of the reasons why we're going to have to take them back if we're not careful is because we cannot convert Rwandan francs to CFA.
That has to stop.
That has to stop.
Tokumbo, one of the things I'm truly eager on hearing more about is your case studies, and I know that you are giving us some data, and I feel that as much as we can discuss, the innovation that is required, the mentorships that are required, without the data, without your work, we don't even know where to direct our efforts. So I would like you to highlight some of your success stories, yes, but then you were talking to us about data, and I feel that it's important for us to highlight why your work is so crucial after all the stories that we've heard.
Thank you so much for that. So I was talking about the data because I think that her AfCFTA is about ownership by women of this transformative agenda. This is the bane of the issue, that it is not that women are not doing the work, it is not translating enough. And so this is why I started to talk about our ability to move women from the margins to the center. This is the focus of the conversation, right? To be able to do that, the women themselves need to enable themselves. And that's why I talked about the concept of the 4 Ds. The first being, you have to use data. We are in the era of digital technology. Technology bailed us out in COVID. We were able to recover after COVID using digital technology. There is no excuse for any woman who really wants to have a share of this transformation, right, to not be able to leap onto this whole digital technology movement, right? I'm not opposed to traditional ways of doing things, but I'm saying we need to evolve this conversation. So the work that we've been doing specifically, I talked about dimensioning the opportunity, and I cannot overemphasize that because look at the robust infrastructure of the AfCFTA. Look at the resources since 2018 that has been put towards this. Now, women have to step up. We are already a global powerhouse. African women actually outnumber the numbers of global women entrepreneurs. We are leading. But guess what? When you look at the top 10% of the richest women globally, there is no African woman. This is what I'm talking about. All of this work that is being done, everything that we are talking about, what does it mean if the smaller player is not able to dimension the size of this opportunity? So what we did at Compass was we used data to understand what is really going on with this AfCFTA. And the first data was, who are the players that are already buying made in Africa? Who are they? We found 30% of the top 10 in the East. They understand the language of intra-African trade. They are converted. You don't need to preach to them. You just need to come with the products from the capacity-built UNDP delegation, the work of the chamber, all of those. You just need to plug them into a market that is already buying. So this is what data did for us. And I would like to really challenge the women in the room to say, we've got to step it up. We step it up. We have to play with the big girls. And the top 10%. No, yes. You want to bam bam. You want to play with the big boys. Come on. We have to step it up. Yeah. Get comfortable with data. So we started to use our network of organized private sector. We work with the Federation of West African Chamber of Commerce. In East Africa, we had a formidable alliance with the East African Business Council. Because of the data that we found about intra-African importers, in the East, we decided to come up with an initiative called West Africa Meets East Africa. Why? Because the data tells us that these people are converted. They're happily buying African. They have no problem with it. Just give them what they need. And then as you're giving them what they need, find out what you can do for them and vice versa. Data also pointed us in the direction that actually there are complementarity between the regions of East and West in that we don't have the same thing. So it is easy for us to come together to the deal table as collaborators and take a deal. This is what data is able to do when you help small players through the networks of organized private sector to understand what is the size of this opportunity. So I talk about the McKinsey, I'm a data person. Data to me, I can interpret all sorts of things from data that even the people who put the data together are not seeing. That is my gift, right? And this is what we've been trying to do. Happily, talking about success stories, Mrs. Ezenwa is a success story of the West Africa Meets East Africa process. So what does it mean? Our company curates specific specialist trade missions, business development tours, and capacity building that is focused on business linkages. That is our core. We are not in getting products ready for market, no. We are in, when you have done your work as UNDP, you give them to us, and we lead them into markets. And we lead them into the markets where the buyers are willing to buy. They understand the language of intra-African trade. We are simply hand-holding the process. I'm getting to the case study now. This West Africa meets East Africa initiative is a series of curated engagements and intervention that has been made possible. We are in the 3rd year of implementation. We received planning funding for an idea. You have to give it up to AfCFTA Bank. Come on, please. Please. So this brand, when we presented the data to them, this is what data enables you to do when you are a small player. You speak the right language. You don't come to tables and you are sort of waffling. You go direct. So I simply just told AfCFTA, are you aware that the top 10 intra-African importers are 70% of them are in East and South of Africa, and the rest are in the North and different places. So if we try to connect markets into those existing markets or regions that are buying African, the impact of that is going to be significant because we're building on existing frameworks that are there, and then we have the robustness of the strategy of the AfCFTA to latch onto.
Yeah.
It makes sense.
Yeah.
AfCFTA says this is a no-brainer. So we also approached the ECOWAS Commission. We are now thinking about regional integration. AfCFTA is a pan-African vision, but you have to, for small players, dimension.
Yeah.
You've got to break it down.
Yeah.
You've got to make them see it and how they can move this forward. It's not the Secretariat who is going to deliver.
We are doing it.
We're delivering it.
This is our job to do, not them.
So we need to understand it.
Yeah.
So the dimensioning is important. Then the determination to overcome constraints. Personally, you have to convince yourself. You have to have the mindset that I'm going, and I'm going to get there. And how you get there is by being open to ideas, learning, relearning. Many entrepreneurs who are women and are doing exceptionally well in their business. If you go and find out the secret, it's because they have partners.
Tokumbo, I want you to prepare a call to action. Because we are going to be wrapping up this conversation, but I want you to prepare, based on your experiences, based on your case studies, a call to action that we will challenge her AfCFTA to come back and look at 6 months from now, a year from now. So you think about that call to action. While Muna, I ask you, how do we access your initiative, your project? How do the women in this room or those watching us online, how do we find you? How do we take advantage of your offerings?
Thank you, Anita. And before answering, we may have a call to action to use your data for the Africa Development Platform.
Well, there you go. There you go.
Yes, because it's about access to reliable and updated information. Yeah. It's all about that. That starts with that. How? It's very simple. The platform is online and deliver many services. clubafriquedevelopment.com. You can look at it on Google, and of course I remain at your disposal if you have many interests to dig into the question. Why I talked about data? Because I needed to present this network that starts, as I said, 15 years ago. It's online, but it's also relying on the local Africa development clubs in the 16 countries and in partner countries like in Kenya, not yet in Rwanda, unfortunately, with KCB, etc. And today we have 6,000 businesses from 42 countries of the continent who are using on a daily basis these services because they feel they feel trust in the platform, in the process, because they have human beings who to talk with in each banks, in each countries. But also because we provide online one pillar. The first one is access to a database and up-to-date information in the 45 countries of the continent. It's a service called Artisanal Trade and regularly updated because things change very fast. Regulation, legislation, sectoral informations, transitors, with who I can do export, import, etc. Second pillar, it's very, very successful, is the B2B services, the business-to-business meeting services. There is the on-demand B2Bs, because companies are looking for the right provider, the right contact in a reliable platform, but also structured B2B meetings. We organized in 2016 40 multi-sectorial missions in the 15 countries, and it's a very successful format because it's a small format, you know, it's about people. It's not, you know, Africa is like a concept, it's very wide to apprehend, but after all, it's about case by case, people by people, country by country, etc. So these multi-sectorial missions are very, like, we gather between 200 and 400 businesses from all the continent who are really interested in the country where we organize the multi-sectorial mission, and with the sectors that they are interested in, and we organize structured B2B meetings based on their needs. So it's really something we work before with the commercials of these banks. So this is the second service. Third one, who is also very successful, is a service of access to call of tenders in real time in 50 countries of the continent. And you have just to configure the country you are interested in, the sector you are interested in, and you receive notification of this call of tenders. This is information very precious for people. Thank you. And so if it's possible, it's not always possible, but when it's possible, the local bank can support the company, especially if it's foreign company, to find the right contact to submit this call of tender where you are interested. It's a very pragmatic initiative. It's not something maybe big comparing to Africa, but it's very efficient and pragmatic on the ground, basic, simple. And I said it, the struggle is real. It's because the struggle is real that we are here, and this initiative is growing and growing. We are not talking about things, we are not looking for winning money. The bank doesn't need me for winning money. It's just because it's the starting point is the ground that makes these initiatives. Now it's the initiatives of all these members and of the partners, like the Africa Development Bank, etc. And finally, it's important to know that these services are steered by, again, the expertise of the banks, that they are gathering their relations in service of this, to serve these businesses. Today, so it's difficult to assess because I know your question is about the impact. It's about how many concrete businesses were born since these 15 years. So it's difficult to have the real big picture because as a non-financial service, it's not mandatory to be client of the bank to access to this service. It's very important to know this. So not everybody who conclude a deal works with the bank. But nevertheless, we captured around 1,500 businesses, trade operations, investment, joint ventures who were made since 15 years in key sectors like renewable energies, agro-industry, telecommunication, services, distribution. And that does not concern only big companies, but also SMEs.
I like that.
and to make the focal point on the program Stand Up for African Women Entrepreneurs program that started only in 2019. So it's a starting point inside this Africa Development Initiative. We managed to support informal businesses, especially in Cameroon. And I want to pay tribute to Cameroon ladies because they really showed us that they are capable, informal or formal, they are capable. I mean, it's really, we took so many takeaways from this.
Powerful. Yeah. And so don't forget your call to action. It's going to come to you. Happiness, you are a beacon of hope. I mean, you are probably one of the best trailblazers that I have personally come across hearing your story earlier on. How would you say your success has inspired or motivated other female entrepreneurs, women entrepreneurs, to participate in intra-Africa trade?
First of all, marketing. We women, we are doing marketing. We are trading since before this agreement. And I would like to tell my fellow Africans, let's continue doing our job. There is a lot of women in the village, they are doing very well job. Either they are skilled or unskilled. There is a two connection. We need to look on value chain. We need to look on socio-economic development. We are talking about socio-economic development here. There is one person who exporting, but you need to look back. The impact, how many women they contribute that product to be exported by one woman. That is the main objective of this trade and women reduced protocol. I've been involved with more than 200 women, and also I'm sure in Tanzania, through this protocol of women and youth, more than 2,000 women, they know about this market. They are doing this business, but there are challenges which is beyond our control. From East Africa, Tanzania, we are doing the best in this market. We can export to West, North, and South Africa. We are rich of everything regarding agriculture. So I encourage those women, do on your part, others they will take from that point. I'm looking on gap, I fill the gap. That is my responsibility.
You see the gap, you fill it, no excuses, without apology, and then you just keep it moving. Wawini, let's hear your call to action. Let's talk about what you believe after this moment, those who are listening, those who are inspired, what do they have to do, particularly as it pertains to taking advantage, perhaps, of the chamber? In your words, your call to action.
I think happiness actually started that conversation for me, because what we've seen is if you wait for women entrepreneurs individually to take advantage of the opportunity, we will not move fast, we'll be very slow. So we're seeing that there is a need to empower the value chain. We're seeing that there is a need to put resources in empowering the value chain. And I'll give an example. There's one of our businesses within the AfCFTA program who makes Adire dresses. To make one, she needs about a month because she cannot get access to Adire ready-made. How about we powering such ecosystem to be able to produce much more for her, so that she's not waiting 1 month to be able to deliver one dress. So we must backward integrate into empowering value chains, which is really interesting because that's one of the major things that the AfCFTA program under the UNDP in Nigeria is doing, where right now we're very intentionally supporting value chains, we're supporting clusters, we're supporting cooperatives with capacity building, we're supporting them with machinery to be able to improve the capacity of what they're going to do. I'll give another example. We have one business cluster within the Chamber of Commerce who recently, in fact, the NEPC, which is the Nigerian Export Promotion Council, was trying to export ugu to, I can't remember what country now. They called these women, come and export. There are about 4,000 of them in a cluster. So it will seem like it's one business that's doing that export, but it's literally over 4,000. That same cluster, before I left Abuja, told me that they've gotten cassava chips supply for 1 year. Cassava chips. She was going to Lagos to buy more machinery. This is going to take more than 4,000. They are literally empowering women across the entire country. Everywhere that cassava is grown, they are bringing all of those clusters together. So the call to action here is we must empower the value chain. We cannot be working with individual women anymore. We will not be fast enough.
Empower the value chain. Olatukundo, to you, in your perspective and your call to action in this question or this answer, in your perspective, what does Africa need to do to catch up with digital trade and advance intra-African trade? And your call to action in there as well, Olatukundo.
Okay, so I think apart from the one or two things I mentioned earlier, internet connectivity, we need to really make sure we work on it. We need to make sure that we can reach each other because we're learning how to connect online, but in many of our countries, we're still at 10%, 20%, 30% connectivity, even within the country. And those 4,000 women in Nigeria, I'm sure it took them months to get together simply because of internet connectivity. So if we can speed that up, that would really help us a lot. I very much agree with Wemi that we need to empower the value chain. We really need to help the women to move as women like to move together in order to deliver. If we cannot, if we must, earlier on today we were at that discussion on the agri-trade discussions and so on, and I could see in the soya business, I could see in the cassava chains and so on, a lot of gaps that are still there. Women can fill those gaps, but somebody needs to supply the machines and teach them how to do it. Please, don't call us weak. We are not weak. We can move mountains. Just put the mountain in front of us. And that is what we need to do what we do very well. Thank you.
Beautiful. Claire, I will come to you. Hold on. But I'm jumping to Muna. Muna, 30 seconds, your call to action would be what?
Maybe less. Let's do it day by day, on the ground, join the Africa Development Club, and let's remain together. That's all.
The unity amongst us is crucial.
Yes.
Thank you, Muna. And to you, Takundo, 30 seconds, your call to action will be what?
So my call to action will be to actually empower women within the AfCFTA framework to have a deals mindset. There are too many opportunities that we find when we go into different markets that do not translate into actual deals. We have found, working with the network of 30,000 Women in Business Association in East Africa, and over 7 million of an ecosystem of various associations in West Africa, that when it comes to converting opportunities into deals, there is still a gap. There is still a gap. And so I would like to put the call to action forward that we add this on as a layer of support, as we do all of the things that we're doing for product development, value chain development, and we are going into access into markets, that we build on deal rooms.
Deal rooms are required.
Yes, and capacity building for the women to be able to take an opportunity from that point to the end.
Love it.
Where we are closing deals and making this AfCFTA come alive.
Thank you. So Claire, given that you are, you are part of this network, you've heard it all, we've discussed it, and even outside of here, you hear the discussions around where it pertains to women in intra-Africa trade. How can we then collectively take advantage of the AfCFTA framework?
So we can look at the whole concept of AfCFTA and either look at it as a prosperity initiative for Africa, or we can keep complaining. And I can assure you that if you keep looking for problems, you will find a myriad of problems. So the question is, what next? Think her facility, her network, her knowledge. The issues are the same across Africa. Logistics, name it, finance, But her AfCFTA is bringing all of this to the center, and we're saying, let's collaborate. Strategic partnerships. Let's ensure that for every time that we go out to support women, we are leveraging the power of the established networks. The things we need are already on ground. They are not necessarily perfect. The question is, how do we run with what is available? And so what I can say as a closing is this: Africa will fix Africa. Nobody's coming to save us. Women, to a very large extent, are the transformers of Africa. Women will transform this continent. Trade, as a concept in itself, will empower and provide jobs. So for me, backward integration, if we're going to be the powerhouse that we are supposed to be as a continent, because we have the youngest continent in the world, we need to start to look at the workforce. We need to start to strengthen our young people, because we cannot trade without the numbers. And so let's go back to the drawing board. Let's go back to UNDP. Go to the UNDP offices in your country, those of you. Mention to them that Madam Ahuna has created a concept, her AfCFTA. We want to know what you are doing about it. Whether we like it or not, come 2025, we are all going to congregate, and we're also going to discuss how we can break those barriers that limit women. Again, Africa will fix Africa. We cannot keep waiting for other people to come and help us. And this is the opportunity for us to push that narrative. Thank you.
Ladies and gentlemen, Mr. DJ, my music again. As we about to leave the stage, please put your hands together for our last speaker, Ms. Claire Henshaw, National Program Specialist and Trade Focal Point, UNDP Nigeria. And you heard from Mr. Kundo Chido, CEO and founder Compass Global. You also heard from Ms. Mona Kadiri, CEO Club Afrique Development. And you heard from Ms. Olatokunbo Ige, who is the founder of Togo Mall, Ms. Yeginde Erivo, who's the Director General, Women Chamber of Commerce, Industry, Mines, and Agriculture of Nigeria. And of course, we had Ms. Happiness Abisai, CEO, AJ Tanzania Limited. Ladies and gentlemen, my name is Anita Erskine, and that brings us to the end of our conversation on her AfCFTA. We have a photographer.
And can we put our hands together once again for the wonderful discussions that we have had so far? We nearly sacrificed the rest of the day for them, because their interest was so high, we couldn't afford to let them go. Distinguished ladies and gentlemen, let's put our hands together once again for this particular session. Thank you very much, the ever-dynamic Anita Erskine. Thank you. And I must say that a lot of people want to see and hear a lot more from our women. And so even the AfCFTA podcast is requesting that all the women who took part in this particular session, there's going to be a continuation of your interview at the AfCFTA studio down there. Miss Elidora will be leading you down there for that continuation. And we thank you and plead that you participate. Thank you. Our next plenary session promoting investment in the automotive value chains in the AfCFTA framework. But before that takes off, and once the technical directors are putting the stage together, let me make my announcement again, please. At exactly 6:30, 2 locations. One, this premises, there's going to be transportation available to convey all of us to the location, the hotel where we'll be having the gala dinner this evening. All of us are to be here by 6:30 p.m. Regardless of where you will be, please try and make it here by 6:30 p.m. The other location Well, the other location is going to be Ubumwe Hotel. So those of you who are accommodated at Ubumwe Hotel, there's going to be a transportation there to transport all of us to the allocated hotel for that particular dinner. Make it a point to join us. Don't miss out. The conversation is even going to be greater. Let me also seize the opportunity quickly for all of us to put our hands together for Dr. Daniel Macaulay before he leaves. Let's put our hands together for Dr. Daniel Macaulay. A big one. It's a special request from the women because he has made a promise to give them a very significant sum. Let's put our hands together once again for her after and Dr. Macaulay. All right. All right, shall we be seated, please, for the next plenary, please? Shall we be seated? Thank you. Pleasantries and conversations can take place outside the auditorium, but while we seek time to finish quickly and move on to the next important assignment, the rest of us in the auditorium, let's please be seated. All right, thank you very much, distinguished ladies and gentlemen. The next plenary, promoting investment in the automotive value chains in the AfCFTA Framework. Moderator is Mr. Dave Kofi, Chief Executive Officer, African Association of Automotive Manufacturers. Let's put our hands together and welcome him, please. A big round of applause for him. Thank you.
Well, that's a hard act to follow, but we're going to give it our best shot. So the Deputy Chair of the AUC, ladies and gentlemen, a very warm welcome to the Automotive Hour. I'm going to call up our panel. We have two panelists that will be online. So starting off, I welcome Martina Bina. She's the Chairperson and Managing Director of Volkswagen Group Africa. Martina. That's it, we need the music. And then I'd like to welcome Tarek Mossad. He's the Director, Planning Group and Business Strategy from Hyundai Motor Company, Middle East and Africa. Tarek. Next, I would like to welcome up Temba Kumalo. Temba's known to many here. He's the Principal Advisor of the AfCFTA Secretariat. Welcome, Temba. Then, I'd like to welcome the next speaker who will be online. If we could get Gainmore up on the screen. Dr. Gainmore Zanamwe. Possible to show Gainmore. So Dr. Gainmore Zanamwe is the Director of Trade Facilitation and Investment Promotion from Afrexim Bank. Welcome, Gainmore. And lastly, during the next 15 minutes, we'll be joined by Mike Whitfield. He's going to be in South Africa. He's the Managing Director of Stellantis Sub-Saharan Africa. So let's welcome Mike Whitfield. Thank you.
Good afternoon, everyone. Thank you for the opportunity.
There we have Gainmore and Mike. Welcome. So I'd like to just start off by saying who is the African Association of Automotive Manufacturers. We're a private sector automotive association, and our mission is to industrialize and grow the automotive sector on the continent of Africa. And we do this by working with African governments to develop, refine, and implement automotive policies and ecosystems. These ecosystems will attract investment and unlock the economic potential of Africa. Our members vary from global OEMs to national assemblers, to component manufacturers, to startups, to financial institutions and organizations that add value to the auto ecosystem. But just to reflect first on 2023, to give you some context, in Africa, 1.2 million new vehicles were produced and a similar amount was consumed. At the same time, between 3 and 5 million used vehicles are imported into Africa, and recently I have got data that says more than 3 million motorcycles are imported into Africa. Now, if we reflect against the India and what India's been has achieved, they have a similar population of 1.4 billion people. Their GDP per capita is slightly more, but not much more. And in 2023, India produced 5.8 million vehicles, of which they consumed 4 million passenger and 1 million commercial, and they produced 16 million motorcycles. They manufactured that. And they did that by introducing and implementing the right policy, automotive policy, and which included affordable mobility, which is key, as we will discuss. So in February 2023, and you'll hear more about this, that a continental automotive strategy was approved by the AfCFTA Council of Ministers. And in Cape Town last year, for this business forum, we discussed, as the panel, auto policy best practice and strategies. And today we've moved on a year, and we are discussing here the progress and successes and some of the challenges we have in realizing our vision and how we go about that. So let's get into the discussion, and let me just move over here. Okay, I'm going to start with Martina. So Martina, recently there's been an announcement that you plan to explore manufacturing vehicles in Egypt, and we'd like you to share why Egypt and how this fits into your evolving manufacturing footprint across the continent. Also, you made a change to VW South Africa, change to VW Group Africa. Thank you.
Cool. Thanks, Dave, for the question. So let me quickly contextualize our Volkswagen endeavor in Africa. So for us as Volkswagen, and that's also a reason for renaming into Volkswagen Group Africa, is that we really look into a business case Africa for Africa. So we are not looking, and those of you who follow the global news, Volkswagen has plenty of plants across the world, and also many in Europe. So we are not looking for Africa as an export destination to Europe or to elsewhere, but we are looking into an Africa for Africa business case. That's also why we've renamed ourselves Volkswagen Group Africa. And that's also why Egypt can play an important role for us in increasing our Africa footprint. So Egypt, first reason is Egypt has a significant domestic new car market already. Similar to, for example, South Africa. So that is an important factor, that you have a domestic market where you also can sell cars before you look into where can I export the cars to. So Egypt has a significant domestic market with a significant growth potential as well. And Egypt has put a policy framework into perspective, and not into perspective, into place, that enables a conducive business environment. So very important domestic market and policy certainty. And Egypt's automotive policy, which they have implemented, gazetted, is very compelling for us to look into business. Egypt, of course, has signed the AfCFTA and will, once ratified and implemented for automotive trade, also under the AfCFTA. In the automotive, and I think we get to that, rules of origin are still to be finalized, but Egypt already now has a lot of trade agreements and possibilities within Africa, with North Africa, with COMESA, so that also already kind of can accelerate or what then will happen with the AfCFTA fully implemented. That's important for us as well. And Egypt is really looking into the automotive industry as how can they enable business? How can they incentivize production in the country? Plus, last topic on Egypt, there is a very good supplier base already there, because with us as the automotive manufacturers, of course, comes a lot of supplier industry, or must come, and meaning there is a lot of capabilities, there is a lot of suppliers there, there is quality, there is standards adhered to, so Egypt is a very good place for us to look into as a next Africa footprint. By the way, followed then by some ideas we have in sub-Saharan Africa, with probably Kenya being our East Africa hub, but automotive policy in Kenya missing currently still or under discussion, and also Ghana, who is on a very good way in terms of policy making for automotive policy. Just the last two clauses are still to be implemented.
Thanks, and it's that policy certainty which is absolutely critical to investment. Moving on to you, Tarek, from Hyundai, and we recently read about your investment announcement in Algeria, and that's a huge milestone for Hyundai, the group. It's your first significant investment in Africa. Maybe you want to just share with us why Algeria, and what's the way forward.
Thank you, Dave. Good evening, everyone. Very proud being here in Biashara Afrika, and happy to join this plenary discussion. So coming to your question about Algeria, yes, this news was revealed by the government in Algeria, but it's real. We are actively studying now the expansion of Hyundai footprint in Algeria. But this study is like constructive study so far, with two aspects. Like, that's why we are very busy now in this study. It's not only about how to produce a car, because this is what we are doing in the daily basis. While on the other side, we are looking at how can we comply to the requirement of the localization, not only in the short term as of today, but for the mid and long term. This is a sustainable solution we always put, or the sustainable strategy we always talk about as a Hyundai Group. On the other side also, how can we contribute actively to the society based on our global vision, progress for humanity. So this is part of our footprint in any location. So now we talk about Algeria. Algeria is a great opportunity. And this is how we see Algeria for several aspects. And also, if you ask my view, it's a great opportunity for the enablement of the African continent FTA. I will explain now, but let me just recall the history somehow of the automotive in Algeria. We know very well, like most of the African countries, huge importation, big burden on the trade balance and the economic system, then a hard stop for quite some time in Algeria. We understand the reason. Then the government came with clear requirements for the localization. 2 years ago, I guess it was announced, these requirements, in my view, is a strategic step for Algeria in the automotive sector. How can we establish the ecosystem somehow? Because, yes, Algeria is well located in terms of the logistics. The demand in the market is quite big. Resources are there. But we need to make sure that the whole ecosystem can support this initiative. And this is a really important one. That's why I'm saying that with this strategic step from the Algerian government, we as OEMs not just need to comply with the requirement, we need to help also this system to be realized. Yeah. Looking at this, yes, OEMs has a role, the government has a clear intention, and also we need to come into the important point, which is the component manufacturers or the component manufacturing supply map or something. That's why I said there is clear opportunity for the African continent FTA to be implemented and enabled in Algeria. At the moment, within the requirements of the localization in Algeria, they are looking for the export in the midterm. Good. So they want to export cars, not only for the domestic demand. On the other side, if you look at the component manufacturing or the supply in Algeria, not up to speed to support this progressive localization requirements. That's why probably the support from the other African countries is required. Within the last meeting with the Minister of Industry in Algeria, he clearly requested, Hyundai, please, let's work together also with the African continent FTA. How can we enable the mutual benefit between Algeria and the African countries? And I can see some clear initiatives, discussions with Tunisia country on how can they rely on the sourcing from Tunisia and also to be counted as a part of the local ratios. Of course, I'm not into these details, but this is what is happening at the moment. Why we don't expand this to more countries like Egypt, Central Africa, South Africa? Let's try to implement this, and of course it can be a discussion with the Secretarial Office of African Continent FTA.
Yeah. Thanks, Tarek. I think it's the second example of Africa for Africa.
Yes.
And I was in Algiers 2 weeks ago. We had a very successful meeting with the private sector who met the minister a few days ago, and there's going to be a joint roadmap with the development of the value chain in Algeria, which is going to need suppliers from Africa to support that. Temba, just moving on to you, and I covered it, that an automotive strategy was approved in February last year in Botswana. It had a number of parties that developed the strategy. Maybe you just want to share from the Secretariat's perspective how the implementation is going of that strategy and what structures are there to support it.
Thank you very much, Dave. One, two. 1, 2. Yeah, thank you very much, Dave. We appreciate the opportunity and greetings to the Deputy Chairperson of the African Union Commission. I think firstly maybe is to appreciate the partnership that we have with the industry through the African Association of Automotive Manufacturers and other partners, especially Afrexim Bank. We engage a lot with other partners, including AFDB, who are interested in supporting this kind of work. Subsequent to the approval of the strategy, Secretary General obviously retabled the proposal that he had put on the table of the Council of Ministers of Trade to relook at the issues, as Martina says, that we are yet to conclude on rules of origin. But when you look at how we have been able to move the needle in as far as one adopting the chapter rule at 40% as an enabling a rule for trade and industrialization in the automotive sector in the continent, it was obviously that bigger step. You look at some of the tariff lines where we agreed on, whether is it the transport for passengers that are more than 108702 was agreed, and it's on the basis of that strategy, because an argument was being made to say, how can we be able to leverage on the economies of scale provided by the AfCFTA to justify the investments which probably would not have been able to manage. And I'm happy that OEMs are continuously making these announcements, because they are in the context of ensuring that we could be able to take advantage of the AfCFTA. You have been through a process of engaging with some of the state parties in as far as reviewal or the development of new automotive policies that are in the context of that automotive strategy, which we believe is we are on the right track in as far as our endeavor to probably look at the sector that probably gives us most opportunities to be able to drive manufacturing in the continent. I think we have seen with some of the OEMs that are operating in the continent that is possible. in as far as creation of decent jobs for Africans, the automotive sector gives us that kind of an opportunity. We have been able to, obviously, further to that engage with partners, Afrexim Bank and AAM, to pursue what are components manufacturing opportunities in the continent that can be able to integrate some of, let's say, economies that may not necessarily host full manufacturing plants, but they have got a role to play in the sector. And that components manufacturing study gave us those type of ideas. When you were mentioning that there's an opportunity for 5 million units of vehicles in the continent, let's say by 2035, the fact is not each and every country in the continent will host a plant, but there is an opportunity for those that are able to create their value proposition in as far as whatever it's competitive or competitive advantage, whether it's those that want to do tire manufacturing, but they will not necessarily host a plant, but they have an opportunity to can then be able to get involved, and which is why it is important, and I think Genmo will probably be able to talk to this, so that we can then be able to utilize the funding that was provided by the bank to pursue those opportunities, integrate those countries in the value chain in a manner that helps us to be able to create jobs. We have seen some of the examples. I mean, we talk assembly plants, you would probably have less than 100 people working in an assembly plant, but then you go to some of the economies, whether it's in Botswana, where hiring houses are done, there's a capacity of 3,000 people employed. You go to the Kingdom of Lesotho, there are about 700 people working there for seat covers manufacturing. So that's what we think we have been able to do over the last year, to just try and build this business case so that we can then be able to form a great partnership with industry that seeks to integrate countries in this value chain in a manner that does not leave anyone behind. Yeah, thank you very much.
Thanks, Temba.
Yeah.
And I fully support your message on collaboration. It's strong, and we really appreciate all the partners. VDA is not on the stage, but the German auto industry has been very supportive as we move forward too. And I think we hear that from the conversations that take place. And just to reiterate your point about not every country is going to make a vehicle, what is the role of countries in the value chain from minerals through to component and vehicle manufacture and distribution? So it's important we find those roles. So this is an inclusive process in concluding the rules of origin. We must be careful not to we need a strong rule of origin to ensure industrialization and have inclusivity. That's key. So thank you. Mike, I want to move on to you. And Stellantis has announced a very significant investment in South Africa. And maybe just shed your light on why South Africa. And also Stellantis is developing a very strong manufacturing footprint in Africa. Thanks, Mike.
Thanks, Dave. And I think, first of all, good afternoon to everyone who is attending, both virtually and in person. And from a Stellantis point of view, we are well located from a manufacturing point of view in Africa. We have plants in Algeria, Morocco, Tunisia, Egypt. And as Dave said, South Africa is very much next on the radar. And the question that you pose, why South Africa? I think it's covered in many aspects of the automotive strategy. First and foremost, a very well-established automotive industry. Secondly, a strong OEM presence in South Africa and a destination with new OEMs coming towards it. A very well-established automotive component manufacturing industry, as well as South Africa beginning to embark, we hope, going forward on the EV transition from a roadmap. And very importantly, which is, I think, a core part of all auto industry development in the African continent, is a very strong automotive incentive program, structured program that is very consistent. South Africa has international trade agreements, as we know, with the EU, USA, and SADC. And obviously, critical to any automotive OEM decision, as Martina was saying, is that the opportunity that the African continent offers for automotive, Dave, you mentioned 5 million, without doubt, it's the last frontier in automotive. And it's very important, I think, in this journey as Africa moves towards realizing that potential, that from a Africa country position, that they all participate in that value chain one way or the other. And if we don't utilize and the benefits of the Continental Free Trade Agreement and automotive strategy within it, we will not capitalize on the opportunity that this 5 million TRV potentially offers. And then obviously the important factor is that in South Africa you have a very internationally connected trade network. And South Africa today is roughly 40% of the total Africa new vehicle market. But when we look forward to the number Dave was mentioning at 5 million, the real growth is going to come in the rest of Africa, particularly in sub-Sahara. We see a lot of opportunity to grow. And for us, our operations would be very much focused looking at not only supplying the South African market, but very importantly the African market and potentially the Middle East market as well. So if we look at all the points that were covered in the automotive strategy document, certainly I think South Africa ticks a lot of those boxes, and a very important part for us in our vision to become a very active player on the African continent as well. So thank you.
Yeah. Thanks, Mike. And an auto policy we've already mentioned is absolutely key, and it's more than just incentives, it's the whole ecosystem that you actually are developing and implementing. And right now in Africa we have 3 new policies going in, and they're going in Ghana, Cote d'Ivoire and Egypt as we speak. Other policies have been developed, ready to, and they will be presented to parliaments for approval, both in Kenya and Nigeria. And many other countries are engaging with regards to their role in the value chain. So there's really a lot of activity now than there's ever been before. So it's an exciting space. And moving on to Gainmore, who's right in the action, AfRexim Bank has committed significant funds, $1 billion over 5 years, to development of the industry from the mineral beneficiation right through to manufacture and distribution. And maybe, Gainmore, if you could just share with us the progress in utilization of these funds. It's a significant commitment and very important for this industry.
Okay, thank you very much, Dave, and greetings to everybody from the African Export-Import Bank. And it's always a pleasure to participate in this important discussion on automotive, because at AfRexim Bank, we believe that it is sectors like this, the automotive sector, that will actually help to catalyze industrialization in the continent. And we believe that we are on a good track. I look back several years ago when AfRexim Bank developed its own automotive strategy, working with AAM and UBU. I think we were always looking at the partnerships that we needed to drive this. We needed the partnership from industry. We needed the partnership from AfCFTA Secretariat. I'm happy to note that through this partnership, we've now managed to put in place a continental automotive strategy. Why is this important? Because this will actually make it easier for us to come in from a financing angle. And when we did an analysis of all the key challenges in the automotive industry, we agree with the issues that have been highlighted by the previous speakers. You need the policy to be right, and that was actually highlighted in our strategy as well as in the continental strategy. You also need a regional value chain approach to the development of the auto industry, and we've done some fantastic work in that area. We're working with AAM and AfCFTA Secretariat. And the other third piece, which was also missing, is the financing that is required now to support those value chains. And at AfRexim Bank, some of you may recall that we actually announced a global automotive facility of about 1 billion to support the automotive industry. And I'm glad that we've actually made progress in terms of trying to implement this facility. We've disbursed more than $100 million US to support the automotive industry in Egypt through an on-lending arrangement with commercial banks in Egypt. And we are also now working with Ghana to actually provide probably between 100 million to 200 million through local banks to support the automotive industry. We are looking at the assembly, component manufacturing, which has been mentioned, which I think has a lot of potential. We are also looking at distributor financing, which is also critical, and there have been a lot of exciting discussions on vehicle asset financing. We are actually trying to look at innovative ways of partnering with local financial institutions, partnering with the OEMs to find a way of actually providing affordable financing that will actually help us to realize that dream of having 5 million vehicles by 2035. That can only happen if we actually have got access to cheap and affordable financing. At AfrEximbank, we are willing to do whatever it takes to ensure that the continent has affordable financing, and we'll be expecting also the OEMs to play ball as well as the other partners at the local level. I think what is actually key from our experience based on the interactions we had with the industry, it will be easier for us to come in and finance the component manufacturers as long as they are linked to OEMs. We can easily come in and provide support. We can also support local financial institutions. We can on-lend to them and have an agreement that they should also be able to on-lend to their customers at affordable rates. And we are also discussing with other big DFIs to actually come up with a big facility in the long term that will provide patient capital in this space, both on the equity side as well as on the debt financing. And we are also working with the United Nations Economic Commission for Africa and other partners actually to support the development of the battery electric vehicle value chain in DRC and Zambia. AfrEximbank has already committed significant resources, more than $1 million, to do the feasibility studies, and it has been going very well. The analysis that came out of that even shocked us. We actually noticed that DRC and Zambia will be very competitive in terms of actually producing not only precursors, but also they can even produce batteries. And the importance of the value chain approach is critical. We know DRC and Zambia are endowed with a number of minerals. I mean, all the way from 70% world cobalt reserves, lithium, etc. If you really look at the lithium-ion battery value chain, you will be essentially, be moving from an industry that is about 11 billion if you just do the mining only. But if you move from mining now to metal processing, the value jumps to about 44 billion. Then if you move from there to precursor, you are now looking at about 371 billion. Then if you move to the manufacturing of electric vehicles, you are now looking at an industry that is valued at more than 46 trillion US dollars by year 2046. So there are massive opportunities, and the bank is ready to finance these kind of interventions. It will support also our green initiatives, and climate change will also be dealt with. So these are some of the financial support we've been providing. I think Temba mentioned the value chain study that we've just concluded working with AAAM and the AfCFTA Secretariat. There are enormous opportunities we see there, but I think we need to sit down with industry to see how best we can actually finance those small component manufacturers. It could be the guys who are trying to set up a tire manufacturing plant. It could be somebody trying to do some shock absorbers. So these are the small players that we need to support, and we need a partnership arrangement with OEMs for us to be able to actually provide cheap and affordable financing. There is more that we've done in terms of financing. Due to time, I will not go into it, but I understand there is also work that has gone on the development of policies at the national level. For example, the Nigeria policy On auto, we actually financed that, and many others, Cote d'Ivoire. So we are fully committed to continue working with the AfCFTA Secretariat, AAM, all the OEMs to provide the financing that is needed. Thank you, Dave.
Yeah, thanks, Gainmore, and finding solutions to the smaller investments and bringing people into mobility is key, and it's something that I know AfreximBank and various players are working hard at. I want to move on to a slightly different topic now, Martina, and that is fuel. And this is a passion of yours, and you really brought it to the fore. Maybe just give us 2 minutes on fuel and the importance of fuel quality to the development of the AfCFTA.
Yeah, thanks for bringing it up here. So it made it onto a panel now. I'm very happy, have been very passionate about that. So it's a very technical topic, but fortunately for you in the audience, I'm also not a technical person, so I'll try to explain what this is about. In Africa, one thing, and that is something we'll subsequent probably to the AfCFTA need to address as industries, is that there is for many countries a lack of regulation in terms of emission standards, in terms of safety standards, in terms of roadworthiness standards, and so on and so forth. And if you really want to enable new car industry, you'll need to a certain extent standardize or regulate emission levels and so on and so forth. But beyond the regulation, which is probably a good thing in the future also when it comes then to electric vehicles, the fuel quality in Africa, it's not regulated anywhere, but the fuel quality in Africa in many countries is we call it bad fuel. High iron levels, high manganese levels, high sulfur levels, which leads to, in many countries, that you can't run modern engine technology. So you can't, for example, run engines with catalytic converters, which many countries already consider as being a standard, to reduce emissions. So it's and because of that, a strong plea of Volkswagen, but fortunately also others join us in that journey, is for the countries to import better fuel. To import better fuel, to clean the system in the countries, to clean the pipelines, to allow that better fuel to be not contaminated again than once being imported, and if you've got own refineries, to potentially invest in upgrading the refineries to be able to produce better fuel. What would that do? It would enable many of us manufacturers to come with more models, to come with engines. So Volkswagen, for example, hardly invest more money in, like, as we call it, bad fuel engines, because it really doesn't, there is not many countries left. But it would also definitely be a huge step towards reducing emissions. So instead of many of us waiting to immediately leapfrog into electric vehicles, which most likely also will not happen in Africa, given the capacity, the electricity capacity or the source of power, instead of leapfrogging immediately into electric, we could reduce emissions significantly by using better fuels and be enabling better engine technologies to come in the countries. Not only emissions to prevent climate change, but also, or not only CO2 emissions, but also NOx emissions. So it's mutual beneficial also for the country and the planet's health, if I can put it like that, to work towards this better fuel, and it would enable us as manufacturers or also as importers to bring better engines and better fuel. And I want to, because we are in Rwanda, I want to give the example of Rwanda, so of very focused political intervention. We have had the opportunity to meet His Excellency President Kagame last year, June, and we were tabling the issue of fuel quality in Rwanda, which was by then an EU3 emission, kind of comparing to EU3 emission, which is which is not great. And he took it upon himself and instructed the team in Rwanda to improve that. And not only half a year later, so beginning of this year, we were already able, or Rwanda installed a clean fuel depot, and now more and more petrol stations coming to the clean fuel party. Opening up, and there's a lot of traffic, as I was informed, in these clean fuel petrol stations. So if there's, as always, also in our industry, if there is a strong political will to make it happen, it can happen. And Rwanda was high speed, and we were able to immediately release 2 new models to Rwanda because of that. So that's really a cool story, and I can only encourage other countries to please support our journey with cleaner fuels.
Yeah. And there is an active working group within AAAM handling fuels and emissions, dealing with a number of countries. So this really has focus, because it's a limiting factor on many aspects. Chirek, moving on to you, I want to get your views on affordable mobility solutions. So if you could, in 3 minutes, share with us, your thoughts on that, because this is vital to industrialization.
Exactly. Thanks, Dave, for opening this topic. So how to define the term affordability is very important. So in Hyundai, for example, though we have a wide range of mobility advanced solutions from air to ground, but we are always busy trying to capture what is the real need in each market, not just offering the same car here and there. So our engineers and market researchers are always busy to capture the market needs and how we customize our products. But also we need to be careful about something. Affordability doesn't mean cheap, it means the value and meeting the requirements of the market for the daily life. So we are always also busy how we balance our approach as a technological company leading in this era. So we need also to make sure keeping our customer up to speed with the global technology. So how to define the word affordability? As I said, this is a approach from Hyundai. On the other side, the common approach we all agree is the localization. So we need to localize products. The straightforward answer. On the other side also, it's not limited to the products, the service as well. Let me say it loudly, like for the customer, there is a bit of anxiety always visiting the official service centers. Why? Always expecting I will pay more and I don't know how much expensive it is. We need also to be realistic in our service offers. This is also important because the future is coming with more service and software in the cars and so on, more than products. So this is also another point I wanted to highlight. Otherwise, if we don't focus on the affordability, we will remain a dumping yard of 40% of the used cars, of the world used cars. And of course, there is a lot of effort thanks to the AAAM and the automotive leaders negotiating a lot of agreements to stop this flow. But all of us as OEMs need to focus on the affordability and fight the used car invasion. For a reason, it's not about the competitiveness of the used cars against the new cars. It's more about also the environmental factors. Those cars are coming without any compliance to the environmental requirements and so on. So it's really a serious topic.
Yeah, thank you. And I just want to make a comment, Temba. At the last task force meeting, we proposed to extend the continental strategy to include motorcycles and micromobility. So we're looking at mobility solutions from an affordability perspective, from four-wheelers right through. So it's a key aspect. Thank you for those interesting insights. Temba, the one aspect that's very important is we want to increase trade in Africa from 17% to over 50%. But we've got some challenges cross-border, and we've heard a number of them that have been raised. And you as a secretariat have got a specific working group or directive under Demita. Would you just share just what she's looking at with the team?
Unfortunately, or fortunately, she's here, and I don't want to misrepresent her. But the point is, in our prioritization of sectors, so we had agro-processing, autos, pharma, and we included transport and logistics for the very simple reason that other than the cost that we actually paying, it's also undermining our capacity to actually support productive sectors, and that is why we had to look at it as well. So the Secretariat, obviously, through the Directorate of Customs and Trade Facilitation, is to then look at the areas at which the Secretariat can be able to lead interventions, and one of those, obviously, being how we modernize customs procedures or processes. Because industry will continue to say the time that they spend at border crossings, it's money. And we should therefore be able to find ways of leveraging on modern technology to be able to make that simple. Whilst we continue to engage with our colleagues, let's say AFDB and other partners to actually help us invest in trade enabling infrastructure that could be related to rail or roads, but that at areas where we are able to coordinate our partners and take a first leading role, we'll then be able to. So the colleagues and a number of partners are therefore, through that working group, ensuring that we can be able to firstly, looking at the corridors that we have prioritized as part of this pilot, so that it's North-South, Lobito corridor, Abidjan, Lagos corridor, so that we can then be able to, through those pilots, make a case on why it's important that our partners, Afrexim Bank had actually even supported the syndicated financing that helped Bay Bridge to modernize some of the processes that are there, and we think the more we invest in that, the more we build a business case on why we should therefore be able to pursue this work in a manner that kind of like gives confidence to the industry that a lot is being done to try and reduce the cost of communication. I mean, the cost of transport and logistics. There was a time we did a study a few years ago which looked at how much it costs to transport a car from South Africa to Ghana versus Europe. And it's costing 4 times more to transport that car from South Africa to Ghana. And the point is, unless we are able to help reduce that cost, we will continue to struggle to support intra-Africa trade. And it's even at the level of the components, because we are saying we should be able to leverage on accumulation rule provided for in the agreement to then drive this process of supporting components manufacturing that could then be traded to support the manufacturing hubs. And I think we should be able to at least make a positive impact through this type of initiatives and pilots. And as I said, engage with colleagues who are involved in infrastructure, including out and EPAT, to help us drive this process of investments in trade enabling infrastructure in the continent. Yeah.
It's a very important initiative. We need efficient intra-Africa trade. So I'd really wish the team all the best. It's critical.
Yeah.
So thank you.
Maybe if because I'm looking at time, there's an issue with Martina actually raised around the rules of origin. I think I do want to confirm that obviously even in between this, the Council of Ministers meeting, Secretary General continues to engage with the industry, and with this last meeting having been, I think, on the 23rd of August, just to try to find ways of supporting both obviously the state parties and industry to engage in a manner that allows us to probably utilize the upcoming meeting on the 9th and 10th of November of the Council of Ministers of Trade to try and finalize or conclude on rules of origin negotiations, because I think even the point that was being made by Gainmore, our ability to utilize that package also lies on us being able to conclude on those rules of origin that in a way should be able to help us enable industrialization, regional value chains in the continent. Yeah. Thanks.
Yeah, thank you. I want to just ask Mike to reflect on the next issue, and that is ultimately the vision is that used vehicles come from vehicles manufactured in Africa. Now, there's a transition required there because it's a big business to many stakeholders, but we just need to do it sensibly and bring people into a new value chain while still having affordable vehicles. And it's a long-term vision, but it's key to get there. So Mike, what do you think is important that we do to enable that transition effectively? Maybe you just want to reflect on the top two or three issues.
Dave, I think very important. I think if we look at it right now, today, you look at the overall market, the overall Africa market, the three countries that make up 70% of the market, which is Egypt, Morocco, South Africa, have a very strong auto policy in place that regulates, in fact bans used vehicles. And they've been able to do that because they've created their own ecosystem within those countries for used vehicles. So the phasing out of used vehicles is critical to achieve that ecosystem of the TRV of 5 million. But very importantly, and points were made relative to the need from an environmental point of view, etc. But probably the most important thing is we must remember that a large number of those used vehicles are also the answer to affordable mobility. So very important that we also address in this move towards creating this ecosystem for automotive in Africa, that we also address the issue of affordability. And that affordability and that mobility, affordable mobility does range, as you said, from two-wheelers all the way up. So the only way that you're going to completely eliminate the volume of used vehicles coming into the market is going to be through regulation in country Pacific, the ability to create affordable solutions for people to own mobility mechanisms of mobility, whether it's two-wheeler, four-wheeler, or whatever, and that we actually create the ecosystem within each individual country. So if one looks at it, it's no good trying to say to create a new vehicle market in the industry and we allow it to be flooded with used. We need the policy and we need to ensure that we can create access to people to have the affordable mobility to replace the current used vehicles that are coming in.
Okay. It's a key issue. It's coming up a number of times. Thank you, Mike. We are certainly running out of time, but Gainmore, I want to give you a chance. I was going to ask you about a payment and settlement system, but it got a lot of coverage today here. So I'm going to move on from that and give you 2 minutes to talk about the IATF. It's important from an automotive perspective, but from an African perspective. Tell us what you have installed, please.
Thank you very much, Dave. I think I want to start by applauding the partnership that we have with AAM and the AfCFTA Secretariat that actually enabled us to launch the Africa Automotive Show at IATF. And some of you are fully aware that we run the IATF every 2 years. It's a biannual event. The next edition is taking place in Algeria from 4 to 10 September in 2025. We have had fantastic results from the previous IATF editions.
We lost Gainmore.
And all the key players. I think Algeria is a country that offers enormous opportunities. You heard from Hyundai, they want now to open up to the rest of Africa and facilitate intra-African trade under the AfCFTA, building on the rules of origin that we've been negotiating, building on an environment that is established by the AfCFTA. So IATF, in short, is actually a vehicle that we're going to use to bridge the gap in terms of market information. It is a vehicle that we will use to support the implementation of the AfCFTA. It's actually the marketplace for the AfCFTA. So we look forward to seeing all of you. We'll have a fantastic automotive show, which consists of a conference. There'll be exhibitions. So OEMs, component manufacturers can take stands or pavilions, and then there'll be excellent opportunities for B2B, B2G engagements, and we look forward to seeing all of you in Algeria. Thank you very much.
Thanks, Gaynor. So we really are coming to the end, but I'm going to give the opportunity for 2 questions. Please, if there's any hands up. There's a question there. You got a microphone? Hello. Is a question there?
Dave, thank you very much for articulate coordination. But something is baffling me. None of these manufacturers consider the issue of gas flaring by countries like Nigeria and Gabon that has the capacity to produce a lot of gas, and are talking about CNG vehicles that utilizes CNG instead of PMS. That has dual advantage. In the first place, using CNG, you save more money than using PMS. And it addresses the climate factor in a way, if you know it. It addresses the climate factor because it does not have emission like the PMS does. And some countries in the Middle East too are looking at that direction. But it's like all the discussants are focused on electric vehicles and nothing more. I don't know if they have anything like producing CNG vehicles in their long plan. Thank you very much.
I can only answer on behalf of Volkswagen. We had CNG in the past, and we will not get back to CNG in the future. So the one thing is we run our combustion engines, and the next, like when it really comes to a future technology in the passenger car space, that's battery electric vehicles. We have to focus our investment, and that is focused on the future in terms of battery electric vehicles and on the present in terms of running the combustion engine. So there will be no CNG from Volkswagen.
So I've experienced this question in a number of countries where there's plenty CNG, and I believe that in a country one can convert, but I don't see, in my view, I don't see mass production in CNG for export. Yeah. Rob?
No, thanks. I just wanted to ask and to get some clarity from what I'm hearing. I think the point was made by Martine, and I think she made a good point, that Africa's ability to transition to electric vehicles is going to be constrained by the availability of electric energy, and therefore it means it's not going to happen at the rate and pace that it's going to happen in the global north. I don't know whether we got enough understanding of that in all the climate change discussions, but I think it's a very important point. Does this mean that there is now a change in investment strategy by the OEMs? Because a number of countries, I know South Africa, a lot of the production is for export into Europe and other places. That has to be, after 2035, it has to be electric vehicles or new energy vehicles. But you're saying that Africa will be using non-new energy vehicles for a longer period of time. And are the investments now then being produced for the African market, and we're going to be having petrol-driven vehicles, more efficient in terms of fuel and all of that, for a longer period of time? And if that is the case, what is the sort of ballpark year? We know very well what it is for Europe, 2035, but what is it for, what is the sort of general vision for Africa? How long would that transition take? How long is there going to be a a continuation of production of petrol-driven vehicles on the African continent? Because it strikes me that there's a huge opportunity, because a number of the global north countries won't be producing those anymore. So that's my question. Thanks.
You have a go, and then you. Tariq, go for it, Tariq.
Yeah, sure. So thanks for the question. This is a very important one, because this is maybe most of the OEMs now are busy trying to answer this question. So yes, the green energy or the electric vehicles and the other solutions were already adopted in other markets, and we need to learn from this example. Now we see globally a declining in the electric vehicle sales, for example. Then we need to ask ourselves very important question. What is the right solution for the future? Is it electric vehicles? Is it hybrid again? And which type of hybrid is it? Or other energy solution like hydrogen? Or still we need to keep the ICE balance into the equation? So at the moment, I guess everyone is busy on that with several solutions on the table, and the ICE for Africa is good. We learn from the other regions' practice, and we just implement the right equation.
I kind of agree to your inherent judgment. So I see Africa, not fully, but the majority, no. Why I've contextualized in the beginning, for me it's Africa for Africa, is that my plants in Africa are not geared up for European production beyond 2035 anymore. So that's why I don't get an electric vehicle by accident, because I'm exporting to Europe, and then I can also sell it in any domestic or in any African market. So Africa for me means we'll really continue for long with a high amount of combustion engine vehicles, probably also combustion engine vehicles with hybrid technology, which still is a combustion engine vehicle. My take is minimum until 2040. In our company, we are in a similar situation with Latin America, where the transition is also not going as quickly as it is supposed to go in Europe. So Latin America is also a good development partner in terms of models, combustion engine-based and engines. Same India, where you see, I think, both moving quickly. So India moving faster into EVs, but also having a huge amount of combustion engines still to come. So I'll see like a global South partnership in terms of combustion engine plus hybrid technology for the future. There is, and I like that example, because if I would for one day replace my South African Volkswagen fleet with electric vehicles, if they were available, I would increase emissions by approximately 30%, because we have highly efficient combustion engines, or sometimes with hybrids. And now you move to a zero-emission battery electric vehicle, fine, but then you have got 85% source of power is coal. So if it's really about protecting climate change, then battery electric vehicles, large scale, quickly in Africa is not the right thing, because you've got many countries like that. Plus, you don't have sufficient electricity supply. So if it's really about reducing the CO2 emissions and reducing the effect of climate change, then join us in the fuel journey, in the fuel quality journey, to bring good combustion engine technology, plus enable hybrid technology in as many countries as possible, because that really brings down CO2 emissions, larger scale. And we will have niches for electric vehicles, by the way. For example, Mauritius has an EV policy, fantastic. Cape Verde has an electric vehicle policy. Kenya is thinking of an electric vehicle policy. Ethiopia has one. But there's many who don't, and many who have still a lot of coal to be burned for the electricity. So a holistic approach to me is hybrid plus ICE with good fuel and efficient engines.
Temba?
Thanks, David. I think just a quick one, just to mention that the Council of Ministers mandated what we call Automotive Task Force, which is responsible for the implementation of the strategy, to consider a policy brief on aspects of new energy vehicles. So new energy vehicles, because we would want to remain technology neutral on the discussions. Where there's potential investment of whatever, we will be able to support it. But I think what we all agree on is that Africa should not be a dumping ground for ICEs beyond 2035. And whatever we do now would also be able to ensure that come that time we are actually ready to be able to move with the rest of the world, but that we should do anything possible to be able to ensure that we don't become that dumping ground of ICEs, cars that will probably be banned wherever across the globe. Thank you very much.
Thanks. Mike, any comment from an OEM perspective?
I think both Martina and all the participants have summarized it very well, but I think one point that Temba makes, we must be very careful that we also don't become a dumping ground for old technology, electric vehicles, as technology moves forward. And secondly, the other key element is that the definition of new energy vehicles, as everyone said, is not necessarily just BEV, but there's a journey towards, and Africa can play a significant contribution and utilization of the technologies such as hybrid and plug-in hybrid as well.
Yeah.
Thank you.
Yeah, thanks, Mike. And certain countries have got natural resources, others don't. So I think you'll see a powertrain transition at different paces across different segments. And I'm really encouraged in East Africa is leading the two-wheeler electric. Some really incredible or clever models of battery swapping and I think there's a big opportunity there to go for it in public transport. So you'll see a different pace of transition. Right, I got given a bit of extension of time. Is there one more question before I wrap up?
There's one, Mike.
Yeah. Okay, we got to that one. Any of these?
Thank you very much for the great conversation. It was very interesting. My question is, well, in short, I want to have the conclusion at this point in your, well, maybe the panelists' personal perspective, how the AfCFTA will change the supply chain of the, well, the automobile supply chain in African continent, if you can just summarize it in one word or one sentence. So maybe it would be a complicated one.
I'm going to ask Martina that one because I see it from a scale perspective and being able to maybe localize product we weren't going to localize before. Do you want to talk about the whole value chain?
Yeah, so one aspect I think Temba has mentioned, the supply and the entire value chain is a huge opportunity also for mapping out the AfCFTA, because not every country, Volkswagen will not build 54 plants in Africa. That might be a disappointment now, but we'll need to find other value chain participation for countries, and that is why also the rules of origin and the 40% are so important, that we get a decent localization or local content, and that we get many countries to participate. The automotive industry is probably the biggest economy of scale. So for us, it's all about volume. Our suppliers don't come if we build less than 15,000 units per year, one model. And it kind of comes then again to automotive policies to enable new car growth. To get to these volumes, to get to our supplier infrastructure to come and localize, we'll need the automotive policies, we'll need the switch from an import used car market to an in Africa generated used car market from new cars manufactured in a large scale to then become used cars. We can already have tell a small success story, for example, in Rwanda, where exactly this is happening. Plus, of course, also the factor of the raw materials and the raw material beneficiation, which can play a big role, not only mining and then shipping them elsewhere to be processed or whatever, but also establish this industry in countries for them also to play a role in the local African value chain. So that's more than one sentence, that's more than one word. But if we get it right, that will be a fantastic and tremendous change from raw material beneficiation to new car manufacturing through the entire value chain, and many countries can participate.
Thanks, Martina. Now, just imagine what we can do with 5 million vehicles. Yeah, in terms of sourcing. Africa generally hasn't been good at manufacturing powertrains. That may change. So there's a lot of opportunity with that scale and having complementarity and focus. I do want to wrap up now, and I thank you for the questions. I'm glad we brought the new energy vehicles into the discussion. I just want to emphasize, and I cannot overemphasize this, the importance of collaboration on the continent. It's absolutely critical, and it's at a number of levels. And we really encourage as AAAM the private sector to collaborate in country. It's important there's a single voice, and that was the message when we visited Algeria recently. And there are private sectors which are getting strong, and government wants to talk to one group and get one opinion, because otherwise you're confused, and it's so important. We get the private sectors together. We were recently in Tunisia, and a number of country private sectors came along to collaborate. It's private sector that actually does business. The government sets the environment, and I cannot emphasize that enough. And it also comes out in some of the regional discussions. It's critical that SACU, EAC, ECOWAS, you get these regions collaborating. You have countries that are importing used vehicles and they're sitting in a customs union, but they're not participating in the value chain, and you understand, wow, we've got to solve those issues. We've got to get the countries into the value chain. And who does what? We need the scale, and regional collaboration is critical. And I'll give two other small examples, and the one it popped up with Tarek. You have Algeria manufacturing vehicles now. You've got Tunisia that's an expert in component making. There's a relationship to be had there now, and they sit on a free trade agreement today. You have Cote d'Ivoire and you've got Ghana. They're neighbors. Cote d'Ivoire is implementing a commercial vehicle policy today. Ghana is implementing a light vehicle policy. I just got a message before I got on the stage that Ghana is asking about this because the Cote d'Ivoire government's going to visit them. That's a good thing. The discussion is going, and we've really got to think about this collaboration, and it makes a huge difference. Obviously then rolling up into the AfCFTA. But if you just look at what is going to drive demand, vehicle demand, mobility demand, two-wheeler demand, that will enable the value chains to be developed. The first is the effective implementation of the AfCFTA, and within that, the Continental Automotive Strategy. I've mentioned a number of countries that are rolling out, others are considering. There's so much activity, and together that will bring serious demand. But the other topic that's touched on is mineral transformation. I'll give you an example on copper today. Victoria's working on a project now, is that all wire harnesses made in Africa, and there's 120,000 tons of copper used in wire that's in harness manufactured today. And a lot of it's up in North Africa because it actually ships across the Med. All that copper is imported into Africa in wire form. Meanwhile, we've got all the raw materials, but we don't transform it. No one's transforming it to a pure enough stage to enable the rod to be drawn from the rod made in Africa. We're dealing with that. But you also have the electric vehicle battery beneficiation opportunity. That's a huge opportunity for Africa. And lastly, what we've been speaking about for a while, is the emerging middle class, urbanization. 2050, population will double in Africa. That will create demand. So we really are sitting on the last frontier in automotive. There's a massive opportunity in Africa. We've shared some of the numbers today, but this won't happen by chance. I loved the words yesterday, fortune favors the brave, which came up there. We need to be deliberate and work and collaborate as the private and the public sector together. We need strong leadership here. We need a strong rule of origin, otherwise we're not going to industrialize. And this really is going to take good leadership, and the momentum is picking up. So there's a huge opportunity in automotive. We need inclusivity, and it's a great journey to be on. So thank you very much to the panelists for joining here and the opportunity to discuss this, and we'd welcome any questions offline or tonight. Thank you.
Thank you.
very much. Let's put our hands together once again for the session. Thank you, our moderator. Thank you, the panelists. Distinguished ladies and gentlemen, the location for the dinner gala, once more, is Intare Conference Center. Those of you who would want to go by yourselves without joining the bus that we're going with. Intare Conference Center, INTARE Conference Center. You may want to go by yourself. Otherwise, at 6:30, please go change up. At 6:30, we all meet here, Kigali Convention Center or Mbumwe Hotel. Yes, please, outside. We all converge there. We join the bus and we go together. Thank you.